Good morning, May 23rd. We're going to be streaming stocks, options, futures, looking at technical analysis today, watching the SPY, GME, barbecue, rival, whatever runners we have getting set up here. Hi, Vikage. Good morning to you. Morning, Kitty. You are not first, sir. Hi, Vikage is first. Good morning, Justin. Good morning, Buzzin. Hey, blank checks. Go? Don't know. Have news this morning? Anything? GME down 0.78%. Eyes down 0.3%. Seeing barbecue is pretty much flat. Arrivals down, I think, 10%. Services PMI we have at 9:45, and Fed President Lori Logan speaks at 9. Morning Access. Morning Dennis. Wow, Pac West up another 15.5%. What the heck? No new news. I suppose it was on there yesterday. Interesting. Yeah, I suppose I could have gotten some more exposure. Cash grade puts have been nice, but making pretty big moves. Let's see. Ball's up 3.5. That is neat. Rival kind of bull flagging. Might pick up some more of this. End up dumping it into barbecue. Rival did actually make more gains, higher gains than barbecue yesterday, so capital allocation was a win for me yesterday. You know, Rival and barbecue. Now GME. Yeah. I think it's due for a big rip. Today. I mean, I'm not taking like 30 off the table. I don't think so. I'm extremely biased though. I opened a bunch of weeklies yesterday. Morning, Sweet Lou. Los Angeles is the U.S. city that has experienced the most retail theft. Redfin reports home price growth during pandemic was most local since the Great Recession. Most local? Don't know what that means. There's a 50% decline in software development job postings compared to a year ago. Lordstown is doing a reverse split. 1 for 15. I think it's down 10% on that. China's Premier Li says we're willing to expand trade ties with Russia. And here's another tweet. The AI hype has increased employment of software engineers. Just read there was a 50% decline. Oh, software development. Gary Gensler said a U.S. default could cause deep and lasting damage to markets. ChatGPT has reportedly largely powered contractors making $15 an hour, who are helping to generate more training data and labeling existing data to improve the model's performance. Confirm on the jobs posting. All right. Flip charts. I have not done that. Some people, I know Jay Hart shares that in Discord pretty often. He flips them because he can only look at bullish stuff. So if he wants to take a short position, he just flips it upside down. SPY bouncing here pre-market, kind of a little double bottom. At or 1750 area. Base did. It's up 2.25 pre-market. The pre-market. MCLD. I want to recognize on pre-market. I'm going to be looking probably to pick up some barbecue shares at open. Morning, Robin Lee. Low earners in the U.S. have seen the fastest wage growth. That gas is down 1.6. Waymo and Uber partner to bring Waymo's autonomous driving technology to the Uber platform. Oh, that's a pretty big deal. That's like the main self-driving system I think used right now in California. Uber's had quite a earnings rally. I just broke through the low there. Pre-market. Remote work can be hazardous to your career, says IBM CEO. Ishikari says if inflation stays high, it may need to keep rates higher. Some startups are selling at 80% discounts due to the collapse in valuations across the tech industry. Morning, Keenan. Happy day. You too, Aware. The XAI is up 3% pre-market. MMAT's up 2.3. What's IEP doing? IEP just flat, so broke the support levels there. A lot of support around this 25 to 27 range, so I think it should find a bottom somewhere in here. The world's largest cryptocurrency exchange, Binance, commingled customer funds with company revenue in 2020 and 2021 in breach of U.S. financial rules that require customer money to be kept separate. New York City is estimated to be spending about $8 million a day to house the 37,500 asylum seekers currently in shelters. $1 million a day. US May Philly Fed non-manufacturing index negative 16. Because that came out at 8:30. We were supposed to get services PMI is at 9:45. 30-year yield rises to 4% for first time since March. %73% of millennials are living paycheck to paycheck in March. SPY flushing there a bit. We're 1720. We're 1715. Apple announces multi-billion-dollar deal with Broadcom for components made in the USA. Here's your pump on Broadcom from that. European Union and the United States are set to step up cooperation on artificial intelligence with a view to establishing minimum standards before legislation enters force. Morning, Molava. Lords, why are you crying? Hi, Fleshy. 416.91. Broke the lows from yesterday too. Morning, Dawn. There. Oh, rival bounced up. I kind of want a rival, but I don't know. I mean, the chart looks really nice on this thing still. The flow is tight. Keep an eye on it. Entry for a rival, probably. I want me to put it all in barbecue. Yeah, actually I did happen to catch it yesterday. He was talking about on the RSI, which is kind of interesting. Yeah, I mean, I've noticed I've not traded the RSI like that, where you're looking at kind of wedge breakouts on it. But yeah, you can start to see patterns on the RSI also. I mean, pretty clear here. So he's kind of wedging this right here in a breakout. Yeah. Yeah, I mean, I think it has merit. All these have wedges that break out. You know, once it kind of breaks that, you can see the trend change on the RSI. So, yeah, it depends on where you'd put it. This is, let's see, your weeklies. Tick up on the RSI is definitely good. We pulled that RSI divergence. To find the bottom. I mean, really just need any green days and that would have been triggered. Got it. With that inverted head and shoulders. But yeah, I think that's merit. As far as like the cycles that it would get on NASDAQ, I'm not sure if those are still going to happen on OTC. Yeah, that's where I'm not too confident of. But just simply the chart still looks bullish. So whether we get like a full cycle type move or just a up, or if it's not a cycle and it's just shorts closing or someone buying in, I don't know. But yeah, chart looks good. I could see a gap fill 30 cents here. Maybe even today. RSI is actually still really low. The daily, it's only 43, which is crazy. Crypto and CEX. Cracking use signature bank. $0.30. Yeah. Not today, I think this week at least. Just see like what's the percent on that. It's a 40% gain, so what did we have yesterday? Like 20%? 40 to 45%. Yeah, we don't really know. I mean, no stocks can move big in it. There's no limit halts, which is nice, but I haven't just watched OTC stocks enough. That said, when volume pushes in on barbecue, like we saw yesterday, it just trades much more. You know, it's not gapping around, of course, because there's more liquidity, more volume. So it's trading much smoother and it's easier to chart and read. When it's like barcoding like this, it's like just an inverted head and shoulders, and it's just some weird barcode. Or sorry, head and shoulders. But once you have some volume, it's a smoother chart. It's much easier to see. So I think volume be the big indicator, and yeah, might not be as crazy. Might look similar to Nasdaq just without halts. Moonshot came in here and said we're headed to 50. Yep. And look at all the shares we've accumulated below 30. I never thought I'd have this many shares. Ridiculous. And I don't even have that many right now. No, I like your copy, man. He's funny. I don't want to be replacing anybody. He does all the pretty fractals and all that stuff. I like to keep my TA very simple. I'm hoping I might be kind of red today, but on the bounces, I'm hoping GME gets a crazy push from it. Kind of like we saw yesterday, like just good relative strength. We're still in SLD, and I think that's what we're seeing yesterday. That's what got me bullish for this week. Today being Tuesday, even though I don't think there was much options in the money last week, give us much T+2. But I could be wrong. We did have quite a move up coming into Friday. See, yes, we closed at 22, but really not. This wasn't that big of a move. And the liquidity, like the volume on the options on GME sucks still. Not happening. Yeah, no, that's a good idea, Robin. Definitely a good idea. You tomorrow. Alright, I've got 3 minutes or so to open. I'm gonna be looking at Arrival, GME, Barbecue, Spy, whatever else. I'm not really checking pre-market stuff. My list at least. We have data coming out at 9:45, which probably will give some volatility to Spy. Services manufacturing, PMI, and then US manufacturing PMI. And then tomorrow we have Waller and the FOMC. Yeah, no, the cycle, yeah, the cycle. If it happens at OTC, I think yeah, we're coming up to it. I think he's right. And I didn't really track barbecue much prior to a couple months ago, and we just quickly looked at it, and I said, like maybe a month ago, I was like, well, there's not a catalyst. We're gonna wait for probably the cycle, which would be like June or maybe even July, maybe June. I don't know, somewhere in there. Just counting the days. I didn't want to think that because that was back in like April. But yeah, here we are now, end of May, and it's seeming like it's turning up. Okay, 2.5 minutes. Rival's not down much for having a 35% run yesterday. And this chart still looks very nice. Full float, probably got some attention from individuals after yesterday's move. Shutterstock has bought Giphy from Meta for $53 million in cash. Huh. Is it Jiffy? Maybe it's Jiffy. I might not even look at SPY right away. I'm kind of just have those shorts in the futures, and I'll just hold them. Keep holding them. Okay, market's about to open. You shouldn't get a ding ding. There should be no ding ding. There it is, market's open. Barbecue's opening flat. Rivals 2% down. Actually, if you're watching GME, you want to have very short dated options on. Give it like 30 minutes to an hour if we don't start to see some movement. Might cut. Rival moving up. Barbecue plus 2%. 2125. Max is up 5%. Down 3. GME kind of selling off. It's down 1.9. I could have waited to buy those contracts. You don't know though. Sometimes you don't get this flush. You're down 2.3. We've got 23.50 or so. Kind of a little support level from yesterday. If GME bounced on something, or if I should be cutting these. Is pretty weak, down 0.45. Tuesday though, so SLD's still on. You're at T+2 from OPEX. There's probably not much exposure. Wouldn't expect to sell off on GME really until Thursday or Friday. Barbecue red, 2060. Good flat, 2080. Little bounce there. Rival down 6. That Yaz is too loud. Barbecue, maybe making it to VWAP. 2060, VWAP's at 2015. No ding ding. Sorry, did you guys want the ding ding? I mean, we can get the morning ding ding. I bounced in there, but it broke through all the supports from last couple days. Got what, about 15 minutes till the data. There's a gap there now in SPY. But that RSI divergence probably will stick. Barbecue down 3.5. GME down 2.25. Barbecue just below VWAP now. 2008. I want to pick some up here. Still like that 1925. I don't know if it's gonna get there though. Looks like it's in a nice bull flag. 2009. This might be the low, honestly. Me down 2.5. Buy bouncing a bit. Might just be a little morning shakeout. I think we could still rip today. Build. Oh, I got filled. Nope, didn't happen. Oh, I did get filled. 5? And no sound? Sound's the best part. That's what everyone's waiting for. Everybody wants the sound. GME coming lower, down 3%. I get filled. I didn't get filled. Next up, bring. I'm gonna get 20 or 2008. Barbecue back to 2080. Bounced off of VWAP there. Zoop zoop. Doesn't make zoop zoop. Not easy to get filled on this thing. Which I like. I'm fine with that if we don't have payment for order flow. All price to pay for integrity in the market. Got Carvana up 3.7. Firm's got to fill that gap, doesn't it? Went down 1. Bubo up 2.5. It keeps going. Goes down 1, but I think it's going to keep going. It'll turn red to green today. Black West selling off from its gap up. Still up 10%. All is going green to red. I'm not doing anything yet. Waiting for this data, probably. A boing. MCO. Let's see. Upstart's up 6.5. Rival's down 8. Keep your eye on Rival, guys. Let me know if it starts to look bullish. Looking for, I don't know. I guess really just holding a level. Doesn't even have to look bullish. We'll just start finding support. Upstart 7%. Things been on quite the run. You're down 3.5. And not as long as I want to hold these. Dang. Oh, GME's flushing now, down 4%. Not even with the SPY. Supposed to get filled on barbecue. The video yesterday on all small caps. I didn't see it. I have a GME rally all day, close at the highs, stay flat, and then sell off at open. Haven't that come before? Still an SLD. Nothing should have changed from yesterday. Little push from SPY will wake it up. Start 5.3. Barbecue did bounce on VWAP. Still waiting for the rest to get filled. ELBM. Electra. Buy consolidating at the lows here. And closing these shorts. Then we're gonna get a gap fill. See what the data comes out. We've got 3 minutes for the data. GME down 4.3. Dang. That was an expensive gamble. We'll give it some more time. It'd be a pretty big reversal if it did it right now, but this amount of drop. Eyes coming back up to that support from pre-market. Just getting excited for the data. Never mind, we have 2 minutes still for the data. Palantir's up 6.7. Yeah, my time frame on GME though was a post-week OPEX run. Or an SLD continue to push. Which We haven't seen it in a long time, but that was what I was thinking yesterday. Ended up being. Yeah, the fib levels, sure. MCOM up 4%. GameStop still down 3.5%. We have less than a minute now for this data. If we get a big flush, I'm going to sell. If you start to rip, I'm going to sell also. So I guess I'm selling either way. Or close, rather. Buy to close. Upstart 4.5%. Barbecue down 1%. 2057. Right at VWAP. That's a nice wicks down there in the 20-cent range. Alright, close the shorts. Buy is free to dump now. Or rip. No reason for me to keep holding those. Do some intraday scalps on it maybe, but yeah. So data did come out. Not too much of a reaction. Starting to bounce here a little bit. Broke up above that pre-market. Wicking there. Here's where Global May flash services PMI at 55.1 versus 53.6 in April. Flash composite PMI at 54.5 versus 53.4 in April. Manufacturing PMI at 48.5 versus 50.2 in April. We'll probably get a gap fill here. Carvana up 6.3, Fubo up 6. Those same runners. Well, I don't need to be. GME a little bounce with SPY, but if GME can get a gap fill, that would be neat. Carvana 5.5. Fubo 5.5. Barbecue still 2050. Back west 14% up. Wall back up a bit. GME is moving up a little bit here. You see that volume pick up. Buy. Slowly filling the gap. See, could still be a little morning shakeout. Looking like its SPY's moving up. 418.56 the gap fill. GME is 24.15. MCOM up 7.25. Ryzen up 8.6. Barbecue moving upper. Not right now, it's downer, 3.3%. For levels to hold. Right now it's holding, it's kind of barcoding at that 20.33 for the bottom. So yeah, if it holds somewhere in this range, if that flushes, then you'd be looking for 1950 area. Oh, from back there. Okay, there's everyone. GME, does the morning price action maybe explain that? Just trying. Oh, right here from the 5-minute. That's true. That's true. That's a good point. Not thought about that because we just ran out of time. Had this RSI divergence at close, never came down. Yeah, that's a good point. I even had it on the chart. I still bought it yesterday. I don't usually think about it on a short time frame from one day to another, but yeah, I need to probably start doing that more. If you just run out of runway, it doesn't mean it's not still applicable. That's funny. Well done, Robin. Yeah, I'd say so. That's what we're seeing here. Profit taking. Something. It's right there in front of me. Oh. Yeah, you can see it's kind of trying to hold these levels from back here. Could be good. Go in 8%. Guys didn't tell me about arrival. What I wanted to see. Oh, thanks. I didn't realize I was muted. Sorry, guys. Jeez, I don't know how far back to even go. I don't think I have to go too far back. Yeah, Rival. I picked up a Rival share. I don't know if you guys heard. I picked up a Rival shares, and I was upset with you guys for not telling me sooner. Um, Not selling off. Space. So, I was saying space. There's not news. We're just getting all these speculative ones running. All these risk off. Going. You've got eBet, Carvana, Palantir, Fubo. Space is right up in there. Not necessarily like heavily shorted ones. Like could be a little bit of shorts covering, but more just like risk off or hype stocks going. Look for these resistances though. So this is the first one. This kind of the second one. It breaks both those, and it's kind of breaking out of that downward wedge it's in or channel. And you're looking at some horizontal resistances like 6.5, 5.5, half. Concentrate. Well, yeah, because the Yaz just turned off, so I thought you were saying the Yaz. I'm like, no, Yaz is off. Follow. Fubo 6.8. I was saying I'm gonna close my GME calls once SPY gets this gap fill. I don't think I think they're probably dead, but I think I can get a little better price with a little gap fill on SPY. Rival, big red candle there. There's an RSI divergence. Eh. The move to VWAP. Wow, that thing strong. That Megal's up 4.25. One's up 5.5. Here you go, Arrival. What the heck? Crazy. So thinly traded. Run is running. Had this RSI divergence. Barbecue. Kind of want to move my up a little bit. Barbecue, I think it's a nice bull flag. Like to see it hold 2015, 20 cent level. If not, look for 19.5 of here. These peaks right here. But yeah, looking good. GME is like setting up a bear flag. Getting much more bounce. SPY doing the same thing. Might be waiting on this SPY gap fill. Carvana 6%. Crazy move on arrival. A bit of a divergence there on the RSI. Not liking that. Not real. Guess you're gonna have to prove yourself to be real. Yeah, I'm gonna hop out of the arrival. Not liking it. Not liking it. It's close enough to that $4 level that I think it'll probably reject there, even if it does make it. Ubo up to that $2 distance level on there. Yeah, Pac West. Wow, it's still going. Nice. Yeah, it's up like 14%. Continuing. All right, I picked up more barbecue shares. Just scale again. If we get a move down to 19.25, I'll get some more there. That wall's up to Amazon or AMZ. AMZ. Hey, Alessandro. Hey, Ace. Uh, 1817. Yeah, sure. Sure, I could do that. I'll give it permission. 1750 would be a pretty big retrace. It's only Tuesday, so I was kind of hoping for a little more ups today and tomorrow, and maybe retrace on Thursday or Friday. But if we don't climb up today or tomorrow, then yeah, our retrace is going to be further down, of course, percentage wise. So I was thinking if we hit 30, we might retrace back to like 23 or maybe 20. But if we're just kind of hang out about around just over 20, and yeah, we might see a retrace to like 17, maybe 17 and a half. Stella's up 6%. I had a reverse split. I don't like it. Careful. But it's on that support. I can hold. On up 8%. Ubo almost 7. Groupon doing. Looking at gap fill. Groupon up 2%. Almost filled the gap. Until 480. 488. Fills that though. I mean, there's not really much resistance until 624. So this thing going. Stay in the 14 to 23 cent. Maybe, yeah. I mean, I think 30 cents isn't too far off without a catalyst. I'm less optimistic of a dollar without some news. I'm 10.5 or rumors. No, don't need actual news. Just need rumors of. Yeah, I think I'm not liking arrival. RSI divergence. Yeah. GME's chart. It looks like a bear flag, but I'm weighing the SPY with it, which shouldn't. This gap might not get filled for a while. Barbecue moved up a little bit. 2060. What about VWAP now? Haven't seen the volume like we saw yesterday yet. But we actually didn't get, yeah, we didn't really get volume in the morning. We didn't wake up till those 12 p.m. margin calls. Might cut these GME calls. Dang it. They actually have a divergence there on the hourly too. Cut the diverge, or I cut the calls. It might be, David. Just takes time. Yesterday's run, I think, was SLD. Obligations maybe were met. I don't know. Guess we'll see by end of day. I've been a bad cut on GME. Never like woke up yesterday. We saw that one candle when Polte tweeted, which I don't even get that. Besides that, it was just very natural SLD type. Barbecue back to break even 2080. Firms up 4%. Gap fills at 1595. Barbecue 2089 above VWAP now. Barely green, but bounced pretty nice off that 2015. I'm scaling into it, so I picked up some down here. Get another test at like 20 cents or 1950. At this point, maybe 20 cents since it is showing support there. And maybe get more. Yeah, the volume is still low this morning. That's true. So might just hang out in this range. I'd say move up to, I don't know, 2182 area, 2190. Back down. SPY's moving down here. Big candle on SPY. Just make a little inverse cup and handle. Maybe it did. You're testing the lows here on SPY. Yeah, barbecue low volume, just kind of capping up a little bit. 1.8, 21.99 or 21.19. Head and shoulder on barbecue. Yeah, it could be. Um, yeah, maybe. Dunkin's up 9%. Where were you guys on this play? Huh? 3 cents to 90 cents? 2,600%? 13 days? You guys better wake up. I just wicked down there. Barbecue 21.19. 1.8%. Why still climbing? Crazy, crazy little just, I don't know. Crazy wick down there. Barbecue 21.50, 3.3%. Up to this resistance of the flag. A little bit. I mean, the volume did get volume in the last 5 minutes. Both of these actually not bad. Some volume. Oh, you hit M Cloud? Nice tree. Yeah, cool. But barbecue is moving a little bit. We'll see. West still up 18. Pulls up 1. I just holding above VWAP. Crazy wick there. We're gonna get back into squeeziness. I don't know. Get back into GME if so, or not. He doesn't like me anymore. Duncan's up 11. Barbecue 21.48. It's up 3.27. Yeah, MCLDP or MCLD. Yeah, nice little uptrend. Got a gap there now. Yeah, barbecue. Time to go. This is barbecue on the right here. Oh, rifle's still hanging out up there. Little divergence though. Leave it alone. Palantir, 9.5. Let it rip. Eisen, Carvana. put the Discord in there. Go. Barbecue right at that resistance. Still above VWAP. Guys, for your likes this morning, it's 10:21. You guys are at 24 likes. Well done. Appreciate it. Maybe a head and shoulders. Might be a good call. It's hard when it starts getting barcodey. You see that and then or it's more price action, I think, with OTC. Less so than patterns maybe. It's always like price action's king, but yeah. Barbecue 2160. It's up 3.85. Oh, there's a little pop on barbecue. 2187, up 5%. At yesterday's high, basically. So see what happens here. Rejection or breakout? AI is in a crazy rip mode. I think it's having a pre-earnings run up. I'd say I'm not sure how much more steam we can get though before earnings. 531. Or did this already have earnings? This had earnings. Weevil just messed up. We have all this volume here. Were earnings on the 15th? Yeah, they had earnings. So is earnings continuation then? Where's it gonna go? I don't know, but you're at a resistance right here. $30 is definitely a spot, and AI is in a bubble right now. So as far as sector. Barbecue's kind of wicking up and down here. The high. Rocks. Rocks and Biox. This one looks nice. Trox. Tronox holdings. Yeah, it's at a nice support there. It bounced on. It's a good looking chart. Not bad. I like the other one better though. Call me Bulbo Boy. Tuesday. You too, Daniel. 2179, 4.76 on barbecue. I think it's maybe rejecting that breakout for now. Eyes moving up here. Run's still going. Oh, we'll see. It's does still have some volume on barbecue there. The AOS 14.3%. Got it today at 2018. Nice. Nice. Got a couple fills down here. Waiting for some better fills. Zoom is down 7%. Target cuts. Are you trading it, David, or just accumulating? And it looks good, man. Barbecue looks bullish. Seems like it's gonna break out. I mean, yesterday was basically just bull flag after bull flag, starting at 10:30. Had one, and then you had one at 30 to close. Accumulating and day trading. Okay. Yeah, I think this thing might break out actually. 4-1. Yeah, didn't I have 2-3-4 on here? It moved. Pace of acquisition. Yeah, no, that's smart. Um, Definitely overnight exposure. I think intraday you're fine. Over the weekend and then overnight is when you'll. I mean, I suppose it could come out middle of the day with acquisition or some kind of news and suspend it, but I imagine it'd come out extended hours and then it'd be suspended. Here you go, new high on barbecue, 22 cents. Up 5.7%. 22.10, 6.25. Should have got more. 22.20. And you get more on the breakout. I say you can. I say. A false breakout? I don't think so. But I picked up more. I like the volume. Legit. GoTC is not clever enough for false breakouts. Yeah, I mean the move up from here, like I've got 2, 3, 4 still. That could be the resistance. So maybe not much of a move. These all just be trading. And if that breaks though, next level really to me is that like 30 cents gap fill. So again, I think we could see that today or this week. But nice solid bounce this morning off 20 cents, 2015. He's moving up a little bit with SPY. Rival's not selling off yet, which is kind of interesting. Starts up 2.3. Big Bear Holdings. And you guys trading this right now? AP. I want to do some cash good puts on this thing. Way too early. This Moaz. Is it happening? Well, I think SPY's gonna start filling that gap. Big volume there on barbecue. Yeah, I think it's gonna keep going now. Look at that volume right there in the 5-minute. Wow, wow, wee wow. I think SPY's gonna fill this gap. Our MACD flip bullish. We got green over the 9 moving average. Kind of a little inverted head and shoulders there. Head, shoulder, shoulder. Kathy Wood's got more Palantir, huh? What's Zim? Target cut? Earnings? Oh, they had earnings. The eye down 3.4. Barbecue's about to rip. We'll see that 2340 in short order. Yeah, see. Oh, 3.2%. West 21.4. 50 cents. You're going to be shopping for a Lambo? Holy smokes. How many shares do you have? Million? Man. BlackRock's Ryder says Fed is likely to pause in June meeting. Spreads on BBB commercial mortgage-backed securities have moved above 1,000 basis points, their widest level since March 20. Barbecue hanging out up here. That was a lot of volume there, though. don't think we've seen the action from that yet. China, Russia to boost industry, agriculture cooperation. McCarthy tells lawmakers to stay within 24 hours. Oh.
Better than expected, but it's this Vans band that Wedbush thinks may really pose a big risk to this stock.
I just kind of chop it around here still.
Would be a helpful explanation for the technical situation. An important look here at what drives a multi-pronged brand strategy. Chart's pretty ugly, Rick. So what do we look at here? Is any hope at all?
Well, definitely the worst of the three charts we're looking at today here. I would say that we are in a precarious situation. We fell below our previous lows near 20. We haven't managed to make our way back above that point yet either. The only good thing I can say is we did not go into the oversold area there, so that's at least one rather bright point. In terms of support and resistance, right here stood out to me. That's our blue linear regression line, our line of best fit here, coinciding with our lower trend line of our falling wedge shape, a very large but relatively narrow falling wedge here. So around 1760 is a place to watch for some support. To the upside, we've got a similar situation. We've got our yellow 21-day EMA coinciding with that trend line just above the 21 level. So a couple places to watch there, but the standard deviation channels on this one, I was a little surprised because relative to its own history, it's not very volatile. There's not a lot of variance in the data despite the large declines here. So we didn't really have we're not in an extreme situation in terms of price at all. Really, we're much closer to what the market would consider fair value based on this linear regression line. So that could be a point to watch.
Okay. Kind of coming into a point here, a little squeeze in this downward trend. Interesting, real rough here. Blame Vans, I guess. VFC under some pressure. Come on, skaters. What's the deal? You're not cool anymore. North Face, though. Okay, well, maybe a little summer hike can help VFC. Thanks, Renita. Thanks, Rick. When we come back, we'll get an update on a big chip maker move from Caroline. Then we'll get our panel in here and talk about the regional bank and Russell's strength, too. But it's a pretty wide bounce in this morning, including several key sectors, including chips, as AMD breaks out.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios. dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Chip stocks continue to rip. Today it's AMD breaking out to a one-year high. Caroline Woods got the update. All right, take us through it, Caroline.
Hey there, Oliver. Yes, we just talked about Broadcom reaching that new all-time high. Now AMD reaching a one-year high. As you said, shares up about 2% today. Bank of America out with a note, sticking with its neutral rating on shares, but boosting its price target to $120 from $105. BofA is looking ahead to AMD's June 13th AI and data center event. Expects AMD to formally launch its cloud-optimized Bergamo server CPU and discuss its AI capabilities, how it's embedded in its PCs, server CPU, and GPU accelerators. As for what's keeping BofA more cautious on shares, the analyst thinks gaining market share against NVIDIA in AI or against Intel and enterprise PC server CPU could prove tougher than expected, limiting its EPS power. I will note that other analysts are more bullish on AMD in terms of their rating. About 65% have a buy rating, but the median price target on AMD right now is $100 a share. And as you can see here, it's currently trading around 110. So that median price target's $10 lower than where it's currently trading. BofA's $120 target is actually one of the highest on the street. I saw Rosenblatt was at 200, but otherwise 120 is the next highest. So it's interesting in terms of ratings versus those price targets. But AMD shares, as I said, up about 2% today, up about 23% this month, and up almost 70% so far in 2023.
Wow, all right. It's on the move, playing a little catch up to NVIDIA. Right alongside it now, breaking out. So it's spreading. The AI virus up 2% today. Thanks, Caroline Woods. All right, let's bring in our panel. I got Dan Grant, Alex Coffey with me here in studio. Dan's a senior specialist of retail trading at TD Ameritrade. Alex is a senior equity
Barbecue.
and the host.
Little move back to VWAP.
Good morning, gentlemen.
Morning.
Hey, how come despite a pretty good PMI, bonds are a little changed here, Dan? Are we seeing the concern about debt ceiling creep in? Is that offsetting maybe the potential for bonds to sell off?
So the potentially, yes. So we have the curve less inverted from week to week, about 40 to
We'll retest a view up there on Barbecue.
Where you look, 30 basis points on the farther spread out to the.
Still a nice bull flag, even though it didn't break out yet.
What is that telling you? With the Nasdaq has been going
Not
up.
liking
Some of
this,
the Nasdaq, specifically the Microsoft, the Amazon, the Googles, they're all going up versus
divergence. Is that a divergence?
What you would think be happening if
it's not,
you had
actually.
a default, right? If the market is telling you that it's not going
It is
to
on the
default,
30-minute.
I still think there's
Whoa,
a
Spy's
chance that it
flushing.
could.
I got a text literally coming into this segment from a very politically minded friend who generally has pretty strong views about things, and he was asking me about the odds, of this being upwards, 2, 3, 5%. My response is that it's probably less than 1, and the reasoning for that is because we just see very little evidence of it in markets, and I don't think people really recall, or maybe they're not looking at it, 2011, it was night and day compared to this. I mean, at 2011, you had a completely different situation.
New home sales for April. We go over that? Plus 4.1%. 683,000. Consensus was 669.
When there was fear about the debt ceiling, people
So
were
it's
actually piling into
above
treasuries.
estimates.
Longer dated treasuries. And today, we're...
New home sales.
I mean, look, the last week we've been selling longer dated treasuries. To me, Alex, that's kind of a major pushback against this notion the debt ceiling is careening to chaos.
I think it's more a reflection that some of the worst fears of economic prospects really haven't taken hold yet. And so I don't see the selling in long-term treasuries as a reflection
Tops is going 11%.
Uncertainty for the debt ceiling yet.
Right.
Oh boy.
I see the spike in 4-week treasury bill yields to 5.7%, I think it was. That is a reflection of the small percentage chance that this does potentially become something more than
Ooh, Arrival started going. Oh,
back and forth, and then ultimately
look at that whole
deal type of a situation.
What if the Fed's got
that move on Arrival? What the heck?
That's a good thing unless it's unless you have
Huge candle up and down.
A situation where inflation's run away to the upside, because it means that the economic prospects
This thing's crazy.
have gotten worse.
Right.
So I don't see it. I mean,
A lot of volume there
basically
though.
threw cold water on that in his speech.
Broke through the $4.
There's always room for a surprise.
But my point is,
This
don't
thing's
push
gnarly
the
to
short-term
trade.
yields too?
Well, the short-term yields have gone higher.
Right. But I'm saying that it may not necessarily reflect debt ceiling, right? It could be reflecting hawkish.
No, because I don't think in this
The
particular
longer-term chart still looks really nice. The volume this morning is crazy. Almost yesterday's volume.
Money market
Only 11
funds
o'clock.
Cannot risk default.
Right.
Those
Breaking the
items
buck.
being
Can't
breaking the buck, being tied up for any
I don't know.
time
The Arrival's
longer
starting to scare
than
me.
they're
This thing's
supposed to be.
crazy.
So they will adjust trading. They will adjust the products that they're in because they cannot risk it. And that's why you've seen that really weird divergence on the super short-term stuff that is hypersensitive to this, just because the big players involved with that can't play the game. They can't risk, even if it's a fraction of 1% chance, that is a chance they cannot take.
What do you
WG
think,
the next
Dan,
stop. I don't think
why
it
do you
is.
think there is that big difference between how this is
You've been
spreading along
hyping
the
this one
bond
for like
curve
3
now
days, so
versus
I have it on my
2011?
watch list just for
If
you.
It's just now isolated to very short-term 4-week notes.
Well, rates were 500 basis points lower at that point for the short-term rates. They were at 50 basis points during the 2011. Now we're sitting as high as 580, and we're not talking about 40, 50, we're not talking about 10, 20 basis points. We're talking about 40, 50, even 75 basis point moves in short-term securities, which
Crazy
tells
move
you
there.
there is risk here. That the market is pricing it, and that's where it's showing, right in those one-month bills.
If I can build on this, and this I think is the crucial point, if you imagine the kind of the debt ceiling situation is like a high stakes game of chicken in many ways, you're going to have kind of the most conservative parties involved, the money market funds, for example, the ones who are most worried.
Yeah, there were
about the
5.8 million available on
they're
iBorrow.
gonna exit the
Now they're
playing field
gone.
first, and we've
But
sort of seen that. But we still have
I
a
wouldn't hold that with too much weight.
until
Those weren't
this
even there.
potential deadline. That's a long
don't know.
time when it comes to markets. That's
yeah,
a long
hold
time
that
when it
much weight.
comes to kind of these negotiations. And so I anticipate if this gets really, really close to the deadline, you're going to see similar reactions that you saw in 2011. You're going to see market uncertainty
We're on
really
almost
start to play
10%.
out. But quite frankly, it's just not close enough yet. And so there's still that feeling that, they're not close to each other in terms of agreement. There's enough time for something to happen. It's really not in the best interest of anyone for this to go poorly. But the closer it gets, even
Look for a
those who are the most
pullback here on
confident
Arrival.
right now that something's going to get done, I feel like I'm pretty confident something will get done, at least short term. It's going to get a little bit hairier if it gets a little bit closer, and you have to start thinking, is this going to get done? And the closer and the more people start saying that and thinking that, that's when you get market volatility. I just don't think we're close enough yet.
Right. Well, that's kind of the point that I was making
Thinking
at the
that
beginning, which is that it
$2.5
doesn't seem to me like the
maybe if we
market's
can get there.
actually really worried, because you might have these adjustments happening in the very short-term money markets. But in
Barbecue
2011,
trying. I mean, it
ironically
moved to
enough, the
VWAP.
10-year
Now it's
was
back
about
up 21.90.
coming into the year, almost exactly where we've been.
0.3%.
All the way to sub 2%, leading up to that.
Probably just chopping around.
Debt ceiling impasse, and then of course the credit downgrade that happened as a result, which I think kind of reflected the severity of the situation then.
Still broke.
So the fact that we have it contained to the very short term right now, I guess suggests that there is either A, confidence
Palantir really
that it's
breaking
going to
out.
get passed and it's not going to boil over, or B, the strength of economic data and this hawkish narrative is kind of
Goes
creeping
up, chart
in
looks nice.
to the
Sort of
longer end of the
6%.
yield curve. Because if that's the case, Dan, then it would mean that when
Max,
the debt ceiling maybe is resolved,
6.5%.
you might have potentially then
It's like an
a
even more
blowout
sketchy
and
version of.
rates higher if
No, Arrival. That's a
we've
pretty
removed
similar
a
flow.
major
This one's
threat
20
to the
million.
economy.
Rates higher.
What Arrival is.
So the curve could steepen.
Sure.
Is what actually steepen. Right.
Yeah.
So
In
you're
theory.
Oh, so it's a
yeah,
lot
that would
smaller
be
actually.
the
Wow,
case.
8.4.
So in the bond markets,
Well, actually, it may not necessarily
There's the
if we price
sell-off
in
on Arrival.
hikes further on in the short term too. Which, by the way, the 3-month today is doing just that.
Ops,
the IRS just put in a new high
13%.
of 5.22.
Yep, 5.27. three-month LIBOR, or sorry, 3-month Treasuries.
Yeah.
Yeah,
mhm.
5.22, 27. Yeah.
So I guess then we should be on the lookout maybe for inflation on Friday, possibly.
Inflation, and then they're still pricing in a 20% chance they're going to raise rates in June. So, I mean, that's going to add more complexity to the long end of the curve. And long end of the curve doesn't know what to do. It's caught in this tight range right now.
Yeah. Okay. All right. Good comment, guys. Nice breakdown here at Bonds, Alex Coffee. Dan Grant clarifying the reaction function in Treasuries to debt ceiling chatter. Trading 360 with Nicole Petalides is up next.
Sana's up. Sana's rallying actually 6.5%. Wow, look at the trend this thing's made. Whoops, sorry. Quite the move on Asana. You're 11%. To me, it looks like it wants to fill that gap still. Maybe. A lot of relative strength compared to the SPY. Dan Druckenmiller said, I'm sitting here staring in the face of the biggest and probably the broadest asset bubble. Forget that I've ever seen, but that I've ever studied. Apple's current market cap, 2.7 trillion, exceeds the entire market cap of the United Kingdom, the third biggest stock market in the world. Median price of a new home sold in the US is down 15% from its peak last October. After the last housing bubble peak, the median new home price fell 22% nationally. Amy Diamond said, this month people going short and then making a tweet about a bank. The SEC should go after them. They should be punished to the full extent of the law. The biggest U.S. banks will be hit with nearly $16 billion in extra fees over 2 years under a federal deposit insurance corporation plan to recover its losses associated with rescuing Silicon Valley Bank. Go, that's how we're paying for it. $16 billion. Recession and credit crunch will drag home prices down another 15%. Says Ian Shepherdson of Pantheon Macroeconomics. It is the largest contributor. Paid $5,000 to help them develop flu vaccines. You mean when you say help develop, you mean like take experimental shots to the vein? around 9.25. Rival, I mean, it's still green. It's still up 7% but pretty big rejection up there. Quite the candle to watch. Whew. BBBYQ still hanging out at the highs, 21.88. Oh, you have to stay in the hospital for a week? I mean, I don't think there's any closer you could get to being an actual guinea pig. SMX 9.5. Paid guinea pig, yes. And I get some Jennies in the chat.
Dick's Sporting Goods. It was definitely a packed earnings report. What did you think about it?
Yeah, a little bit of a mixed picture, and I think right now it seems like a sigh of relief that we are not seeing anywhere close to the same reaction we saw in Foot Locker, which have weighed on Dick's Sporting Goods shares over the last several sessions. I mean, the stock has fallen since we saw that report from Foot Locker, so I think encouraging here, although not really making a significant move higher, but they did reaffirm their outlook and beat their fiscal first quarter expectations. They reported adjusted earnings of around $3.40 a share. That was higher than the consensus.
He was on it.
For earnings at around $3.21 a share, and same-store
Osmos
sales,
is on
which
it.
of
Keenan
course
is
does
on it.
track revenue at stores that have been open for at least 12 months, gained about 3.4%, which was in line with analyst expectations. But they also did maintain their outlook between $12.90 and $13.80 a share for the year. This comes slightly in, I would say, to the downside of what analysts had been expecting, but analysts forecast at around $13.40, sort of in line with those expectations. Now, the report, they said, was really just, I think from reading the analyst community, it was not perfect, but it was good enough relative to expectations. And it does seem like right now analysts are reacting more favorably. They also are highlighting the fact this company was able to keep positive comparable sales, even as this overall discretionary environment has crumbled a bit. While there was a tax benefit that did contribute to their bottom line beat, there were other encouraging signs as well, which also included a narrower than expected decline in gross margins, as well as healthy inventory levels. This is something we haven't heard from a lot of the retailers that have reported thus far. So I think Dick's Sporting Goods showing once again a resilient quarter. They've been able to fare what has been a very difficult retail environment so well. I think with the diversity of their offerings, I mean, they're sort of a one-of-a-kind business in that aspect. So Street likes this report. Not a huge reaction to the upside, but I think the fact that they've been able to hold on to these gains when the market is collectively lower is a promising sign.
Yeah, and I'm glad you brought up the tax benefit, because that's something people were talking about, you know, an acquisition, a tax benefit. So some of those things were helpful for this quarter, but that the reaffirming the guidance, not raising the guidance. All right, thank you for all of that. Great look at some really important stories today. Jenny Horn, markets correspondent, thank you. All right, let's get some insights in the news shaping the markets. For that, we welcome in Rob Fleming, senior market analyst with the
Zoom actually might be at a good level, even though I kind of hate this company. Made its way all the way back to long before this crazy COVID pump.
It's not 100% guaranteed that this gets solved. While people are feeling optimistic that they're talking and working at it, it just seems very much like a wild card. Your thoughts?
Yeah, well, good morning, Nicole. Thanks for having me on. Yeah, definitely coming up, against that X date, a couple weeks away here, and you can see the markets relatively acting pretty positive, like they expect a deal to get done. We got some comments yesterday after the meeting there that suggested some positive developments there. But yeah, still no deal yet, and the time is the X date is drawing near, so we could see some volatility there. And something to remember as well is, even if they do reach an agreement, it's going to take several days for it to actually get signed and to raise the actual debt ceiling. So there's a little bit of press for time to get this done.
And we have, as I look at the board, right, I see a stronger U.S. dollar. I see yields on the rise. I see the 10-year at 3.7. What's driving these elements? What does it mean to you? What's the interpretation?
Yeah, I think the dollar's move today, I think it may reflect somewhat of the manufacturing PMIs that we got out of Europe and the UK were a little bit on the disappointing side. That may be adding a lift, but overall, it seems like the markets are expecting a deal to get done on the debt ceiling there. If there was not a deal getting done, I think that would weigh on the U.S. dollar.
Right. As we talk about some of the elements, the data that's been coming in, I mean, you just mentioned some of the PMIs from abroad. We got our own manufacturing stats here at home, below 50, showing contraction once again at the lowest levels back to January levels. I mean, what's your interpretation there? Is new home sales on the rise?
Yeah, definitely. The PMIs, the manufacturing side, definitely continues to be sluggish there. We've seen several months. Last month, we did get in that 50 key mark to get into expansion, but we fell back into contraction there, and we've been there for the last few months. And it just suggests that the shift from the goods side consumption to the services side, because if you look at the services PMI today, actually unexpectedly accelerated their growth. So we're seeing a little bit of shift there, and also with all the tightening that the Fed has done, it's slowing economic activity, especially on the goods side and demand.
And that's what I was going to ask you about, because the services was a standout part there, and it just shows that people are spending, and they're willing to spend even in an inflationary environment. I mean, would you still call it an inflationary environment, and how would you assess the consumer?
Yeah, I mean, judging, we've seen reports, definitely a shift in, the consumption, away from goods into services. Also, as we've seen from some of these retailers' reports, kind of a shift from, discretionary to essentials there. So that's something to definitely keep an eye on. And I think later on this week, I believe on Friday, we'll get the PCE price index, which is the Fed's favorite gauge there. That'll give us a good idea of what we're looking at in terms of the inflationary environment that the Fed pays close attention to. Looking at the estimates there, it looks like we're going to see continued growth in month-over-month inflation pressures there, and still well elevated year-over-year figures there, well above the Fed's target. So that just makes the Fed's job a little bit tougher.
What about GDP and durable goods?
Yeah, I mean, GDP, that'll be the first revision there. It's kind of a backward-looking, economic report there, so I don't pay too much credence to the headline level since we've already got it out. But I will be paying attention to the the consumption revisions there, and some of the components there in terms of inventories and business investment and non-residential investment there. But durable goods, I think that's a preliminary report that will come out, and that's a good tell on the propensity for consumers right now in this environment, if they're going to pay up for big ticket items, because durable goods are items meant to last 3 years or more, so they're usually a heavier price tag on that. So if we see a pretty good figure there, that could suggest that consumers holding up there. And then there's also a component of the durable goods report that's business investment. That's the non-defense durable goods orders excluding aircraft. So that'll be one to keep a close eye on as well.
Yeah. How about the fact that the NASDAQ 100 hits new highs, new close high yesterday for the NASDAQ 100. So that was the highest close since 2022, obviously. And what do you think? How are investors feeling here? What would you say to them?
Yeah, I mean, if you look at last year, we had a pretty good bear market in that sector as well, so not too surprising to see a rebound. But I think a lot of the leadership is coming from a concentrated area there that's lifting the NASDAQ. So that's something to definitely keep a close eye on. I believe that 6 of the largest mega cap tech internet companies are leading the way. So pretty heavily concentrated underneath the surface. There's still some churn there that we want to see a little bit broader participation if we're going to believe, this rally can be sustained here.
Right. Good to see you, Rob Fleming, Schwab Center for Financial Research. Thanks for being here, Rob. Thanks.
Thank you.
Plenty more to come right here on Trading 360. Our 360 Spotlight will be joined by the president and CFO of Bloom Energy right here on the floor of the New York Stock Exchange. It kicks off its Investor Day. Today's disruptor is Zoom.
Barbecue still not breaking out. That's it. $22.07 plus 6%. All right, matching the high of the day, 22.20. That's it. Barbecue 234. We want more. Oh, not yet. There it is. There's a new high on barbecue. 2229. 7%. Nirvana's at 12.5. A lag on your broker to my lag on your broker? Mbot. Our Ronald Pumper. Did move pretty good. I'll hit a share offering though. $0.4 million Direct offering. I know they closed it. Why do you think it's completed? Ops is consolidating up there. Ops. I wanted to get too crazy here. Climbing up slowly under the radar.
He's got his eye on the $70 level as well. It sounds like, let me just identify some of the areas of consolidation I'm watching on this daily. 72 is the key area. If we can get up above on that longer term, I think it'd be important and open up a door for a retest of the upper extreme. And again, I'm just looking at these longer term trends here that we've got. In this instance, a weekly chart, we're going all the way back to, we're talking 2018. Just really my eye was attracted to two areas of consolidation, but you can see this is a stock that's no stranger, aside from the pandemic spike, which threw things out of whack, no question, taking out 45, but briefly, you can see that this is a stock that's found comfort around this 70, 75 area. So I'm not surprised to see Allen look to potentially see that short-term trend to the downside reverse, in line with that longer-term trend to the upside, and revert back to that key area again, 70, 75, an area I'm watching here on this weekly.
Right, understood. And so didn't spend very much time at the lower level there, Alan. And when we think about the dogs of the Dow, and often the dogs of the Dow turn out to be the winners, right? Final thoughts here.
Yeah, that's some of the logic, but it was nice to see that it tested, made a new low, and then reversed itself and filled that gap very quickly. That's a momentum shift. And I'll take maybe from Ben, and we both agree a pop above 70 gets this thing started for real.
All right. Coming up next at $30 and change, we're looking at the Brazil ETF. Is this something that you watch closely? Why today?
Well, I know in the past we talked about the EWZ, which is the Emerging Markets ETF. Now, if you dial in on Brazil, I'm a big fan of Brazil. We did a play the other day in PAGS, Pagliosura. I didn't even know what it's a fintech digital company. I like the chart setup, and a lot of these stocks in Brazil are set up very, very nicely. So we're seeing in the ETF itself, we're seeing bullish divergence, meaning it made new lows but not new highs and implied volatility back in March. We're seeing a triple bottom. That's very impressive here. We've been between 25 and 30 for 6 months, 25 and 35 for a year. So 30 is a critical level. A pop here, solidly above this 30, gets it back to that range top at 35 very quickly. So what I'm looking for here is a December option. The volatility is half of what it was last October. So the options are that much cheaper, so you can buy more time. A December option has 6 months of time. That 25 call, again, that's the bottom. It's trading about, it's 5 and change, 5.75 or so. It's $5 in the money. So if we get to the top edge of that range at 35, then you're going to look to see this option gain nearly 100%. So again, it's a play on dollar renewed weakness after we've seen a little bit of a pause in this dollar action here in the last month or so.
All right, makes sense.
Oh, there are side divergence there on the 5 minute on barbecue.
Ben, your thoughts on
Here
this
to here.
Well, I do agree with Alan in terms of that key level being 30, in terms of the more intermediate, more granular time frame. I've got my eye, as I mentioned at the top of the hit, though, Nicole, in the bigger picture, which is a downtrend here. Let's begin with the uptrend, though. As I mentioned, again, much like our last example, somewhat counter trend to what we're seeing on the bigger picture, but well-defined.
Look at this,
here,
just
very well-defined. And
tight range
also
on SPY.
around that level Alan just brought to our attention, around 30. I've got my eye on these 4 areas of consolidation, but first and foremost, let's go back to the left side of the screen, the bottom left here, because you can see how a bit of a double bottom and that area of consolidation around 2765 is where we saw liftoff a couple weeks ago. We balanced out around, we'll call it 2875. And I don't want to split hairs because, again, we're talking about a more granular time frame. I identified 2980. Alan, what's 20 cents amongst friends, right? Let's clear this out, though, and move on into, as you can see, the 4-hour time frame. Now, this one shows a little bit more of what I've been talking about, that longer-term trend to the downside. 4-hour chart here also shows a key area of consolidation. We're kind of testing the upper extreme of that right now. As you can see, again, 30, 50 would be key, potentially reversing this trend in the longer term. So, again, I think 30 is very significant. Alan identified that. Now, in terms of kind of tipping the scales back lower, 2850 would open up the door for a retest of the lower extreme.
Finally, charge points having a little bit of momentum.
Let's move away further into, I've got a daily time frame here, and again, kind of talking about giving the benefit of the doubt to the longer term trend that's at play here. I see a very well-defined double top and an area of consolidation that formed up around 43.44. Well-defined breakdown into the fall of 2021, and since the beginning of 2022, basically sideways around this $32 level. So again,
still a 9.5 gap fill on Neo.
Key, depending on which time frame you're talking about, you can get a little bit more granular, more specific, and hone in on that area. But either way, look, in the middle of this range that we've been in over 2 years now, basically, so really speaks to the importance thereof. I'm also focused on that longer-term trend to the downside, giving the benefit of it out to the bears still.
Right, right. And that gets frustrating when you're stuck in a range for a few months and then a year and then 2 years. That gets tough, Alan. People don't necessarily love that, but you're making your call here, right?
Well, actually, I do. I like that consolidation because it's building energy. The longer something goes sideways, typically the bigger breakout. Now, you're not saying which way it's going to break, but looking at that triple bottom and being long from 25 with a December option 6 months at a time, I'm pretty comfortable with that position for the long term to be there for that attempt to pop. And all I needed to do is get back to that range top at 35. And again, you're looking at 100% gain in the right option.
All right, last but not least, lemonade, not the cool, refreshing drink. We're looking at the world of insurance, finance, things like that. Tell us a little bit about this one. Why is it on your radar?
Well, this one encapsulates both indicators that I've used in the last 2 trades here. So it's got the leverage buying, which is the intelligent money flowing into it. And so you're seeing that, and you're also seeing that bullish divergence, meaning it made new lows but not new highs in implied volatility. So there's both of my signals are working for us here, and this is a stock that's obviously had a big drop. It's been between 10 and 30 for the last year, and between 10 and 20 for the last 6 months. So the consolidation here, it's above the midpoint of the last 6 months range, 15, which is an important signal here. So a pop above 20 is a crucial number here. Should get this moving. The way to play is a December $15 call. It's trading for about $5.50. It's got 6 months of time and a 75 delta, and it'll provide a nice payoff on a modest move if it pops above that 20 level.
And if you have that move, this is a win. Ben, take a look at the chart and the technicals of lemonade.
Well, Nicole, when I look at this one, it looks like investors have tried to turn lemons into lemonade. On the short term, they're achieving their goal, but on the long term, I think they're still looking a little bit puckered up considering some of the declines we've seen. Taking a look first and foremost at just the move up this last week, I should say, Wednesday, 1462, almost a $2 advance up to 1843. Again, a significant move here and a very well-defined trend, bottom left to top right. But this is a 15-minute candle chart, right? So let's not get too married to the more granular time frame. 15, 16, 18, the areas of consolidation. You can see that well-defined initiative phase. So this is a pretty good example of that transition between the two phases. But again, we're only looking at a 15-minute time frame, so this only provides us a very little bit of information. So let's step back, right? And you can see here a bit of a different story when we look at the bigger picture, longer-term trend in terms of what's been playing out here on the 4-hour. A couple different scenarios I've got my eye on. You've got a situation where we've seen value move lower. If you want to call this a value area, it was short-lived if so. If so, though, again, we're starting to break out to the upside. This would not necessarily be supportive of that longer-term narrative of the downside. It'd be more supportive of a bit of a trend reversal, but I'm kind of, again, sticking with this longer-term trend. I'm going to show you why on the weekly in a second. I'm sort of giving the benefit of the doubt to the bears here, thinking this is more just a test of an upper extreme, and we're still balancing around 15. Let me show you why I'm giving the benefit of the doubt to the longer-term bears here. This chart says it all, Nicole. This is the highs that we saw end of 2020, back in 2021, up 188.30. Look at these areas of consolidation, and then look at this. I mean, get a fine-tooth comb out to really separate these two, but you can see 23.15. As long as we're below 23, this stock's under pressure. It's in a longer-term trend to the downside. I don't care what the 15-minute says.
You know what's interesting? Thank you for that, Ben. JP Morgan analysts saying that investors should put their money in gold and cash as the rally.
2060 to the gap.
We're also hearing from
It's just an intraday gap,
the
right?
Fed will raise in June.
See any gap. This is just intraday, which doesn't count.
Alan, quick thought.
The market knows all this.
There's no downside gaps I see.
Like I said, every signal has been strong, and there's also just
on
to let you
Carvana.
know, there's also a 97% chance, and that's jumped from yesterday. It was only 90%. 97% chance that there will be a rate cut by December. So, you know, the markets are forward
cut by
looking.
December?
I like this momentum. I don't
Wow.
fight momentum. It's pure and simple.
Fair enough.
And to try and pick this
7.5.
turn and say that something can't happen, that's not what I do.
Ben, what do you think about some of these calls here from JP Morgan and Oppenheimer? We're going to wrap
Right.
it up right there.
Laura,
Thank you both.
we've got you, we've got Ronald. There's like 3 of you pumpers that kind of make your way in and out of my chat
Thank you both for the big 3
with your
today.
fake picture.
All right, coming up next, we have
Ooh, high of the day on barbecue, actually, 22.30.
right here on the floor of the New York Stock Exchange. In fact,
Yeah,
the company's kicking off its
one.
Investor Day
It's
today.
10,000th
Take a look at
of a
renewable energy
penny
and
higher.
the outlook for
10,000?
the coming year.
Yeah.
Trading 360. We'll be right back.
721. Let's see. Nice. I mean, it's a slow motion breakout so far. Breaking out. We're above the breakout level, and it actually found support. It came down and retested. So good. There it is. 2245. Microsoft to add Bing search engine to OpenAI's chat plus. Americans haven't been this worried about their bank deposits since the 2008 financial crisis. Wait a minute, Americans are still making bank deposits? They still have money to deposit? Yikes. On March 31% of homes sold by investors in Phoenix were sold at a loss. Whoa. Highest percent of any metro area in the country. Phoenix is also the area that got hit very hard in 2008. Real estate in Arizona is crazy. Potentially a little head and shoulders here on GME. US bank failures so far. SVB, First Republic, and then Signature. Thankfully, barbecue saved my poor GME trade.
Actually came from non-discretionary purchases. So looking at
A
appliances,
different barbecue we're seeing today.
fix the old ones that may need repair, things of that nature. But
Good
they
volume
are
though this morning,
also
actually. Not bad.
reducing their guidance for the year. They are actually looking at their total
Time to buy
sales
another share.
range for the year being between $87 billion and $89
This is the way.
billion, and that also projects its comp sales to decline between 2 to 4%, and that's actually down from flat to down 2% that they actually said before. So overall, we are seeing the market move higher when it comes to this name, even though they did reduce their forecast as well as beating the street's expectations. But we also have to just kind of keep in mind 75% of their total sales actually comes from DIY customers, or the individuals like yourself and myself that are trying to improve their homes, whereas Home Depot has about 50% of their sales coming from contractors, home builders, things of that nature. So
Stephanie
very
Mr. dies
interesting
on the
report
after
to say the least,
ashes.
but we are seeing a
Great.
pop in the stock. Let's see if it's going to be able to hold for the rest of the session.
All right, Kevin Green, thank you for that look at Lowe's today, which is higher, even though same-store sales did pull back a little bit. Appreciate it. Thank you, Kevin Green. All right,
It is bullish. Bullish looking. It's in a breakout, it's just slow motion.
Greg Cameron's with us, president and CFO.
Nice step up from the bull flag.
Thank you for being with us.
Thank you for having me.
And I know you have an exciting day planned upstairs. A lot of folks. Did it already occur, or is it after this?
It's after this interview. I'm going to go right upstairs, and we'll spend the next 2.5 hours for the team.
Well, I'm sure they'll be asking a lot of questions. I mean, the Inflation Reduction Act would help a company like yours, right? All about renewables. And tell me what is our, the main sort of agenda for today? What are you going to be telling them?
So we're talking a lot today about how we're driving growth at Bloom Energy. The great thing about our product, it's a platform. So it can operate as a fuel cell, providing resilient energy on site. It can operate as a microgrid for a data center, providing electricity in 100 megawatt sections. It can operate in reverse and be an electrolyzer and create clean hydrogen. So we're going to talk a lot about the growth that our company expects to see from that, not only in the top side revenue, but our margins are improving, and we're expecting operating profitable this year on a non-GAAP basis.
When you talk about how you're able to operate in all those different ways, are some of them newer for your company?
One of the things we're going to talk about today is our product has its beginnings in NASA, where it was first operated as both a fuel cell and an electrolyzer. So when the founders built the company, they made sure that they thought about that optionality that exists within the product, as well as in the manufacturing. We can invest in a new manufacturing line, and we don't have to determine whether it's going to be a hydrogen fuel cell.
Yeah, it was a nice bounce off you up. Right here.
Or an electrolyzer, or operate on a marine
We're getting
application.
divergences,
We
but
can
it's
make
kind of
those
still
decisions
grinding up,
later
so.
and really maximize our investments.
Where do you think you'll see the most demand?
That's just RSI, I think, responding to kind of the OTC price action times. There's not enough
Is probably going to drive
trading data.
85% of our growth
I don't
over
know.
the next 3 to 5 years. That's really, we're strong both in the U.S. and
But
in the
volume
South
is actually
Korea
pretty good
market.
today.
We can expand in geographies. We added 5 new geographies last year. We also see an opportunity with our electrolyzer that we can operate at scale at that. It's going to scale much differently than our fuel cell business did, much more quickly. So we expect to see orders in 23 and 24, maybe begin to ship electrolyzers late 24 into 25, 26.
It's a consolidation on SPY this morning.
The stock dropped over 5% when there was
Whoa.
$500 million in convertible senior notes offering, but then it sort of, went through the system, and I am seeing buy ratings and upgrades from the likes of JP Morgan and Morgan Stanley and Jefferies as well. So, tell me
All the words together. That's what that was.
Why now, and what it is you plan to do going forward.
So we saw an opportunity to
There you
raise
go.
additional capital at very attractive terms.
That's why
And
it
we're
did
gonna
sound a
use that
little
capital for a
incoherent.
couple things. One is we're going to pay down about $200 million.
A little breakout,
in debt,
22.51.
make a change in the interest rates there and have savings.
Right.
The other thing we're going to do is we're going to need to invest in working capital in order to go after some of these larger scale projects, whether they be time to power opportunities and growth opportunities, or in the larger scale industrial plays. We wanted to make sure we had enough capital to handle those changes in size. And lastly, we just wanted to make sure we were safe and secure in a very uncertain environment.
I see. Well, tell me more about the uncertain environment. Why is it a very uncertain environment?
You see from everything with the volatility happening in the world today, and whether it is a debt ceiling crisis that drives volatility in it, or opportunities where there's disruptions in the world, we saw just an opportunity to make sure that we were safe and secure, and we can deliver for our customers and investors going forward. Very attractive terms. It did have a convert, but that's at above $26 a share.
At 22.70, up 9% on barbecue. Edging up to 234.
Yes. To raise that capital. Do you expect to raise more capital?
We do not right now.
Right.
I mean, we'll always continue to look, but as of right now, based on the way we see the company and on our growth aspects, we think we've done what we needed to do, and we'll continue.
Paying down the debt, the $200 million, because of the higher rate environment.
I think we've got resistance.
And we'll be cash
we're getting up to. I'm not sure if we'll break that or not.
So we'll be generating cash off of our own operations. Now we'll invest $100 million in CapEx. So we'll still be a user of cash, but from this point on, we should be generating over $300 million of cash to go with the $560 million that we generated, that we raised through the capital.
Tell me more about the hydrogen space. What is it that people care most about, and what is it that you're focused on here to fill that?
The hydrogen space is all going to be about what is the final cost of the delivered kilogram of hydrogen. What's great about our technology, solid oxide, is that we break the
my shares make it happen
molecule at the highest efficiencies. Now, 70+% of the cost of converting water into hydrogen is going to be the energy.
I'll probably sell some today if we get a good move.
And we're 20 to 30% more.
And maybe it'll continue.
So yes, solid oxide has the opportunity to utilize heat and offset the electricity input, even making it more efficient, but we don't need to. So I think over time, the question for hydrogen has always been a question of when, not if for us, and we see that. And what's great about our business is we have a really strong fuel cell business right now that creates a lot of manufacturing capacity in a commercial organization while we wait for that hydrogen market to develop.
Well, I think I asked you a lot of the questions when, you are the chief financial officer, so I wanted to make sure to, sort of get to the nitty-gritty on the balance sheet. But at the same time, just go back a moment. I mean, what is it that your company is providing? As you said, you're providing that energy for manufacturing. Because not everybody fully understands, as you're talking about the ways you're converting energy and what it is used for. What are the main things your company is being used for?
So the main thing we do
and
is...
your customers that use it.
Yes, they use it on a distributed power generation business. So we can put our fuel cells at a hospital, at a manufacturing center, at a data center. And we will convert a fuel, predominantly natural gas at this point, on site without combustion. So there's no SOx, there's no NOx, there's no particulates, no pollution associated with that. And we provide a sustainable and a resilient power source to that customer that is dealing with all the outages they may get from the grid, all the issues they may have with increasing grid prices. We offer a lot more predictability, or quite frankly, right now, we have not invested as a country or as an economy enough into power generation or transmission resources. So people are having issues getting enough electricity to grow their business. So often when we're getting a call from the customer, It's around how quickly can you get me power so I can meet my growth expectations because I'm limited.
Because I want to manufacture more, but I don't have the energy to do so.
Yes.
You know, when we think about the world of EVs, right, we're going to need power for that too. I mean, we talk about the electrical grid and how it's set up. And using AI, every single company is talking about using AI for better productivity. So can you help us understand, you know, the grid itself, because as you said, manufacturing companies sometimes don't even have enough.
Yes. So it's AI, it's the EV vehicles, it's the electrification, and it's the power needs of a warming planet with a lot more outages and much more severe outages driven by climate change.
How much are you using AI?
So we collect over 1 billion data points every day from our fleet. Every server that's in service today, we get constant readings on what their efficiencies are, what the heat is. We can calculate from that what we believe the stack life and anticipate when service calls are going to be needed. We can use that for that particular unit, or we can use it across the fleet, and we constantly reinvest in our processes using that information. We think it's a key differentiator for us.
Just so I understand, I mean, we have to go, but just, I mean, you're talking about a billion data points. Efficiency, heat, things like that.
Yeah.
Is that up year over year? Are you going to have more data points next year?
It grows with the fleet. So if our fleet is growing 30% a year, every unit will have as many sensors in it. We'll have more data in a longer time
options.
period, which will make us all that more efficient.
Options would be nice.
Thank you so much for
Without
having
crazy
me.
IB.
Exchange Investor Day for Blue
Indeed.
Energy. Greg Cameron, President,
When we're back on the NASDAQ, that happens. The IB's probably going to be insane still.
Falling after its earnings. Is there an opportunity here for a great trade? He'll give us the numbers in an example trade next here on Trading 360.
I'm moving up here, see if it fills this gap. Stays stuck in this range.
That's again the enterprise customers who are using the traditional collaboration software and video teleconferencing, but also the communications element of enterprise software has been growing. So 13% growth rate, but at the same time, the number of new customers grew 9%. So when you see the sales growth higher than the number of new customers, it gives you an idea that the net dollar expansion rate is over 100%, and they declared that to be about 112%. So all that was really good, alongside the fact that the earnings for next quarter are relatively balanced compared to the estimates. They guided higher for the full year just slightly. The stock is down about 7%. And I think it has to do with the fact that the competition, especially from Microsoft Teams, especially from Google and Cisco, WebEx, has still been encroaching on Zoom's ability to expand pricing and their margins. So even though margins are certainly higher over time as the stock price has been decelerating quite aggressively in the last 3 years after the huge run-up during the pandemic, competition is creating a situation for Zoom where the earnings growth is just barely positive. And I think that's one of the reasons why we're seeing the stock price reaction to the downside after the initial reaction positive after earnings. And if you look at the analysts, for instance, UBS, they did increase their target to $75 from $70, but they maintained basically a neutral rating. And Piper Sandler also increased their target to 76. And it has to do with the fact that fiscal year guidance for earnings and sales was nudged slightly higher by Zoom. But if you look at their analyst ratings, they didn't change it. Most of them are relatively neutral on the name.
Yeah, and you know, the CFO, Kelly Steckelberg, was the one who was speaking when I talked about that. She seemed optimistic and was very proud of the quarter, to your point, right? Seeing some of the growth numbers. But the concern is, or beating the street, I should say. But really, there are concerns about growth. As you said, slower growth and stiff competition. I mean, the days of $124, which is the 52-week high, seem very far away. And I just don't see a lot of optimism surrounding this name. That being said, what are you thinking here for an example trade?
Okay, Nicole, so obviously the trend has been down. If you look at a 3-year weekly chart, one of the things we have to keep in mind is we don't want to fight the trend. It's nearly impossible to do so until the stock establishes a major trend reversal, which we wouldn't know until, for instance, if the weekly candles close 2 consecutive weeks above the 20-week moving average. You can see that the 20-week moving average has actually been resistance, and it's still holding. So with that said, we can capitalize on this weakness in the near term by putting on a bearish to neutral trade, basically a bear call spread. So what we'll do is we'll go out to June with 24 days to expiration, and we'll sell the $70 call option, and we'll hedge that or offset the risk by buying the $75 call option. So altogether, we'll earn a credit here of $1 per share or $100 a contract. So the whole premise behind this trade is that let's hope to maintain weakness in the stock price below the $70 area. So if it holds below 70 between now and expiration in 24 days, that credit of $1 will erode to zero. Break even, just in case it does go higher, is $71. But you have to keep in mind that there's a max loss of $4 if the stock hits 675 or higher between now and expiration. So you're generating a return of $1, but your risk is $4. So you're getting a 25% return on risk. But effectively, with this weakness in the stock today, and some of the analysts, which are maintaining basically neutral ratings on the stock, I don't necessarily expect the stock to move higher above that $70 between now and expiration in 24 days.
Thank you for that. George Stillis, great to see you. Appreciate your look there at Zoom Video today for the Disruptor every single day. All right, our 360 round is next, and we'll talk about Ford. So some news on the EV front yesterday, long-term lithium supply deal that we want to talk more about that. Coming up.
The cost of a bachelorette party has skyrocketed. $10,800, an increase of 40% from an average of $7,700 in 2021. Total generative AI funding in 2023 has already surpassed 2022 by 4 times. BBBYQ consolidating up here. 8.8%, 2263.
and understand the features and how it works, I think that the dealer networks of the two big companies are going to be very helpful.
Interesting. All right. Thank you both, Ivan Feinseth and David Whiston. Good to see you both. Appreciate it. That's going to do it for us here on Trading 360. Thanks for being with me. I will see you later, 2 p.m. Eastern Time for the Watch List. I'm Nicole Petalides. Have a beautiful day. Fast market.
Low roast barbecue. I love it. Yum. Overnight smoking barbecue. They're not using borrowed chairs? I mean, I don't know. The data we get so limited and skewed and self-reported. Don't hold much weight. I used to. Watching GME. SMX starting to wake up. 14%. Got resistance here at 1143. We'll see. BuzzFeed. Actually, this chart looks nice. BuzzFeed on the daily. Mm-hmm. %13 on SMX.
top and bottom line. Running through those numbers, adjusted EPS of $3.67, topped analyst expectations of $3.48. Revenue fell 5.5% in the quarter to $22.35 billion, but still came in better than analysts were expecting. Same-store sales dropped 4.3%. That actually fell short of estimates of a decline of 3.4%, but an analyst over at D.A. Davidson pointed out that it beat Home Depot for the first time in 2 years for that metric. Home Depot same-store sales fell 4.6% last quarter. Gross margins contracted a bit to 33.7%, but operating margins did tick higher to 14.7%. Inventory, meanwhile, fell about 3.5% from a year ago to $19.52 billion. Now, CEO Marvin Ellison said, "We are pleased with the performance of our business despite record lumber deflation and unfavorable spring weather. Although we delivered positive comp sales in pro and online for the first quarter, we are updating our full-year outlook to reflect softer than expected consumer demand for discretionary purchases." So let's talk about that lowered full-year outlook. Now expects adjusted EPS of $13.20 to $13.60 from a previous outlook of $13.60 to $14 per share. Sales outlook is now $87 to $89 billion. Previously, it was expecting $88 to $90 billion. And its outlook for same-store sales was revised to down 2 to 4%.
18% on SMX there.
To down 2%.
On.
Despite that
I'm out of day trades.
outlook, Wall Street's expectations still align with this lowered outlook. So not as bad as it
Broke that resistance there, 1144.
So taking a look at shares, they're up about 3% today. Positive on the month now and up about 5% so far in 2023.
Caroline, Home Depot and Lowe's are both rallying today. They both came out with numbers that looked bad when they came out, but these stocks have already sold off considerably. I mean, if you look at Lowe's high, it's $60, $50 from here. So these stocks have already discounted a lot of this slowing of the economy and slowing of discretionary spending. I think when you realize that the numbers aren't as bad as people feared, I think that's why these stocks both firmed up today. And because going back to my theory with Tom, working on your home is never over. There's always a reason to work on your home, that these companies are going to weather these, you know, we know the commodities went crazy and they've come back down in terms of lumber, but these companies, they're still in incredibly high demand, Caroline.
Yeah, and working on your home is never over, especially if people are stuck in their homes because they can't sell their homes because they're locked into lower mortgage rates or because the inventory is so short, which should be favorable for Home Depot and Lowe's. I will say that Lowe's did say they are encouraged to see better trends in the do-it-yourself
today, which is
due
fine.
to favorable weather now. So they had mentioned that unfavorable
Well, that's because I
weather
jumped in and out of Arrival this morning, but that was a good call because it sell off.
In discretionary spending over the
Happy
near
with that.
term. That being said, just like Home Depot, they're more optimistic for the segment for the industry over
Volume
the
on
longer
SMX.
term, but it's just so many near-term pressures.
Breaking this level, I think,
Headwinds. You talked about the sell-off that they've already seen. Lowe's has been faring a bit better than Home Depot over 2023 and really over the past year. Lowe's is up, as I said, 5% year to date, up 12% over the past year. Home Depot is actually 5% lower in 2023.
Could go to my other
only
account.
up about 4% over the past year. That being said, in terms of the analyst reaction, haven't seen a whole lot based on these tests.
Yeah, you can buy, you can't sell.
Reiterated its outperform rating and $225 price target. I mentioned D.A. Davidson pointing out the
SMX, so I don't think I would want to necessarily hold overnight.
With a $237 price target, so no adjustments. But definitely more bullish on Lowe's than Home Depot. D.A. Davidson is in the neutral camp for Home Depot. But, you know, the median price target for Lowe's has come down a bit over the past month. It was at $235. Now it's at $229. So a little bit of pairing of expectations, but still about 10% upside from current levels. And similar for Home Depot, basically the same amount in terms of percentage of analysts with a buy rating. but about 7.5% upside for Home Depot as opposed to 10% for those longer-term price targets. So not seeing a huge amount. This isn't chip maker status of NVIDIA gains of over 100%, but still see some upside. And we are seeing upside today in terms of share price. As you said, Home Depot share is up about 2.5% today, trading in sympathy with Lowe's, which is up about 3%.
You always have to work on your house. I got a to-do list that I'll probably hit this weekend. I'll probably be making a trip over there.
You walk through the hallway.
You don't own your home like me, and then you call your landlord and tell them to come work on your house.
You walk through your house, you're like, oh, what's that?
Yeah.
Where did that come from?
Never ends. Never ends. All right. Thanks to Caroline Wood, Senior Markets Correspondent here on the network, breaking down the Lowe's story. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Randy, I wanted to get your point.
Barbecue may be coming down here.
We've got the dollar.
RSI divergences might be catching up to it.
Highs. We've got yields on the rise. Also, typically this is causes some concern and maybe a cap to some upside. We've got the S&P 500 up nearly 9% so far this year, despite a pullback and a lot of earnings. Comparables were tough. But when you look at the rally that we've seen
finally coming down, maybe
getting too diverged at this point, because it doesn't seem like the prior headwinds have any effect on these tech stocks at all.
Yeah, it's a fascinating phenomenon when you think about it. If we have a problem with this debt ceiling, which if we have any kind of a default or even a couple of days delay, the bulk of the negatives should be felt in things like the dollar, and yet we have a strengthening dollar. Now, if you're a company who does a lot of stuff overseas, that becomes a problem. We are a net importer as a country as a whole. We end up benefiting from a weaker dollar. But if you're a company who sells a lot of stuff overseas, whether that's products or services, that's something to be concerned about. But this, again, is, I think, another illustration of what we've been talking about for quite a while now, which is that while we hear all of the haunting fears and worries and screaming and
almost 20% on SMX.
Bells, from all the politicians in Washington about this potential default, the markets aren't buying
12% from when you mentioned it here.
I'm surprised by that because you can do some pretty clear parallels to what happened in 2011. The S&P 500 went down over
It's sketchy to trade this one
during a similar period, despite the fact that they actually passed the debt ceiling and let it go up. And S&P downgraded the U.S. That could happen again. Now, Moody's and Fitch did not follow, but the markets did not like that. And yet this time they don't seem to believe that risk is there. So it's a very fascinating scenario, to be quite honest with you.
History, Kevin, shows that we get through this and the market recovers.
What percentage of the time do we get through it?
Every
100% of the time. Remember that. And remember, for our viewers, to break it down real simple, when Donald Trump was president, he raised the debt ceiling 3 times. Every time he had to increase spending, Nancy Pelosi
There's a red candle on barbecue.
Now,
probably move back to VWAP.
Democratic president and a Republican House, and they're going to have to make some. So, do I think it's 100%? 99.5%.
Yeah.
And do I think it'll never happen? No, I don't. We never get to say always or never, but it's really simple for them to come to an agreement, right?
Yeah.
This is not brain surgery for them to do. And if you look back at the history, there's rarely a clean one.
Yeah.
And so this is just part of the process. And
it's a horrible process, by the way.
It's Lucy and Charlie Brown in the football.
Yeah.
And the trading market as we know it, we are Charlie Brown. We have the wrong role in this little sitcom.
They waited too long, and it's coming to fruition. Randy, some of the data that came out today, PMI, composite, a little bit better than expected. Services side, reflective that inflation's not going to come down anytime soon when you've got services inflation and PMI data that's rising at this point. Manufacturing still a little bit lower, but new home sales, pretty decent beat there also.
Yeah, and in fact, look at the builders. If you look at the segment of the market that's doing incredibly well, it's home builders. Pretty shocking, given that we're talking about 30-year interest rates now, somewhere between 6 and 7%. But there's just such huge demand out there, and a lot of it has to do with the fact that, and this is kind of ties into your Home Depot and Lowe's story, that a lot of people don't want to sell because they don't want to mark down their prices. A lot of people can't buy because the mortgage rates are too doggone high. So existing homes are challenged, but the new home sellers, they're actually lowering their prices and they can still, I mean, they're just knocking it out of the ballpark. It's pretty remarkable. One of the concerns I have about this whole debt ceiling debate, kind of going back to the previous topic, is that as you were talking about, we see a sharp run up in not just the NASDAQ, but really across the board in a lot of areas. A lot of times you see this sort of buy the rumor, sell the news impact. And, you know, even though everybody's going to be happy when we don't have to deal with this anymore, and like you, Kevin, I think we're going to get a deal, but we may actually see a little bit of a pullback in the market when it happens, simply because now it's a known quantity. We know what happened. We know what the outcome is, and we've run up into it. Oftentimes when you have a run up into a news event, you will get a little bit of a relief sell off and a little bit of profit taking going on when that occurs. And I think that we could be looking for that sometime very soon.
Maybe that expansion of the markets, if we do get a deal, is relatively short, because it seems like the market's already priced in the deal here, Kev, at this point.
Well, it's certainly not worried about a lack of a deal, or VIX would be higher and bonds would be higher, I think. You know, right? I think that's telling you that they're not worried about it. Could that change on a dime? Of course it could.
Yeah, and Randy, I wanted to get your point here. I saw a note out of J.P. Morgan, global head of macro, quantitative, and derivative strategy, Marko Kolanovic. He came out and basically said, hey, we're telling our clients to go into cash at this point, more into cash, and stay away from equities, because this rally in the S&P 500 is not sustainable. What are your thoughts here on that?
Well, if you say cash, which doesn't pay a whole lot, then I don't think that's a great idea. But I mean, you can put money into money market funds right now that are paying somewhere between 4.5% and 5%. In fact, it makes a lot of sense for most people to up their cash allocation just a little bit. I would say no more than maybe a 5% change, but there's nothing wrong with doing that. I mean, for the first time in over a decade, you actually get paid something on your savings. That's great news for people, on the older half of the demographic, such as some of us on this particular broadcast. That's a good thing. And for people who are retired, who have had their incomes cut dramatically because they did the right things throughout their entire working career, they put away their savings so that they could live on fixed income. And then for the last decade, they got nothing. So I don't think that's necessarily a bad thing. Yeah, if you're concerned about the markets and the volatility and all these things, this is a good time to actually be doing that. When we've talked a lot about things like CD and bond ladders, where put a little money into a 1 year, a 2 year, a 3 year, a 4 year, and a 5 year. And some people will go, well, that doesn't make sense. The short terms are paying better. Why wouldn't I just put it all there? Well, 5 years from now, those short terms may be a lot lower, and then you'll be happy that you locked in some money in the longer term. So that's not technically cash, but it is more of a cash fixed income, and you can lock in some of these rates that are here right now. I'm not in the camp that they're going to cut rates this year, but frankly, next year, I think there's a very good chance we see rates go lower.
Yeah, the market, it's stuck on that, that filter that we're going to get some cuts by the end of the year. And I think every Fed member's come out and said, nah, we don't see cuts at all, but we're going to have to.
Yeah, Randy, do not get us started on interest rates and the penalty that the elderly and savers have paid.
Yes,
yeah,
that's
do not get us. That's a whole, it's own show.
All right, let's take let's take a quick break, guys. When we come back, we're going to talk more earnings. We're going to talk Palo Alto Networks and the cybersecurity.
There's a little move to VWAP for barbecue.
About 37% so far this year. That's a good run.
See if it holds this level.
Coming up next year on Fast Market.
This VWAP happens to be right at that board we have there too, 2146 area. Cool for them. Cool for theme. It's calling a squeeze though. He's income. U.S. Transportation Secretary Buttigieg says there is real concern about interaction between Tesla autopilot and drivers. Graves says until White House understands spending crisis, we're not going to be able to move forward. Repeat bankruptcy filings have occurred at the fastest pace since 2009. Bounce up another high candle. Yeah, back here. Did. Prior resistance. Now support. Selling the market. I am not. I'm not doing market sells. Full flag still. But we're still continuing. Inverted head and shoulders there. Over the 9, bullish MACD. Gap fill at $1.05.
Over 25%, faster than the 10% growth rate for the overall sector at this point. So they seem to be outperforming here. But Kevin makes a good point. Valuation has to come into play at some point.
Yeah, no question. But as you said, this is a company that is not only a leader, but it's also one of the older companies in that business. There are a lot of new cybersecurity companies. This one's been around a long time. They have a pretty large global presence, a little bit more so than many of these others. But you mentioned AI, and I think that's important because all we hear all day, every day from every tech company is AI, and how much it's going to change the world. That's great. Problem is, a lot of those changes are going to be bad. They're going to be negative. It's kind of like social media. For all the positives you can find about social media, there's a whole lot of negatives. So it's a good thing they've got AI and they're going to put it into work because they're going to need it to fight. If you don't think that cybersecurity issues are going to become more problematic when AI being used by bad actors is involved, it's going to get a whole lot worse. So like you said, there's no way I can envision a world anywhere where cybersecurity spend and efforts and involvement by every company isn't going to just continue to grow and grow and grow. Sure, at some point, valuations become a factor in any business. Technology tends to run at pretty high valuations. And as you guys both know, valuations, unfortunately, are not a very good way to decide when to buy and when to sell. When valuations go up, it's a sign of optimism from investors that they think things are going to be better down the road. It's a vote of optimism. It's not a good timing strategy for getting in and out of positions. If people that do that, when things look too expensive, they'll run way further a lot of times. Not always, but it's just one of a number of factors you have to look at. And in and of itself isn't a very good market timing element.
You have an example trade for us here, Randy. We've seen implied volatility. Even though the stock's moved higher, we've seen some implied volatility start to rise into this report.
Yeah. Yeah, I mean, this company, just like any other, when they get close to an earnings report, which is coming out tonight after the close, you see implied volatilities go higher. To get an idea what kind of a strategy we might want to use as an example,
Bounce back up on barbecue.
Just an example. I always look at things like technical support and resistance, what's happened over previous earnings reports. I did see something pretty remarkable. Again, this is no guarantee about the future, but I don't see it very often. I went back and looked at what this company has done on previous earnings reports. And unless I missed it, for 8 consecutive earnings reports, this stock has jumped up on earnings reports. 8 consecutive times in a row. I can't recall the last time I've seen any company have consistent outperformance on earnings report dates like this one. So given that, again, not a recommendation, but if it were your belief that perhaps we would see 9 in a row, you may want to look at something potentially as a bullish strategy. So this particular one, as you said, the implied vol is going higher. It's a relatively expensive stock. If you do the calculation, there's a couple ways of doing it. The implied move on this one is about 12 points. So that's a pretty sizable move to the upside. Obviously, you can use a vertical spread of some sort, but you're going to cap off that upside. You might get a bigger move. In fact, a number of times when this one jumped on earnings, it was way more than 12 points. So a thought is here. There's a strategy called a risk reversal. In some ways, it's sort of viewed similar to what's called a synthetic long. So this is an expensive stock if you didn't want to buy the stock itself, but you wanted to be able to participate to the upside, and you're not as concerned about risks to the downside any more than you would be if you actually owned it. You could create this synthetic long that most of the time is referred to as a risk reversal. So with earnings coming out tonight, I just took a look out to the expirations at the end of this week. So that's the 5/26. Given the expected move, I thought, well, let's go just a little bit out of the money and then a little bit out of the money on the other direction. So you would buy the 195 call that expires at the end of this week and sell the 185 put to fund a portion, not all, but a good portion of the cost of that upside call. The benefit to this versus the verticals is that you've got unlimited upside. Typically, when you buy calls, you have that, but calls are very, very expensive. So one of the ways to offset that cost is to sell an out of the money put to bring in some money to offset that. Now, this one's been moving all over the place today. I've seen it as low as $1.10 debit, as high as maybe almost $3. When I was looking at it, it was about around 150. I think it's around 180 right now. But anyway, let's go to what I was originally looking at. At 150, that would put your break even at a 150 above that upper strike, so about 196.50. The maximum loss until you get down to that put strike, all the way down to 185, is only that 150 that's going to cost you. Once it gets below that, then you have some pretty substantial risk, and you have to be willing to buy the stock or take assignment on the stock if it closes below that 185 put strike at expiration. But your risk is only about $1.50 down to that level. Again, your upside then is unlimited. So if you happen to get lucky and this thing makes a 15, 20, 25 point move to the upside, you've got a pretty substantial potential opportunity there once you cover that $1.50 that it cost you. But the main thing is you've got to be a willing buyer if it does take a downturn and it ends up below that put strike price in order to do this. So it's not a completely risk-defined trade. You've got some room for some downside move, but if it gets really bad, then you're on the hook potentially to buy some expensive stock.
Let's break this down, and you're right. This is a good lesson on price discovery too, because this, as you mentioned, this stock was this price of this combo or risk reversal was trading above 220 just probably about a half hour ago. But let's break it down. Buying the May 26th weekly 195 strike call, selling the 185 strike put to help finance that. You're paying roughly about $1.50 debit, as Randy mentioned, $150 in risk down to 185. On the overall position, if the stock were to somehow go to zero, your risk is down to $18,650 or so on this one. But Kev, this is an aggressive type of strategy where you've got to be comfortable owning the shares. You have that assignment risk on that short put, but you're offsetting some of the costs on the bullish call by selling that neutral to bullish short put.
Yeah, if you bought the 190 call right in the middle and sold the 190 put, it would be equivalent to stock and
I see if it breaks out of the range here.
He's bought an
I would trade it whichever way it breaks.
Sold. He's bought the 195 call, done the 180, and sold the 185 put. That gives him about 77 deltas, and it gives you a little landing area there between 195 and 185 where you don't make a lot of money. You only lose a little bit of money, right? Your risk is very low. So, but it's 77 deltas right now. So it's an aggressive bullish play, almost just slightly less aggressive than just buying the stock or trading something for 100 deltas.
Right. Yeah, you definitely have to keep that in mind. But a good look on that higher implied volatility where you're collecting more option premium on that short put to help finance that bullish call, but definitely a bullish example here. All right, great stuff. Thanks to Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, helping us break down markets and Palo Alto. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for a discussion on Kohl's, which reports earnings tomorrow morning, with the stock down about 10% just this month. Stick around. Fast Markets coming up.
Barbecue back up to the high. Look at that bounce on VWAP. That is neat. Powell arrives at meeting on Capitol Hill with White House Democrats. Is he supposed to be there? Surprise Powell visit? Powell meeting with NDC, not related to debt limit. Oh. Just kicking it with his homies. Oh, new high there on Barbie. Barbecue. 2290, 1010, up 10.10%. I had a couple little false drops there. Little shakeouts. Careful with stop losses on a OTC stock. But held nice support above VWAP. Mostly all day. Red candle. Good volume though, picking up. I like that. Hard way with stop losses. I mean, it's to use them. But yeah, I don't know. Something this spazzy. He's kapow going down from here. 50 calls starting to gain in value. These won't gain in value, I doubt, until they're in the money. Then it'll just be intrinsic. Can't really be traded. we're back on the NASDAQ, then yeah, they'd probably be going.
On a year-over-year basis for the quarter that's about to be reported.
22.90.
Actually, if you look at
10%
the
on
quarter
barbecue.
that's happening right now, that is from April 30th on, that far right bar.
It looks like it's finally going to break the lows.
On a year-over-year basis. So
this
whether
range
they're
that it's in.
reporting or they're giving guidance, we don't think that this is going to be a great report. We're not, we don't think this is going to be the end of the world. It's not terrible, but it's just not the bounce that I think everyone was hoping for. Even when we look at their web data, it's down about 8% on a year-over-year basis. So everything kind of across the board is not great for Kohl's. It's not terrible, but it's just not great. And even when we compare it to some of their competitors, when we stack them up against Target, Dillard's, Nordstrom, Kohl's is the weakest of the four on a year-over-year purchase intent basis. So all in all, I'd say that the data does support this sell-off in this stock. The only silver lining I would say is that expectations have to be really low, given where the stock is. So any kind of surprise to not just the upside, but to the, we're not dead and the bleeding might be stopped kind of side could be seen as positive. We just don't think that's going to be reported. Nothing in our data suggests any kind of big turnaround on this report.
Landon, it's important for a retailer like this to have a lane, have a place, right? Target can say that they're not Walmart. They're different. They're a little higher. They've got some different deals. What is the lane for Kohl's? Because they're not beating Target. They're not beating Nordstrom Rack. Who are they beating? But I'll give you one positive. The CEO and some top executives are buying boatloads of stock down at these levels. So there is some faith in the company's ability to recover.
There's SPY getting back to the lows of the day.
At $19, you can see the ground from here almost. They do have a 10% dividend yield, not guaranteed, as you know.
New low of the day on there on SPY, 416.99.
For all we know, because that doesn't line up with the fundamentals of the company. But is there anything other than the top executives buying some stock? Is there anything positive? Because you're right. The companies that they're competing against, they're not beating them.
Right. I don't have anything positive. I do think that the CEOs and the top executives buying, I think that is really good news. You talk about insider information, they've got the most, and they're allowed to buy. You got to disclose those buys. And if they're buying, I think that really does say a lot. However, if you've got dividend players out there and you're talking about a 10% yield and you can't hold that up and you cut that, there's nothing less attractive to a dividend stock investor than a dividend cut. So if they happen to do that, I think that could be really bad for the stock. We'll see what happens there. But I agree with you on the executives buying stock. I think that's a fantastic sign. But unfortunately, that's all priced in. Everything's priced into it right now. So we know that they're doing that. We know, at Likefolio, we know that all the data kind of looks bad. The consumer macro trends look bad. The company-specific consumer demand looks bad. The company-specific consumer happiness looks bad. So we don't see a lot of positive right now, but maybe they've got a great long-term plan and they think $19 is cheap over the long term. I just don't think it happens on this particular report.
Yeah, March 29th, the CEO bought over $2 million worth of stock on this one. But Landon, I kind of wanted to,
CEO bought over $2 million worth?
It doesn't seem like Kohl's is in a good spot, maybe due to the macro economic environment.
So I don't have margin to get back into my
They don't have the grocery business, right?
Future shorts, which sucks. I didn't realize I wasn't going to be able to.
Is having issues with
looking like a nice top on SPY.
And they don't have
Divergence is playing out.
A big swath of
daily
high-end
candles
stuff.
becoming an inverted hammer.
Basically, one of those retailers that could be the next JCPenney, perhaps, or it's just not a good macro environment for this type of company because there's others out there in this space. Macy's has navigated a little better, right?
Right, I think
they're traded today. All these shorts in the futures for like
I kind of agree with you.
2 weeks. Finally, they're getting the sell off, and
there's certain companies that
I closed them this morning.
In economic upturns and do well in economic downturns, and everybody's kind of got their lane. I just feel like Kohl's might be a little bit lost in the middle right now, and they needed to find
flushing there
a little bit better because. Just like you said, if you've got that customer that
down
downturn in the economy or things tightening up causes them to go to Kohl's less, but then they're not killing it when things are going well. It's just like, where are you exactly? What is your strategy? So I'm sure they're thinking about that a lot. I don't have the answer. I just know that based on our metrics, again, I don't think this is the report where all the bulls can come out and celebrate. So I would be comfortable doing something like selling calls going into this. We don't have a super negative score. We're at -10, which is actually closer to neutral than anything. It's more of I don't think this is it type quarter. I don't think this company's going away. I don't think they're dying. I think probably eventually they will turn around, especially given that insider trading information. But I just don't think this is the quarter that it happens.
Any news on the Sephora? It says they're going to spend another $600 to $650 million to upgrade the partnership with Sephora. That we've always said when covering this stock, that doesn't look like a fit, yet they're adding to it.
Right, it is. I agree. That
Flush on SPY, maybe even
in the no man's land.
Even had a little barbecue pole with it.
It's really strange. Like, you compare that to the Target Ulta, and it's just
The
like,
next
all right, I get it.
back up to
And
its highs almost.
just
18%.
Something isn't clicking with me. Maybe I'm not the target here, but three of us just don't get it. And I've not met anyone who just says, yeah, I get that partnership. So they must be seeing something. In fact, our data is, of all of the data that we've got, the Sephora data is the best when it comes to Kohl's. So maybe that's why they're doing it, but it does look good as far as Sephora goes. But I just don't see how the partnership makes that much sense. But if they're investing more, obviously they do. And again, they have more information than I do.
And that was one of the caveats on that Target report, was that the health and beauty was doing really well. So maybe Sephora can help them out. All right, great stuff. As always, Landon, appreciate the data.
Thank you, guys.
All right, that's Landon Swan, co-founder at Likefolio.
Stop looking at me, Swan.
I mean, the stock has reflected basically what their data's been giving us here, Kev. But you did mention the potential 10% dividend yield on this company. As the stock's fallen,
Not
that
guaranteed.
yield.
We always talk about that. You never know, because lately you've seen a couple companies cut their dividend, but it's there.
Yeah.
It's there right now. So
Intel being one of those.
Yes, exactly right.
So how do you want to look at this?
So what I did was, knowing what we just put out there, knowing that this stock is now just $19.
I'm looking to keep coming down, I think.
It's possible, if you have an interest in this name, and that's a big if, do the covered call. If you look right now, the 3-day, Tom, the 21.5 call, in line with the expected move, is trading almost, Tom, 3 of the value of the stock. That's a big percentage for 3 days of between now and Friday. So you can chip away pretty nicely at the net debit on this name by buying the underlying, selling the 21.5 call, Tom. Of this week, it's trading right now right around $19.
Yeah. So let's look at this covered call or buy right. For every 100 shares of stock you buy, you're selling out of the money call. In this example, selling the May 26th weekly 21.5 strike call. Option market's pricing in about a plus or minus $2 move. That's a big, hefty 10% move in the shares either way. You're paying roughly a debit of about $19 right now. I believe we've got $19.20 up here, but it's a little bit cheaper because the stock has pulled back a little bit. But that takes your break even down to $19 if you pay $19 even for this. So you're buying the shares at a discount with the thought that, hey, if the dividend gets paid out, I get that 10% dividend yield, and then I get yield drawn from
it's still
selling that out of
dropping
the money
down.
call. As you get closer to expiration over the next 3 days, you have that ability to roll or adjust that short call if the market's open, liquidity is provided on that, but you've only got 3 days. So this is the setup as far as a risk profile for the covered call strategy. It's neutral to basically bullish at this point, with the expectations that, hey, if I can continue to create credits by rolling or adjusting that short call, that'll reduce my break even, increase potential profitability.
New CEO was just hired in February, so he's relatively new on the job. And like I said, he's bought some stock.
He's got some work to do.
He's got a little stake.
Yes, that's right. All right, Kev, good look at that cover call strategy as an example there in Kohl's going into earnings. But coming up after the break, we're going to take a look at another stock that has earnings after the close, and that's Toll Brothers, which is up about 26% so far this year ahead of their earnings. And this stock had, along with a lot of the home builders, been rallying just off the 52-week lows or 52-week highs. Fast Market's coming right back.
$39. 15,000 shares on barbecue. I think you'll have 12 and a halves. Highs down 0.% high, about to make a new low. SMX turning out to be a bull flag up here. Down 5. Oh, there on SPY.
positions, and he warned them, talking about how, well, ultimately he said that he's advising that they're going to be hurting, that they did in April, and that he's not going to show his cards. He says he's not a poker player, but he's just going to tell them, as he put it, watch out. So again, kind of calling out the shorts there. I did want to point out that we've got prices at the pump, which have been kind of stable here at 354 for the most part. This is AAA reporting a national average. Definitely not what we're seeing here in Chicago, but that's off of last year's levels. We were this time last year at 459. Keep in mind, well off the highs that we saw last June at just above $5. So again, you can see crude comfortable, much like the indices, kind of in this range that we've been in. But yeah, we're seeing some intraday movement here as well, Tom.
Hey, Ben, we live in Chicago. We have to pay a premium for all the great roads and amenities that we get while driving around this city. So remember that and keep that in mind as I sarcastically joke. All right, thanks to Ben Lichtenstein, host of the Future Show here, bringing us market update. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking home builders, and most of them are just off of 52-week highs. So we've seen a resurgence in some of these builders as maybe their input costs come down, but demand is still robust for housing at this point.
It is. I think the move we've actually had in the last 6 or so months in home builders has really been the fact that cost of goods sold have been decreasing. If you look at lumber prices, copper prices, they've actually been down. I think it's been very accretive for the home builders. But I mean, Toll Brothers is on the higher end of the scale when it comes to the housing that they actually sell, with the higher price points on average over 900,000. But if you look at the estimates, one of the interesting things about Toll Brothers itself is, despite the year-to-date increase of about 27%, they are expecting to demonstrate an earnings per share growth of about 2.2% year over year at $1.89 versus the $1.85 last year. But one of the things I noticed here is that they're expecting sales to be down about 6% at $2.07 billion versus the $2.28 billion last year. I think what we're actually seeing here is probably the manifestation, like I said, of inflation pressures abating, but home prices themselves, depending on the geographical region that you're in, have not necessarily come down across the board. I think Toll Brothers is actually decreasing the total supply of homes that are going to be delivered or effectively sold in terms of contracts down to about 7,700 this year. That's what their backlog is, versus the 10,500 unit deliveries under contract last year. So I think the total sales will be down. Looking at the revenue growth that they're expecting for the quarter year over year, it's expected to be down. But at the same time, gross margins, they are expected to rise to be close to 27% of sales. So it looks like to me that the profitability component of Toll Brothers as a business, I can't speak for the other home builders themselves, has been improving despite maybe affordability for homes still being very challenged because of high interest rates.
When you look at that, that they're at the high end, right? Getting close to $1 million. Are they the consumer that's insulated maybe from some of these inflationary pressures that benefits Toll?
I think so. I think that's one of the reasons why the stock continues to trend higher. One of the things about Toll Brothers is they actually built in escalation clauses. They had them built in for inflationary pressures. On the high end of the housing market, things are still relatively robust outside of some of the larger tech-centric cities like Seattle or maybe San Francisco. I think the total unit deliveries for Toll Brothers is a lot less than, let's say, Lennar or D.R. Horton. So they're able to maintain high price points. And if you're selling fewer units but high price points on a per unit basis, the decrease in lumber prices alone and I think copper prices means that margin enhancement is still intact. I will say this. I think at the end of the day, the home builder move we've actually seen is because of lower inflationary pressures of input costs, but you also have to think about housing as an inflation hedge that still exists, and that actually might be one of the reasons why housing, despite some of the doomsdayers out there, may actually hold up on a nominal basis, because it really serves as an inflation hedge. So I think housing is still in demand despite some affordability challenges, but the affordability challenges are really on the mid to lower end of the scale, and that includes other larger scale home builders like KBH, Lennar, and D.R. Horton versus Toll Brothers.
Not too much pressure on that high-end market, and that's what Toll Brothers is in. All right, thanks to George Tillis, senior markets correspondent here on the network, breaking down Toll Brothers. Kev, I wanted to look at this one. Implied volatility going into earnings, it's elevated, right? But not on a historical basis, just because the comparables from a year ago are pretty high. Option market's pricing in about a $2.90 move either way in this name. So we looked at a strategy that takes advantage of maybe that lower implied volatility. If you think it's going to go back up towards that 52-week highs that it hit just last week, about 67.5. So we looked at just a call vertical in here, Kev, where I'm going to buy something slightly in the money, the 63 strike call, but I went out to the June monthly cycle. So not a pure earnings example here, giving yourself 3.5 weeks until expiration, 24 days, buying the 63 call, and then offsetting some of the costs because maybe you just don't think it's going to explode.
That was me.
Selling the 68 strike call against it. You're paying roughly about a $2.20 debit. There's your risk, $220 per spread. With your break even at 65.20 to the upside, Kev, that's not too far above the current share price on a percentage basis. Your thoughts for a directional bullish call vertical?
Stocks just came off the all-time high, up around 67.5. It sold off, excuse me, the last couple days with probably creeping up interest rates and an overall coming off its highs. But this is a risk-defined trade that needs a move towards $68. Even though this stock has had a great run, Tom, it's
GME down 5.5.
5.6 price earnings ratio. So still incredibly low in terms of the scale for a price earnings ratio. So this is a trade that gives you 24 days to capture that.
Yeah, that's a 52-week high. 75 is all-time high from December of 2021. But home gross margins for this company actually improved, or expected to improve, to about 27% from 26%. So good look at an example trade here in Toll Brothers. If you think it's going to rally, maybe it moves a little bit more than that one standard deviation at a lower cost entry point than maybe just buying the calls outright. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing's coming up.
Next, 9.35. Yeah, not bad. And I am seeing this RSI divergence on barbecue, so wondering if it comes back to the 20-cent level for support. Hasn't been explosive enough to the upside. It's just also building that engulfing candle on the 1 hour. Got 33 minutes for that one to close. And I have a pretty good move up here, or I think it's probably gonna settle lower. Just with that RSI divergence happening. Borrowed shares, yeah. Volatility index up 1.19 points at 18.4, high since May 5th. Strange. Oh yeah, the VIX was rallying with the SPY the other day. We're now red on the day. Oh, some gap up there. And
change, at least that's been the trend, if not a little bit higher. Then you mix in a couple of those big up days consecutively last week. We're essentially still at year-to-date highs, even though the market's down about 0.5% today.
Yeah, and I think that's an important takeaway here because it does feel like you see this red across the board, but it's not enough to chip away from the fact that we're still seeing outsized strength. And I think that's important. I think that narrative oftentimes gets overshadowed here with a lot of pessimism, it feels like, in this market right now.
Yeah, there's things going on, right? We have a Federal Reserve fighting inflation. We have rates off zero for the first time in a long time, Jenny. We have, of course, this debt ceiling overhang, which I think an argument can be made that we're just not towards the end of that deadline quite yet. I know it's really, really quickly approaching, but this is one of those things where in the last hours, if it gets done, it really is no different than if it gets done right now. So the market's going to see how it plays out, anticipating something to get done clearly. Otherwise, we may have a little bit more uncertainty, a little bit more volatility in this market. And of course, you have all these calls for a recession and economic slowdown. We see some signs of that, but
kind of bear flagging.
Signs of the economy driving off a cliff at this point. So the market just looks at all this and says, I see the risks, but I understand them. And the market's gone higher. Basically, it seems like every week this entire year.
Yeah, I think that's a really great summary. And on this show today, we'll be focused on a ton of earnings movers to get through ahead of their earnings reports. We'll kick things off with our upvote and downvote segment. Following that, we'll chart and trade those upvotes. Our FOMO discussion today is all things Broadcom, but also specifically Apple, as Apple did announce striking a multi-year, multi-billion-dollar deal with Broadcom. And then we'll preview VF Corp as well as XPeng earnings. VF is reporting today after the closing bell. XPeng is tomorrow morning. So big earnings heavy show, and I would definitely say the focus overwhelmingly here is retail, Alex.
No doubt, and it's typical. We usually associate the late end of earnings season with retail names, particularly at least here in North America and the U.S., and that's what we're getting. We're getting these sort of, I wouldn't say they're not really second tier, but when you're trying to compare them from a publicly traded standpoint to, like, let's say Apple, I don't think it's a slight in any way to say that they're sort of second tier from a trading interest standpoint, but certainly big publicly traded companies, big retailers have been rolling in all week and will continue to do so. Looking forward to those conversations towards the end, particularly XPeng with George. Get a look overseas, EVs as well. But let's start with upvote, downvote, not endorsements, not recommendations. This one's a recap here to kick things off. And we talked about this one yesterday. We talked about its pretty impressive performance. All looked well. And now I see a red Dick's Sporting Goods.
Yeah, and I have to say that the narrative has completely shifted with its price activity on the session because earlier this morning, shares were higher. So then I think that spoke to a completely different earnings report because they did reaffirm their outlook. They did also beat their first quarter earnings expectations. So it made sense to see shares higher. Now they're lower. I think that you have to dig into the fact that there was little to be excited about in this report.
Yeah, the market sold off last hour.
Adjusted earnings of around $3.40 a
You're
share,
smart.
which did beat estimates. On sales that came in around $2.8
move with the market
billion,
some.
which just slightly beat forecasts. And same-store sales gained about 3.4%, which did come in line with the street's expectations. Now, they maintained this outlook, calling for between $12.90 and $13.80 per share for their fiscal year. This comes pretty much right around the midpoint of what analysts have been calling for at around $13.40 a share. But I think what's commendable here about Dick's Sporting Goods is their ability to keep positive comparable sales even as this overall discretionary space wobbles, especially given the spending environment we have seen following reports like Foot Locker. We saw reports from Home Depot that were lackluster. This name showing that retail is faring this storm quite differently. Not all of these headwinds are weighing on these companies the same, naturally. Now, I also want to point out something I think is really important, that a tax benefit did contribute to their bottom line beat here. So that was seen as, by some analysts I was reading,
at 100,
not a true beat, but I guess it depends on how you
418s?
look at it. Because to me, a beat is
In
a
the
beat
money?
here, but they have really been a consistent winner now since
Oh,
the
calls.
start of the
My bad.
pandemic. As we've seen consumers shift their focus to prioritize some of these outdoor activities or
Is it
their
gonna fall? So you're gonna get calls?
Dick's Sporting Goods, relatively speaking, still up about 5%
Like
on the year. Down about 12% from the month, though, and we're also now seeing its initial strength completely erase on the session. So I'm a little bit confused what to do with the Dick's Sporting Goods because I thought this was a strong report.
Yeah, I think front-loaded some of the selling into this report after some of its peers in the industry not doing as well, things like Foot Locker in particular. And anything that was seen as a disappointment in this report, I think the selling that we had seen in the last couple of weeks maybe reflected that. But as you said, for the most part, Dick's Sporting Goods delivering on what the street expected. That hasn't necessarily
19,
been
yeah,
enough
maybe get
to
the gap fill.
maintain some of these
I have to wait till
upside moves, but given
after
its
hours a
recent
little bit,
sell-off, I
but
think it makes sense.
what
See
happened?
the stock fairly muted. And you know, Jenny, we don't oftentimes revisit kind of trade illustrations because that's not really what they're about. But I think this particular example, we looked at selling a put spread below the market yesterday in Dick's Sporting Goods, just for an example. But the stock's lower, and that spread is still out of the money. So I think it stresses the importance about what high probability neutral to bullish or neutral to bearish strategies afford investors. We were just bullish. Stock's not up. Stock's lower. You would have lost on that particular trade example or those style of trades. The higher probability neutral to bullish put vertical, all things considered, assuming the stock would hold its spot here by the end of the week, that will be an out-of-the-money max profit type of a trade. And so, again, it's not about profit. It's not about loss when we're talking about these examples, but it does show how those probabilities play out. You could be wrong, but still actually be right and profitable.
Yeah, and I think that's a really, really important takeaway here, especially into these earnings example trades, because I do think you need some wiggle room, especially given even the volatility we're seeing on the session today. Our next name here, though, is Urban Outfitters, and I was actually reading an analyst report this morning, Alex, that said this is a teen company, and I was personally offended by this because this is not a teen company. I shop there, so I am not too old to shop at Urban Outfitters. I'm refusing to believe that. But the company did just really highlight the fact that last quarter we saw some strength from them. They reported record revenue, tight margins, and high freight costs that have continued to pressure the company's bottom line, but they've been able to fare the storm quite well. They did say now going forward, they're projecting a solid year in fiscal 2024 with the expectation for solid comparable sales, same-store sales growth for their Anthropologie brand.
Move up here, Moon.
Their namesake brand being Urban Outfitters had a difficult year end in fiscal 2023 with comparable sales falling 10% in their fourth quarter. So while an improvement in supply chain speed time should likely benefit this company into this report, they could see continuous declines in that Urban Outfitters brands. Meanwhile, the Free People brand is also expecting to see sales decline, and as its department store customers continue to really overall struggle. So interesting to just, I think, differentiate these three brands as they are all somewhat similar, but also different in the way that they operate and the different price points they serve for consumers. But this name still up about 12% on the year and actually down about 10% now from the 52-week high. But more notably than that to me is this name is still up almost 40% over the last 12 months.
Yeah, it's had a nice run, but it's been a little bit more of a range-bound type of a trade lately. I'm interested to hear the technical take from Rick. So this is definitely going to be an upvote pre-earnings look. And I like the breakdown you provided of the three kind of separate brands that are under the umbrella that is Urban Outfitters, the publicly traded company that we look at. They are all different. And when you look at three different type of brands, you're going to get a different read-through on kind of what's on trend,
bouncing.
but also how the different consumer is faring based off of their potential demographic or their interests or potentially how expensive some of the prices are for these. So going to say upvote, look forward to that one. Next one here on the list is A&F. This is a throwback kind of a name. Abercrombie & Fitch, but it's certainly tried to make a comeback in the last few years.
This is also not a throwback name for me. Maybe I'm just living in like 2010 here, but Abercrombie & Fitch does report earnings tomorrow morning. Now, for their fiscal first quarter, revenues pegged at around $812 million, which would suggest just an ever so slight decline from the year-ago period on earnings.
Probably up
pegged at a loss of 2 cents per share,
10% on those.
Imply an increase actually of almost 93% on a year-over-year basis. Now, they have been really gaining from momentum in their Abercrombie
pretty far out of the
brand,
money, actually.
as well as some sequential improvement in their Hollister brand. Now, that really takes me back, Alex. I will say this reminds me so much of the mall here. But they've been really working towards rationalizing their store base by reducing some of their dependence on their underperformance tourist-driven locations. So they are trying to now consolidate their locations, revamp in areas where they're seeing success, and I think really following a lot of the fact that cost-cutting measures have affected all of these retailers. But in their last earnings report, they did give some lackluster guidance now into this first quarter. They do expect net sales to be flat year over year at about $813 million. This
60% on a lot of capital is awesome.
On the year is saying Urban Outfitters only up about 0.5%, but also up 64% from their low, but down about 2% now for the month. This name, I will say, from a technical perspective, I'm no technician, but less exciting to look at A&F than, say, an Urban Outfitters.
Yeah, it does seem to have caught a recent down move as well, but you know, it would fit nicely from a conversational, a theme standpoint to say upvote for this, but going to say downvote, of course, an earnings mover as well. Easily could have been an upvote, but the ticker on this next one really tipped
Barbecue
the scales, as far
down
as
a little bit. It's up 6%.
Woof is the ticker here. We're looking at the company Petco. This is, of course, you got a pet, you know Petco, but the stock ticker is all
Give me a bounce with I also up to
be one
BWAP.
of my favorite stock tickers of all time, and I think to diversify our retail conversation, we've got to look at Petco here, and we've heard, you know, time and time again that the retail space for pets is being seen as more resilient, and we're somewhat seeing that in this stock price. I mean, it's up about 8% on the year, still down 30% over the last 12 months, which was the major difference I saw between this name and, say, like an Urban Outfitters. The fact that we are still down about 40% from our high, and on a longer-term picture, this name frankly looks less promising. But last quarter, we did see the fact that they set their full-year guidance below expectations, and they fell pretty substantially post-earnings as a result of that. All in all, their
Engulfing
previous
Kindler on the
quarter's
5-minute
picture looked
on
relatively
SPY.
mixed. They generated sales growth of about 4%, led by their consumable business and their services business, which offset the decline they saw in their supplies and companion animal business. Now, they do see full-year revenue coming in between $6.15 and $6.28 billion, with adjusted earnings forecasted to be down about 21 to 13 cents per share. So we do still see, actually, the analyst community feel relatively strong on this name. They have an average rating of outperform among analysts. But again, this chart to me is so different. We keep talking about the resilient pet space. Well, that doesn't necessarily seem to be the case for a name like Petco or Woof, of course.
Yeah, not Chewy either. So it's definitely been a space that has come well off its highs. Tons of volatility, though, priced in for this one, Jenny. Almost a 9% move being priced in based off of the market maker move. So going to say upvote. We'll see.
You're just getting GME weeklies? Nice.
Because you're right. I mean, it has not been a nice move for the last better part of 2-3 years in any of these pet names post-pandemic. But looking forward to the conversation, Urban Outfitters and Petco.
All things retail. Urban reporting today after the close, then Petco reporting tomorrow morning. We will be diving into the technicals as well as some example trades. Stick around to Next Gen Investing. We'll be right back.
Yeah, the spreads on GME, I don't like the options.
For an experienced investor or just getting started.
A lot of slippage getting in and out. I don't know. The Verge isn't huge, and it's been fighting it all day, so. Sell in today, yeah. I feel like you missed a big part of it with that SPY bounce. But maybe if you get a end of day pump. Nice consolidating up here. Dell Technologies and NVIDIA introduce Project Helix for secure on-premises generative AI. Yeah, I don't think you're wrong. I was saying you could scale out, but kind of hard with weeklies. It's scary because you just get theta decayed, starts consolidating like this, or reverses especially. High little bull flag. 5 minute. They've mixed back to VWAP 417.50 or so. Still got fill up at 418.56. Barbecue 2220 plus 6.7. Broke out of the high. Retested it a couple times, but so far still consolidating above it.
Converging with our upward sloping trend line, coming in right around the $26 level. So we've got, whenever you have two or more indicators or lines or whatever coming together at the same point, it's worth noting. To the upside, we've got to get through our moving averages here. We've got our both of them roughly around the $27 mark, which is also the site of our volume node here, this area of heavy trading. So if we are able to kind of force our way above that, the next stop would be the range highs near 28.50. So in the broader picture, we've got 26 or so and 28.50.
Yeah, and Rick, I think that's important to note that we're seeing some ranges here well defined in our outfitters, because right now it's a little bit all over the place in the retail space. So with that in mind, Alex, walk us through what you're thinking for an example trade, then leading into, I would say, some of the mixed price activity we've seen as of late.
Yeah, we talked about it all the time. You can be bullish, you can be bearish, you can be neutral. And so we're looking at something neutral here. This is a very well-defined trend going sideways. You can kind of see the bottom of that trend around 25.5, the top of it around 29 or so, 28.5. And so looking into leaning around those ranges, structuring an iron condor surrounding that, it's risk defined, but it would capture basically all of that trading activity, assuming that that continues going forward. And so what we're looking at here is just going out to Friday, May 26, selling the 25, 29, strangle, so call and put, and then defining the risk, buying $1.50 wide wings on this one. So $1.50 wide spread, if we could collect 1/3 the width of the strikes, that would be 50 cents. So that would create a 2-to-1 risk reward ratio. You're risking $100 to make 50.
Not a nice day.
It would be 24.50 and 29.50.
May 23rd.
Of that range. Risk profile.
Yeah, it's a nice black dress.
Kind of what we're looking for here.
Barbecue, little green candle there with some volume.
Of potential profitability on that between
48
those
plus
two
8%.
short strikes between 25 and 29. That's your max profit zone. Plateaus off to the credit received. break evens 50 cents away on either side, and then of course it does level off at max loss of $100 if you do see that outsized move outside of those long strikes. That would be above 30.5 to the upside and below 23.5 to the downside. But again, risk defined, theta kind of collecting, that's the center of this, a strategy built around option decay and high volatility around earnings, looking for an underperformance of that expectation, looking for a non-event type of earnings. Look at something like what we saw in Lowe's, for example, post-earnings. That would be a very textbook kind of desired response for this type of a strategy.
Okay, now to shift gears here and look at, of course, Petco with our favorite ticker. And Alex, I know that you know, and I know very well that unfortunately when it comes to your pets, this is one of those costs that you cannot control. And it's also one of those costs that can be much higher than you expect, but you continue to pay it because, I mean, what else can you do? You're sort of stuck with these pets. But that is expected to benefit a name like Petco in a more recessionary environment. But Rick, from a technical front, we're not seeing that really reflective at all. I know we're seeing strength today, but the name's been somewhat disappointing.
It's been a long
afternoon DIY.
For this name,
Another volume candle here on barbecue. Might break out.
Competing patterns for a little bit. First,
Went up on 130 margin calls.
Term, downward sloping, falling wedge type shape.
Guys, for your likes, appreciate it. 37 likes today.
Parallel, and then we also had, coming off the yearly lows here, a rising wedge. We had kind of the opposite in the short term. So both of them have since been broken though. So now we're kind of just waiting for
Not that I know
a move beyond this area that we're stuck in right here. We've got our two shorter term moving averages converging right around the volume profile point of control. That's this thick red line. That's the area of heaviest trading. And once again, we can see we have kind of two phases in this chart, similar to our last one. We had the area up here centered around maybe 16 or so of almost vertical drop off, and then we've consolidated around the $10 mark here. So $10 is really the pivot point for this one. If we can make our way above it, it would look more bullish. If we fall below it, it would look more bearish here. So in terms of our moving averages themselves, our two shorter term ones, mostly sideways once again here. Our longer term one still trending downward here, our purple 250 2-day, but also quite far above price here. It kind of speaks to the strength of this decline that we've seen. And we are down about 41% off those yearly lows, so it's been a notable fall off for this name. Now, in terms of other support and resistance, I already mentioned the $10 level. So to the upside, if we can make our way back and regain some ground here, our best close was right here, and that was around the 1073 mark. Let's call it 11 for the sake of trying to choose a strike price. So we'd want to break above 11 here. And we did make some very slight highs over these previous ones that we saw here, but it hasn't really translated into anything lasting yet. To the downside, around 970 represents the lows that we saw in this recent downward swing. Beyond that, I mean, it would probably be, we'd want to be looking for a retest of this blue trend line, our downward sloping trend line of our large falling wedge shape that we'd want to try to retest after that. So probably 11 to the upside, 950 or so to the downside.
Yeah, Rick, and relatively speaking, this name does trade in a tighter range here, just given its lower price tag at about $10 right now. Market only pricing in about a 70-cent move in either direction, but we will leave it there. Appreciate all the technical insight. Rick Ducat, our chart master. So now looking at this name, Alex, given the fact that we both have pets, we love this ticker, and this name has done a whole lot of nothing as of late. Walk us through what you're thinking, then leaning more bullish in nature today.
Yeah, I mean, the stock's $10, right? So it can only go to zero. That would be theoretically how much downside's left. It's been as high as over 31. So from a pot odds perspective, you could see why traders may look at this one to the upside. That, of course, does not necessarily guarantee that it would go higher. It's been lower than this. It's been down to 759. There are a couple kind of public service announcements around this one, though, of course. First off, no weekly options. It's not the most liquid of names and has that lower price tag. All of that combined, in some ways, does bring more strategies into the table for smaller accounts, but it also takes some of the strategies off the table from liquidity and, of course, expirations, just availability not being there in the sense of weeklies. But what I looked at here was something that was relatively small in terms of notional value at risk on this one, but it does look for an upside move. And so looking at kind of your traditional call calendar, so not week over week, but rather month over month, your two shortest term options available for this ticker centered around that 11 strike. So I chose 11 because, well, one, it was the next strike available to the upside, but also you'll notice that the market maker move would kind of target towards that level. It was upwards of 90 cents earlier. It's a little bit lower than that now, but the stock at about 10.10, targeted around 11. So an upside surprise, possibly getting us up near that level, or at least over the next few weeks. Potentially that could be in the cards. That's how this one benefits, because it's got 25 cents in risk. The way this benefits is the stock grinds its way towards 11, and that price difference between this most short-term option and then the one after that expands. And so that's really what a trader is looking for here, a move towards 11, and then of course an expansion of the price of this spread. That's most likely to, of course, occur if you do get that move towards 11. You can overshoot to the upside clearly. You can also, of course, not actually go higher. The nice thing about this, though, Jenny, as we talked about this, is how customizable it is. If you're more bullish than this, have a different time frame, or even wanted to look at something that was bearish, as long as those strikes are available and those expirations are available, you can maybe use these horizontal calendar spreads to achieve that. And then, of course, it's a lower price name. You know, it brings in potentially stock investment into a name like this if you so choose, and actually believe in it longer term, whatever. But at $10, this one is far more accessible than, let's say, AutoZone that we were looking at yesterday at over $2,600.
No kidding. I'd say by quite a premium there. And of course, we see this name reporting tomorrow morning. Urban will be today after the closing bell. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now coming up next, it's time for FOMO. We are looking at all things Broadcom as well as Apple. As we got reports, the two have struck a multi-billion-dollar deal. We'll discuss that story more coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real
barbecue sauce. 23 cents on there. SPY retesting the lows. 23 cents with volume. Volume did end up playing out. It's SPY coming down. That was a nice sell. Nice sell, Moon Pirate. I don't like your GME buy, but sell on SPY. SPY about to make a new low. New low on the SPY. 415.39 is kind of the next support. Or 20 calls. He's actually holding VWAP. That's not bad. Good with that SPY flush. Or 15.39. Gave back all your profits.
Now that is a 5.5% reduction year over year, but the adjusted earnings per share estimate that was out there was at around $3.48 a share. The company reported adjusted earnings per share coming in at $3.67. Now we are seeing an impact when it comes to lumber deflation, or the price of lumber going down. And it's been very unfavorable when it comes to the company. Also, they did note lower spending in the DIY customer segment here, but they did cut their full year outlook because of some of the softening in prices as well as customer demand, and their comp sales by
maybe setting up an RSI divergence.
over $500 actually dropped about 7.7% year over year. But the key thing about that, 5% of that drop was actually due to lumber prices. The CEO did note that the non-discretionary purchases, such as new appliances to replace broken ones, have actually been a pretty key area of support for the company. But they do look at comp sales actually dropping around 4.3% year over year. Overall, we are seeing the impacts of commodity prices for this stock. Consumer demand is starting to soften here a little bit, but they did provide expectations that I think were realistic for the street, which is why we saw a move to the upside here for the stock. Let's see if it's going to be able to hold for the rest of the session, as we are starting to see a softening in the broader market at this point in time.
Now, Kevin, I think that there's an important comparison always made to Home Depot, and while I know they're different companies, just given, I always think of Home Depot being much larger, but I guess now Lowe's is closing that gap. But also the fact that Lowe's is closing the gap in terms of their margins here with Home Depot. So interesting to see now Home Depot also higher on the session. Is there any concern there that we'll be seeing increased competition for Lowe's, or can they both live in sort of harmony in this space?
They've always been able to live in harmony in this space here because their customer base is actually fairly really different. Even though we might think of it as the same type of company, Home Depot has about 50% of their sales actually coming from home contractors, construction workers, things of that nature, whereas Lowe's is really focusing more on the DIY customer. It's around 75% of their total base. So if we see a situation where individuals want to be able to upgrade their homes and maybe they do not move into new homes, then that would be a benefit for Lowe's. But if we do see this rapid expansion in new home building, and we've actually seen some strength there because the supply is so low, that's where Home Depot can actually benefit. So two different customer segments that we really want to be able to highlight here, so they could both live in this environment. It doesn't look like there's a lot of cross-pollination going from Home Depot to Lowe's, because if you look at their prices themselves for certain products, they're about the same. It's just the target demographic is a little bit different.
Well, it's down 0.8%. It's
because we oftentimes compare the two,
not
but
too
I've
small of
always
a day.
thought of them as sort of their own standalone companies. And there's so many Home Depots, at least in the city and urban areas. There's rarely any Lowe's, so I tend to flock to Home Depot. But I can respect the fact that Lowe's has outperformed Home Depot now on the year, but we will leave it there. Appreciate all the insight.
Cool off on barbecue? Maybe. Not really had any good breaks today. It's just been very mellow. Volume's been pretty solid though.
But
all day.
Specifically in this multi-billion, multi-year deal with Apple. So I think this is both a Broadcom and Apple story, although clearly when looking at both of these prices today, we're seeing more of a reaction in Broadcom shares.
Yeah, I think it makes sense. I mean, Apple basically has been working to eliminate these players with its creation of its own chips. This delays that.
Yeah, we're at 17.5 million already on barbecue. Yesterday it was 24.
So doesn't really change much for Apple. The
day before was 8 and 12, so
exactly, because this is
our
already
volume's
a narrative
up.
we've sort of gotten from Apple.
Good.
That they're going to try to invest in some of these U.S. companies. We actually heard from Apple CEO Tim Cook saying in a release that the agreement is a continuation of their pledge.
It's still pretty early. It's only 1:30.
$430 billion in the U.S. economy.
I could still fill that gap up top.
That began back in 2021. I mean, that number to me was just absolutely outstanding. But he said that Apple will continue to deepen their investments in the U.S., saying they're on track to meet their target through buying from American suppliers, as well as investing in data centers and making capital investments. But of course, they did also say in part of this release, they've reached this multi-year, multi-billion-dollar agreement with Broadcom, through which Broadcom will develop different components for Apple. The components include 5G radio frequency as well as wireless connectivity, which will be built in several U.S. cities. Now, Apple and Broadcom have since had this very long, very important relationship. Back actually in 2020, Broadcom announced the two did reach an agreement to supply Apple with these
You're hyped
wireless
for a bigger day
components
tomorrow,
valued around
Cameron?
$15 billion. But you touched on exactly what I thought was such a good point, Alex, and that's there were these whispers and these rumors among analysts that this deal would be falling out of favor for then Apple to then leave and go obviously in-house. So I think there were the concerns that that would then really affect obviously a name like Broadcom earlier this year. So this is as
I know. You've been hyping Wednesday for
your Broadcom, but I also wonder
a
how much
week.
longer than this lasts, because I think eventually we could see
I just thought you were
Apple
picking a
shift
random
to
day.
be
You still think Wednesday?
entirely, I would say, sort of self-sustaining here. That's the goal, I could imagine. So all of these deals, I always think they're sort of they're
Yeah, RSI divergence on SPY there on the 5 minute.
really look like that
Keep
to me
it
is still the greater question.
leads.
It certainly is, but what does this new deal afford? It gives them time to answer that question, and that's the key, I think, here. And so you're not seeing Broadcom spike to unforeseen levels. It's up 2-3% on some of that uncertainty around this dissipating for now and allowing investors a little bit of clarity on what the next couple of years might look like with that relationship with Apple. But this isn't new business. This is just a continuation of the business that they have, but it's an important relationship for the company. It's going to give them time to answer that question or provide more value add to Apple so they can't be replaced. And that's what they've been doing a really good job of so far is Apple's been wanting to do this, but as they've seen with Qualcomm and others, it's hard to make some of these products and some of these different chips. It wasn't as easy as maybe they thought it was going to be when they set out to do it, and they've struggled a little bit. So maybe ultimately their plan is to make all the component parts they can in-house, save some money, really pump up those margins, but they haven't been able to do it yet.
Right, you have these companies that specialize in these very specific like 5G radio frequencies, for example, where I could imagine that it could eventually weigh on Apple right now when they're trying to trim costs and operate more efficiently, that you have a company that specializes like Broadcom. Why not just sort of stick with what you know here? Now, Apple shares are down about 1% today, still up over 30% for the year and only down about 2% from their high. Broadcom, though, quietly a nice performer on the year, up 24%.
They're down day on IEP.
Up 31% over the last 12 months and only down about 1% from its 52-week high, while up 67% from its 52-week low. So this name has seen some of that strength we talk about in the broad tech space. They do also still have their earnings event on June 1st to look forward to here. So Broadcom seeing a lot of this lift that we're also seeing this summer.
DNA's been rallying.
Today.
Volume the last 2 days.
Enough. I mean, this company is huge. It's almost a $300 billion company. It's essentially at its all-time highs. There's a lot of things that are going really well for Broadcom. AVGO just doesn't really tie in. It just doesn't seem to have the conversation igniting aspects to it. Tesla's talked about all the time, right? Apple's talked about all the time for good reason. But Intel is talked about more than this company. AMD is certainly talked about more than this company, and both those companies are significantly smaller from a market cap standpoint. So I always think of Broadcom as sort of almost forgotten, as crazy as that is to say for a $290 billion company. But from a trading
33% dividend at $25.
This is an optimistic.
I don't know if they'll hold that.
Struck for a company that's done really, really well as you laid out some of those performance.
They might have to cut their divvy.
I looked at a bullish strategy. But it's an expensive stock. It's almost $700 stock. And so with that in mind,
so risky.
I tried to structure something that still tried to kick down that total risk as much as possible while still potentially benefiting from an upside move on this one and not making it so binary of like a $5 move here or there could really be the difference. And so what I wanted to look at here was buying a call condor, going out to June, 690, 700, 725, 730. So what we're really doing is we're buying a $10 wide spread from 690 to 700, and then we want to bring that debit down as much as possible. So we looked at selling the 725, 730 call vertical alongside it. All this whole package at the time was trading for about $4
Companion?
debit.
You guys heard of this?
The stock was trading for about $6.94. So that break even was pretty much in
medical
line
insurance for
with the current
dogs and cats.
stock price. The debit was the risk, so $400. And of course, this is one that eliminates the upside risk theoretically. If it runs all the way through that 730 to the upside, this will just level off for a $100 max profit on this one. It can expand to as much as a $600 max profit if it falls between 700 and 725. So there's a window of like a really large amount of profitability where you can basically go 1.5 times the risk. But there's also a level where if it just shoots to the upside, you do give back some of that, but you still lock in a potential profit Of course, there's risk. If it goes down from here, falls below 690, this one could be at max loss, which is $400.
I was going to say that maybe we don't discuss this name enough because they report sort of on an island. They report not
Yeah,
until
SPY
June.
built
I mean,
the
sort of
our
the
side
end
divergence.
of every earnings cycle, but I guess some of these chip makers are as well. I mean, Nvidia is reporting this week, so
They move up to
really
VWAP,
explain it
maybe
there, but definitely a nice
high of the
move higher
day,
today, and
maybe
definitely
gap
seen
fill.
as positive for this company overall.
Maybe too
That
bullish.
does it for this segment. Now coming up next,
VWAP
we'll
could
look at
be.
what to expect from VF Corp when they report their quarterly update today after the closing bell. Of course, that's the parent company of Vans, the North Face, Timberland, Caroline Woods. We'll discuss that more coming up next.
Caroline. AMC Summer Movie Camp returns with tickets as low as $3. Oh, Tyson shared some DD by U-Life relationship. In-game baby spinoff plus majority bondholder plus majority shareholder. Takeover is a win-win scenario for all stakeholders in the company. Like our potential white knights have been executing on this strategy for a while. Win, 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 win. Op is still suspended. Nat gas is down 3% today. Probably didn't last very long.
Based on share price, investors aren't too confident. As you said, shares down about 17% this month, down about 30% so far this year. Also, I think it'll be important to note what the China recovery is looking like, because we've seen kind of uneven China reopening demand for some retailers. So let's see if that's actually helped or hurt a company like VF Corp.
Yeah, and obviously the big story has been their ability to kind of keep costs down in this more inflationary cost push environment. And one of the things that maybe on the surface could be perceived as a positive, the fact that, let's say, North Face is very seasonal. It's winter related, I would say, and maybe more geographically centered to places like maybe Colorado or the Northeast or a place like Chicago. And then, of course, you think of Vans, you think summertime, California. Like, those two have so much synergy. But the products are so different too, so it probably costs a little bit. There isn't a lot of overlap maybe from a production standpoint. I don't know, maybe I'm overthinking it. What do analysts think here? Because as you guys both mentioned, the stock struggled. It's struggling today. There's not a huge anticipation from the street on a positive report here. Do analysts see opportunity in this sell-off?
Alex, good point about the weather, because you know what? Home Depot and Lowe's pointed to that unseasonably cold, harsh spring weather for reasons why they saw a decline in the do-it-yourself sales. So maybe instead of people going to Home Depot and Lowe's, they were putting on their North Faces and buying more. We'll have to wait and see. In terms of the analyst community, despite the fact that these shares have been really beaten down, the majority of analysts still in the hold camp. They're just to kind of break it down, 9 buy ratings, 12 holds, and 2 sells. So obviously, most kind of in that neutral to cautious camp. The median price target is $26.50, so that would imply about 35% upside from current levels. I will say that last month, Goldman Sachs did decide that it was time to turn bullish, actually double upgraded shares to buy from sell, saying that the stock is near an inflection point and challenges for the stock are increasingly in the rearview mirror. Obviously, we have seen shares sink since then, but this analyst's reasons for optimism: improved inventory management and cost control. We were talking about Vans. She says strength in the product pipeline there, the reopening of the Chinese economy, and a search for a permanent CEO. So Goldman Sachs definitely a bit more bullish. Let's see what they have to say when when the company actually reports earnings. But despite the fact that, you know, you could buy it at a discount right now, as we said, down about 30% year to date, down about 60% over the past year, analysts sticking to the sidelines for the most part.
Yeah, and Caroline, I think it's something you mentioned that's really interesting is the fact that it seems like there's the train of thought this is management's fault almost. It's not that this brand isn't strong. It's that management's not done a great enough job sort of handling some of these headwinds that have weighed on so many retailers. So we'll have to get some clarity on that, of course, in the report today after the closing bell. We'll leave it there. Appreciate it. As always, Caroline Wood, Senior Markets Correspondent for the network. Now, coming up next, last but not least, it's time for Under 30. Today we are looking at XPeng, also ahead of its first quarter update. Tomorrow morning, George Chels will break down what we can expect from that company coming up next.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watchlist, then select Save. The existing list is replaced by the new one. You can also create watchlists from the Market Watch tab. After creating a watchlist, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watchlist. From the Scan tab, right-click a security and then Add to Watchlist. And that's how you make a watchlist. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back. Time for Under 30. Looking at XPeng stock is been a little bit on a bit of a struggle, let's call it, Jenny. But surprisingly, during that struggle, it's still like 50% off its lows.
Yeah, and it's all relative though, because I was thinking the same thing. The way we're still down or up 48% from its low, up 74 or down 74% from its high though, and now down 58% over the last 12 months. So some lackluster performance we've seen continuously in XPeng. But here to tell us more now on that, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, walk us through what you're seeing ahead of their first quarter print, because I do think these EV names, we group them all together, but we do know they can perform quite differently from each other.
Yeah, I mean, we do tend to group things together, but there's quite a divergence between some of the quality names in the auto space, especially the EV space, versus the non-quality names. I'm just going to go out and talk about one that we talked about maybe a couple weeks back, maybe 3 weeks ago, was Li Auto. I mentioned how that company has some tremendous growth and, in fact, is profitable and is expecting profitability on a forward basis. If you look at XPeng, when it comes down to their profitability, they're moving in the wrong direction. Even though the stock is higher by about 48% or so year to date, you got to look at the 52-week trends, and they are still to the downside. Now, the company is expected to report earnings where they're expecting a loss of 33 cents. That's better than last quarter. They lost 37 cents. But if you look at last year, the company lost 27 cents. So you're seeing losses actually move in the wrong direction, worsening here by about 20%. And then if you look at sales, this is where the challenge really lies as well. Last year, the company sold about $1.1 billion worth of EVs. This quarter, they're expecting $712 million, and that's down about 39% year over year. The other thing is sequentially, when you look at sales, they're expected to be down compared to $746 million last quarter. Total deliveries last quarter were down relative to the previous year at 22,500 units. Now this quarter, they set a low bar between 17,000 and 18,000 units. But the challenge for XPeng, I think, is profitability, but also sales growth. You're seeing decelerating sales trends. I think it's a challenge for this particular business. And I think if you look at what they do, they not only sell EVs, but they're in autonomous driving technology, which is a good thing, but that space is becoming quite competitive. The other thing is what types of vehicles do they sell? Well, XPeng actually sells the mid to lower end of the price points for the EV market. Well, if you think about NIO and Tesla and BYD Group, for instance, and maybe Li Auto on the higher end, those four companies are actually moving downscale. In other words,
Shopify down 4% today. Wow.
By selling other vehicle models that are lower price points. So I think that's going to create another competitive challenge for XPeng. And that's, again, something you got to keep in mind with the stock down, like I said, about 58% or so on a 52-week basis.
George, I'm glad you went here in terms of comparison and kind of looking at the space as a whole, because you can look at the numbers, you can look at the trajectories, but I really think it sheds light and puts kind of context around what those numbers are when you consider the trajectory of its peers. We know where Tesla is. Tesla's pulled out in front, and it's really not that close in second place. You can make an argument that it's companies like GM, like Ford, that are going to take it from the legacy approach and shift and protect their market share, or you could make the argument that it's going to be a company like Li Auto that's going to dominate a different market and do so over there, and that's going to be a formidable competitor down the line. But right now, there isn't one. There's a bunch of them trying to find who's second place, but it seems like the last year and a half, because market conditions have changed tremendously, companies that are not profitable, that have had to, leverage, equity markets or leverage debt markets to supply and kind of get themselves to that profitable point. We've really seen this separation of the wheat and the chaff now. Li Auto is doing a lot better than XPeng. And that's not just me saying that, just objective. And so, but XPeng is not alone. I mean, companies like Rivian, companies like Lucid, a lot of these ones are kind of sputtering here. How important is it for EVs as a whole to actually see that maturation and see the winners start to separate themselves, and it's not just this hype trade anymore?
Well, I think it's
The cup and handle
right now.
being built
I mean,
here on Western
for
Digital.
instance, Symbol Ride, Lordstown Motors,
daily.
that's a penny stock now. I think at the end of the day, you have to look at the total addressable market for EVs. It's growing, exponentially, but the challenge is that you're starting to see market shares concentrate and the winners develop versus the losers. I'm not saying XBEV is at risk right now of being a longer-term loser. I'm just trying to be objective here as well. Looking at the market is telling us that there are winners and losers at the very least. And the reason I brought up Li Auto, because we talk about NIO, then XBEV as is sort of a three company oligopoly, but you have to think about BYD Group. That's another large scale volume producer of lower price point based vehicles in China. So the market is eventually going to mature. Generally speaking, you're going to see three major players become the market leaders in respective geographic areas, whether it's United States, looking at Stellantis, Ford, and GM, or whether it's NIO, BYD Group, and Li Auto in China. So you have to think about that. But the profitability challenge is still there for XBEV. But bigger than that is sales. You have to at least show sales growth, and that's not the case with sales expected to be down about 39% year over year.
And if we want to be fair too, George, as I say goodbye here and kind of put a bow on this, we don't even need to call XPeng a loser. Li and Tesla are just the clear winners right now. We'll see if these other companies join that group. But George, let's leave it there. Senior markets correspondent.
I think XBEV might be paying the old coffee man.
Thanks for his analysis.
Let's not call it a loser.
We'll see you tomorrow. The watch
It's not a winner yet. It's a future winner. I like that. We're all future winners if none of us are losers. I think I just want to join Congress and continue my trading career. I think that's what I've been missing. I think it's a lot easier, I'm pretty sure, if you have inside information and you initiate policies that have effects on stocks, and then you just front run. I'm pretty sure like you'd be successful then. Might be my plan. $21-day USD cash management bill. There's 6.2%. Get 6.2% in 21 days? Or what is that? Yeah, I was just reading that, Jay. So many thinking of getting another career. Politics is calling my name. Jay from the Bay, I'll bite.
GameStop surged as much as 8.
Whoa, 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 whoa. Way too loud, Jenny.
Put it in like super hot drop, like brainlet. Like I'm kind of sitting here.
Doctor. Alright, let's see if this divergence plays out on SPY. Got one. Still here. We will. BBY. Wrong with that. Whatever do you mean, Jay from the Bay? MWG, new IPO under $1. Might be next top. And TCGH. What's TCGH doing? That's how you know the market's at the top. We're getting these bots in here. Alright, market's setting up an inverse cup here. Look for a handle. I don't know if it'll fill that gap. Maybe tomorrow. 417.50 probably retest the handle. Figure out how I can trade it. Yeah, pretty good volume on barbecue. Barbecue back to S&P. Was it ever in the S&P?
Palantir's Foundry platform. The fashion house says that they're the first of its kind to do so, to rely on this type of AI tech, and that the flow developed has already allowed them to optimize and speed up the entire purchase process. So it's proving really great to Palantir's clients, Nicole.
Yeah, I mean, they've certainly been celebrating, I'm sure, with these returns. In the meantime, we have the story that has been a lead story, and this is all about Apple and Broadcom. A big chip deal. Tell us about that.
Yes, Apple's extending its chip supply agreement with Broadcom, and this comes as a few things start to happen. The company wants to diversify away from production and other areas within China. It also wants to invest more heavily in the United States, but that didn't come without political pressure to do so. So right now, Broadcom is going to supply Apple with 5G radio frequency components and wireless connectivity components. The 5G chips are going to be built in several manufacturing companies, hubs, I should say, around the United States. And to this point, Apple has deepened its commitment to investing in the United States following that pressure to locate more of its manufacturing in the U.S. It's also been trying to bring more work in-house for a while now. It has chosen other areas, other parts of the world aside from China to develop and to have more production hubs. And Apple, by the way, it has struggled to develop its own cellular modem chips, which are currently supplied by Qualcomm, but so far it's been able to replace Intel as its supplier of its chips for its laptop and desktop computers. Meanwhile, Apple is closing in on the $3 trillion stock market valuation. Shares are up around 32% year to date.
Yep, Apple's market cap is greater than all of United Kingdom stock market. the third biggest in the world.
It's getting a little bit more of a boost these days on AI in the intraday. It might not be doing as well at the moment, but year to date, it is doing pretty well, Nicole.
Oh, Fubo sold off.
Without a doubt. I mean, all you have to do is say AI.
I guess it's still in that range.
Everything soars. I was just thinking about NVIDIA, a new high recently, right? And that's up 111% too. Good to see you, Renita. Thank you so much.
Of course.
Appreciate it. All right, let's move right along here. Anthony Sicaro is with us.
It was in it in 2017, huh?
Financial and Insurance Services. Thank you for being
Crazy.
here. So, what are your thoughts on the big picture here? Of course,
I'm about to make that move back to VWAP.
a story here, but the debt
Maybe.
ceiling's number one.
By end of day, I think.
What's on your mind?
Yeah, inflation is
2 o'clock margin calls. Let's see it, barbecue.
That's what investors are focused on at this point over the long run. The debt ceiling is certainly focused, coming up here soon. Some decisions have to be made. I think all that's priced in. No one I'm talking to is expecting at all that we're going to default on the debt. I don't think anyone's concerned that that's going to happen. It's going to be the same thing that always happens, and that is at the 11th hour they'll come to some final agreement, some conclusion, and then everything will go on as normal, and that's priced into the market. Which essentially means that if we're wrong, and if it turns out that we do default for a day or two, you're going to see a market that's going to decline, and then of course 2 or 3 days later, after they come to their senses and approve everything, the market will just bounce right back. But it's priced in right now. Inflation, though, that's the big issue. The Federal Reserve is talking about pausing. I think there's a 50% chance that they raise interest rates 0.25%. I think it'd be a mistake not to raise interest rates, but I don't think it would be a mistake to pause for one cycle or so before they continue. Inflation's a lagging indicator. It's still at 5%. I think just broke 5% the last CPI reading. And now at this point, let's let it catch up and see what happens. The market is weakening, and that's what they want. They want the economic environment to weaken so that inflation comes down. But they have a long ways to go till they get to their 2% level.
I agree with you, right? That is a long way to go indeed. That being said, I mean, you do have Oppenheimer betting that there will be a 25 basis point hike in June. JP Morgan analyst, one of the top analysts, saying buy gold and cash, and because equities are too flighty. I'm paraphrasing, right? The rally won't last, I think was the phrase. But
I still have margin for futures. I was going to try and get some long contracts here. At RSI divergence. Bullish MACD, green over the 9. At least a few points up here to 416, 417.
6 months, but it's going to depend on the print that we have coming out too. But between now and then, right, it's hard to talk about what they should do until we see some of the next inflation readings and so on. But I don't think waiting 6 months is probably the answer, especially if they reduce it and continue doing 25 bips increases. Until we see the stock market start to falter, until we see inflation really start to come down in a big way, they should still increase. But I think at this point,
just pumping up. It's probably more of that.
Waiting for the new prints to come out, seeing what the results of those are, what's the CPI number, and what's employment look like as well. That's the biggest headwind we have. What's happening with the unemployment front and with the jobs openings? All of that will then determine what they should do in the following cycle. But I think for the next one, I'd be very happy with them pausing.
All right. That being said, what's going on with the debt ceiling, another big story, is the uncertainty that's looming, but the fact that there's a lot of angst surrounding this, and it's certainly not a sure thing. While we say and hear that they're not going to default, and that would be ideal, there's still always a chance of some muddy waters or something. And so with that, yields have been on the rise. I mean, even today, short-term yields, but you are seeing yields on the rise and uncertainties looming. What are your thoughts here?
Yeah, well, I mean, we still have an inverted yield curve, right? The inverted yield curve tells us it's been a pretty good indicator in the past of the fact that we're going to have a recession. I think across the board, I think most of the analysts and most economists that I'm speaking with, that I'm listening to, are believing that there is going to be a recession. The question is whether it's going to be mild and short, or whether it's going to be deep and long, and when is it going to happen? I've heard everything from the last part of 2023 to the sometime in 2024. And I tend to think if we're going to have a recession, it'll be probably in 2024, but we don't know. But here's the thing. The Federal Reserve is saying that they want to avoid a recession. Everyone wants to avoid that R word. The reality, though, is we want economic growth to slow down, but we don't want a recession. Why don't we want a recession? We really do want a recession because that's what's going to bring inflation down. We need unemployment to go up. We need those numbers to go up. We need the jobs openings to come down. And yet everyone's afraid of the R word. And I think the reason is because then it becomes systemic. It becomes the negative wealth effect. People then, if we're going into a recession, oh my gosh, I got to sell, and they're worried about it triggering a landslide. But the reality is we really want a recession. That would not hurt. That would help at this point. But that's the opposite of what you're hearing out there.
I see. So regarding a recession, you've given us your thoughts there. We are seeing some jump. While manufacturing is sort of peering back, you are still seeing demand for services. And I mean, you can't say that the economy is stumbling too much, right? I mean, the picture for jobs is very tight. You have a tight labor market. We'll wait to
Arrival is really holding up well
this week. That's certainly the Fed's preferred method and metric, right?
Yeah, absolutely. And you're right that the consumer is
What economic depression?
to a recession at this point because the consumer is still strong. They're starting to weaken, but they still have money saved up from COVID. There's still a labor market that's that employees can go out and kind of demand what they want with 1.7 jobs available per worker rather. That number's come down. In the end of 2022, it was almost 2 to 1. So the fact that the jobs numbers are coming down, the fact that wages are coming down a little bit. They haven't kept pace with inflation. That's all good, but it's not enough. The employee is still strong. The job seekers still have work out there, still plenty of jobs, and they still have money saved up. That's the biggest headwind to inflation. We have to see that unemployment number go up. I've talked to experts and heard of experts that are talking about it's got to go from 6 to 7% or from up to 6 or 7%. I'm in that camp. I think unemployment's got to get to at least between 6 and 7 for that job market to crack and for inflation to come down. The good news is it's already starting to crack. We have to let it catch up, and that's why I think the Federal Reserve should just hold off for one cycle. Let's see what happens.
And so tell me about your thoughts and what you're recommending for clients, or on the other hand, what you're warning. I see some warnings here too.
Yeah, absolutely. So,
I'm coming down here a little bit.
With people that are retired or close to retirement, that's our market. And I'm of the belief that if you're invested in such a way to where whatever happens to the market is going to affect your
You can
future,
back your losses on it.
You can retire, whether you can do the things that you want to
Really?
do in retirement, you're invested wrong. There are a lot of ways to be able to invest.
The crack market.
Accomplish your
The
retirement.
crack the market.
No matter what happens. If you're younger and you've got 20, 30 years ahead, you're dollar cost averaging, I don't care what happens in the short run. I don't care if there's a recession.
Absolutely,
Keep
crack is
dollar cost
tradable.
averaging. But if you're retired or close to retirement and we have a crash because things get out of control, because we're wrong about the debt ceiling, because of the inflation doesn't come down, interest rates stay up, any number of reasons why the market could falter from here. If that happens and now you can't retire, that's wrong. You need to change so that you can retire no matter what. And I'm telling our clients to focus on income, focus on things that are going to pay you interest and dividends, because you can count on interest and dividends. You can't count on share price. You can't count on anything other than interest and dividends. That should be your worst case scenario. Invest for income, live off the income, leave your principal alone.
Right, and that's what they used to do way back when they wanted to invest in certainty rather than growth or, questionable growth. So I see where you're coming from. It's great to see you. Anthony Sicaro, thank you. President, Providence Financial and Insurance Services. Thanks. Okay, later this hour, we're welcoming the CEO of Celsius, those energy drinks and more. Want to talk about the sales that they've been seeing surging, a deal with PepsiCo as well. Lots to discuss there. Also, we'll talk hedging strategies for the
PacWest going down. Just trying to get out of my cash good puts on this thing all day.
Diving into those retail earnings.
Starting to fill the gap here.
Is it positioned well? What names are best positioned? Up next, Technical Tuesday. Kevin Horner will break down some trends in Ford, Boeing. Coming up.
Just looked like it made its run and starting to reject this support up here. Short-term pullback, maybe a few days. I don't know though. I guess it's the only gap to fill. Oh, never mind. SPY looks like it wants to flush now. Wow. Maybe a third RSI divergence? Barbecue, out of volume. Starting to gap around. Double bottom there on SPY. On the support. Laser. Final low of the day there. See if it flushes or if we wick out of here. Little flushy, 415. Up if you like Jenny. Yeah, it's not looking like it's gonna bounce there. Maybe a third RSI divergence. There's one, there's two, this might be three. Unless it really flushes down like 413. Get a lower RSI for making that divergence. Laser's overvalued, man.
Now, if we don't hold 41, we're going to start targeting a level below the 50-day, and it's going to bring us to the same lows we've seen since April, right around the neighborhood
ENA's
of
chart looks nice.
4,040 to 4,050. So what we need to do is at least gain a little comfort from the potential for a little drawdown here, and make sure that you're holding the proper position size as it
IEP
relates
still
to
flushing,
S&P
man.
500, either
Down
as an exchange traded
6%.
fund as an example, or
I want
anything
cash
like
trade
that.
puts
You
on
want
this
to make
thing,
sure
but
you're
I'm
properly
gonna be
holding
patient.
what you're comfortable. That
So far,
could
just
take
long
it down
puts.
to say 4,100,
Not
maybe
short
as
puts are
low
the
as
way.
4,040 or so. If we do get a little bit of a sell here, now that we kind of broke down a little, we'll see if this has got real legs, Nicole.
All right, so we'll be watching that 50-day, as you said, and that 4,100 line as well. Let's turn our attention over to Ford Motor Company. We know furthering its goals in the world of EV. Tell me a little bit about what you're looking for when it comes to the chart.
Well, Nicole, I think it's important that we try to assign some understanding of why a stock might have rallied as Ford did in May of 2021 into the close of 21, early 2022. We had the announcement that they were going to be developing and selling, of course, the full-size Ford F-150 Lightning pickup truck. It's got a lot of really great ideas behind it, of course, and the market loved it initially. And the reason I'm bringing it up, everybody, is because when we look at the chart of Ford, what we notice is a fantastic move from $11 all the way up to 25 and change. But since then, we have gone on a bit of an aggressive drawdown here. So we have seen more than a 50% move from our peak. We're now back at that same $11 area that we were at before this announcement came out. So essentially what you had was enthusiasm into the rally, take us to new highs, now a drawdown and some validation of that same support, Nicole, which means if nothing else, bullish investors have an opportunity to position themselves on that side with proper risk versus reward. Now, if you're patient, you might wait for the downtrend line to be broken here. You don't have to. You can certainly start positioning and using tight stops, for example,
Coming down more.
support range.
413, 44 is the next support.
You got risk versus reward in your favor. If you've been waiting on an opportunity to invest in Ford, you look at this in a 2-year window. It's a strong area of support. So moves through here, Nicole, to the downside could get momentum moves. So you do need to be disciplined in an exit strategy on the long side.
Yeah, and so while the chart goes from a high to a low for Ford, Boeing brings us back to a chart that's more similar to that of the S&P, right? More in that channel or range.
Like
yeah, very much
413,
so.
44 might be support.
For basically all of
See if you get a bounce.
Now,
Take a little handle on this inverse cup and handle.
but we are right smack dab in the middle of this fantastic
Bounce might only be up back up to 415.39.
Up to about 216 or so,
or
and here we are at
204
approximately. So right in the middle of it. I'm bringing this one up because it belongs on a watch list, most likely, Nicole, because the proper risk versus reward here can't be validated.
Down over a percent there.
To get
wow.
up to, or risking say 12 to make it to the top of the range, and you may be risking 12 to the bottom of the range. That's a 1-to-1
That's all I needed on my futures.
We don't want to step into those simply because we want to give ourselves an out, so to speak. We want to have better opportunities for profit versus loss, and the more opportunities we take with a risk of say $1 to make $3, the less frequently we need to be accurate in our trading. So it just gets back to trading 101, Nicole, about trying to locate proper risk management techniques. We're not quite there yet, but I want to point out two things of note. Yes, we've been rangy. The reason rangy is so important is we made a tremendous move. This stock was up about 60 plus 70% from October of last year to when we initially peaked in late December, early January. And so sideways is perfectly within reason, Nicole. There's opportunity potentially here. You might want to keep an eye on the entirety of the airline segment as
flushing.
a leadership viewpoint. If we can get leadership from the group and break out, we can certainly see Boeing participating. The second thing of note is that on-balance volume line down below, Nicole. It is showing strength as we've gone sideways. A lot of traders might look at that and say we're making highs in on-balance volume while we've gone sideways. They might expect a breakout rather than a break down with that scenario. So it does exist, it's possible, but it looks more like a watch list position perhaps at this point in time.
right, Kevin Horner, thank you for all of that of Charles Schwab. Appreciate it. Thanks, Kevin.
Thank you, Nicole.
Coming up next, well, energy, we're watching those energy drinks, right? Celsius. John Fieldley will be with us. He's the CEO, a new deal and partner.
There's the bounce, real close to my level. It's 413.68. The low there. Here's your bounce off the lows on Les Spy. See what kind of handle we can form. This inverted cup and handle. We've got an hour and a half left. Barbecue hanging out at the highs of the day. There's some volume. 10%, 22.88.
An Oasis 5
They
flavor,
just,
which is
I'm pretty sure TD must be sponsored by Celsius.
Target and a variety of other stores, and just
Like an energy drink I've never seen or tried, and it's on here often.
that consumers are resonating with.
Yeah, I mean, there's no doubt innovation and new products always get the buzz going, and you certainly have the buzz happening, so those sound great. I'd love to try them. That being said, tell me more about this partnership, because it's my understanding with the U.S. distribution footprint that you've gotten with Pepsi that in fact now you may have expansion on this partnership even globally. Is that something you've been talking with them? What would it do for you? Would that be beneficial to both companies? What's the talk there?
Yeah, I think that's a huge unlock. I mean, right now we're focused on North America. We're a strong number 3 player in the energy category right now. And the next 2 brands ahead of us is Monster and Red Bull. We're gaining great steam, so lots of opportunity, and we're just getting started in the
Barbecue
partnership.
1048.
So we're really focused on North America and driving sales
The ego
in the
on you.
category with Celsius. But to your point, we're our partners, national and global.
Testing
So,
1, 2.
they're in
Yes.
over 126 countries
Well done,
around the
Ace.
world.
Congratulations.
We do see a lot of great
For
opportunities.
3 months
We're
of
having
membership.
discussions with them about
Thank you.
opportunities in other markets,
You just
which we
paused
anticipate
barbecue
will
to make a
likely
new high in the
announce
day.
a few markets in the coming quarters as we start to plan for
Well done.
2024. But right now, the
2310,
teams are really focused on
11%
North
on
America
barbecue.
with that mindset to continue and grow and scale internationally.
Right. I mean, the stock just hit a
2340. We're getting there. Man, is it slow.
As you said, you're in the top
But we're
3
getting
now.
there.
I mean, why wouldn't you rush it? I know you're really focused on North America, but what's holding you back from saying, let's get this going? Let's do some tests abroad with Pepsi.
Well, we're in a variety of markets currently, not with Pepsi, but we're in Sweden and Finland. We just recently
People nervous on his
partnered
Discord.
in South Korea,
Nice.
Taiwan, as well as other markets like Malaysia. So we're laying some groundwork and some seeds. We have those opportunities, but it's
You can't
timing
buy any
and
more DIY?
sequencing. We want to make sure when we enter a new market, we enter it successfully.
There it is.
We have the right commercialization
2329.
plan put in place, the right
The first
right
resistance up here at
strategy as well. So
2340.
that's going to take a little bit of time to put together. We want to make sure we're doing it right. We also want to make sure we continue to grow the company profitably. And
After
that's
that,
been
yeah, I
key
think
to
we're
our
at 30
overall
cents,
success
so-
over the last- I've been in the company now 12
Today,
years.
tomorrow.
And you're seeing that in our financial statements. We put up good
Next
EBITDA
day.
numbers and good gross profits. So we're really a disciplined company driving execution. So we see the opportunity. I agree with you. Lots of opportunity internationally. But we want to make sure we're doing it right when we enter the market to have the best ability for success.
Yeah, understood. And that being said, as we look at your company and see all the growth projections, are you seeing any headwinds or anything else like, the foreign exchange rates or rising rates for borrowing or things like that, head count, supply chain, that all CEOs are sort of facing?
229 it hit.
Yeah, I mean, we're like everyone else in the environment we're operating in. In the quarter, we saw some headwinds really in the freight area. We're hoping those ease up, maybe with some oil pricing coming down. Keeping an eye on that. That's a big cost for us. We move a lot of freight. I think, when you look at labor, we are hiring a lot of team members as we grow our marketing team and sales team, operations team, and back office. So really looking for great talent as well to join the company.
2329.
That's been somewhat difficult in the current environment. And then when you look at, inflation as well, I think that's really gets us concerned in commodity prices. One thing we do think, just due to Celsius, we're part of a daily routine and a daily lifestyle. We're very optimistic that if you're going to cut Celsius, as we all look to maybe tighten the belt a little bit, we think there's other areas within your budget that you'll cut first before you cut your Celsius out of your daily routine. So, we feel we're lower on the cut list as we all prepare, or somewhat, everyone's talking about this recession. You're starting to hear retailers within Best Buy, and you look at Home Depot and a variety of Target recently reported. So it does seem like there's some rumblings out there. We're keeping a close eye on it, and we'll have to navigate that accordingly.
All right. Well, that's some good advice to folks.
Rivals now red on the
Cut
day.
something else out. Don't cut Celsius because people
GME
love
down
it.
5%.
While you're drinking it on the show every time, which I find actually it's endearing. Thank you so much. It's wonderful to see you. Best of luck. You're doing
I
great.
see
You and your
DIY.
team, a great quarter.
You can buy more, you just have to do it with a different account.
Thank you.
Cheers. Thank you.
Cheers. John Feely, CEO of Celsius. All right, still ahead in the second half of our show, we have some hedge options to consider while the debt ceiling debate unfolds. And
So we didn't get a third divergence because this made that new low. Remember how I was saying if it really flushes and we won't get a divergence, maybe to that 413, and it did. Made it to the 413.68, and we actually have a lower RSI now. So, not to mean it can't move up, but that's not the signal for it, at least. Not to me. Would be a nice problem to have, Dink. Calling some Celsius. Coming down some more here. $330 on barbecue, that's 12%. Breaks here, might get a pretty big move up. Liechtenstein.
Which, well, just traded down to the lows here, and here you can see the chart, 41.42.
Yeah, let's get a little 30-cent rip today.
Into the late day trade, we saw the Dow to 33,150. Here you can take a look. The NASDAQ came off. You mentioned the tech-heavy index coming under pressure today, percentage-wise leading down over 1.25% here as we speak. And you pointed to debt ceiling discussions ongoing without any real end result as of yet. That's sparking some of the uncertainty, some of the weakness we're seeing here today, and I also think this is as well. Look at the run-up we've seen in rates here today. I'm looking at the short end, the 2-year, because it's really attracting some attention more closely tied to the Fed and the decision-making process. just over the last couple weeks here, Nicole, from 3.6 all the way back up to 4.3. Now, the reason I bring this to your attention is because this run up we're seeing up and through 4.25 through 4.3. Well, last time this happened, we're talking back in the fall of
it's so refreshing not being tied to the SPY.
Which was selling off back down below 12,000. Today, currently trading at 13,700. Let's just take a look at it again here right now. 13,672. So again, something's a little bit out of whack here. Either investors, traders have started to accept what we're seeing in terms of rates on the rise here, and it's not necessarily a factor or a consideration for tech shares, or the tech's overdone it to the upside possibly. Look at the ES working its way back down to the 50-day moving average, well above the 200 still. And I just wanted to point to the Russell, some of the strength we've seen over the last couple days. Again, reversing that today now, down 0.25%, but you can see how we're still holding above the 50-day moving average in small caps as well. So that's a reflection of some of those bank concerns easing, but lots for investors to focus on here. Still very much range bound on the bigger picture, but yeah, we're seeing some interesting
Bear flagging. Flagging at the lows, so
we'll continue to watch that and
break through here.
levels. That being said, what's going on in oil as we see it at some new recent highs?
Barbecue breaking out, breaking that level 2349. There it is.
WTI up to
234 was kind of my line. There's 2349, almost 13%.
We've given back some of the gains that we saw today, but there's lots of bullish factors out there in terms of crude, and a big part of the run up that you can see here on the 1-minute candles. Well, there you can see where we are right now, up over 1% here. The move we saw came in reaction to comments from the Saudi oil minister. He was talking about basically
238. There now, it's starting to wake up,
how they've been scrutinized,
breaking that resistance.
over the past 6-7 months, OPEC's
14%.
And a regulatory to be a responsible regulatory institution. Now, he also warned some of the shorts out there. He said he doesn't have to show his cards.
Kettle.
He said he's not a poker player.
For a cup I hadn't seen.
Warn them, watch out, and that's very bullish here. We also have seen the dollar.
All right, 24 cents.
Hanging out around 103.38 right now, but well off the highs that we saw last year. That's been sort of feeding into this bullish narrative as well here. So comments and, well, taking a look here as we're inching our way back up to the 50-day moving average here, Nicole. I did want to point out the price of the pump here, hanging out around 345.
Nice, look at that breakout.
Where we were this time last year. So that's
nice to see on the day that you can really see how big of a level this is.
Right, a reflection of what we're
oh,
seeing
it's just
some of those
really the gap fills next.
But again,
24.20, it's up 16.
On sentiment here this morning, today.
Right, understood. All right, thank you so much, Ben Lichtenstein.
Lichtenstein.
Now for a look at the bigger picture, joining me right now here.
Nice 5-minute candle. Got some volume there too.
Sound Planning Group. Thank you for being here.
Pleasure to be with you.
You know, I think
24.40, 17.3.
Chasing the rally.
Still an hour and 15 minutes.
Even JP Morgan came out and sort of
Multi tweet. Oh my gosh.
Warning. And you, by the way, you're similar to what something they like too. You were saying get gold, you know, in gold and cash because the rally may not last. Right?
Look at that volume.
What are you thinking here?
Oh yeah, that breakout volume's big.
Here's a couple things that are real. One, we just ended the longest bull market in the world's history.
Companies, that's right, the shareholders do.
Fed just flipped interest rates. We now have the fastest
I'm still not thinking it's from him.
In the history of the United States, and that really just flipped the market upside down. So everything's kind of in turmoil right now. We've rallied 3 times.
24.60. I mean, this is a technical move here. Like,
you know,
been waiting for this break.
Price that in. I think that we're going to be higher for longer, and because this recession is showing up likely within the next quarter here. I don't know that we're going to get to this point of pause and pivot.
24.51.
Pretty challenging for those that have this gold.
Another 20% for 30 cents.
So yeah, I think that that we're going to see a lot more volatility in the future, and that we need to be
18%.
Really considering, you know, what are our options and ideas.
I mean, gone are the days of the secular bull market and taking a pause.
Well, I'm holding until tomorrow, regardless, I guess. So.
Time to be a little more cautious. As a matter of fact, as everybody's waiting for a recession, you've had some advice for that as well. I mean, what are your thoughts on a recession and how to hedge against the possibility of a pullback?
Look at that. That's the biggest 5-minute volume pedal day. 1.1 million.
Risk tolerance for a minute, and so those who got stock and risk on assets, and then we got more I know so money, which are our bonds or fixed assets. Now, here's one big challenge for those, specifically because my firm works with those that are entering or nearing retirement.
Right.
A lot of them are just loading up on bonds right now. And I just want to put a big caution on that just for a second to consider. And that is one of the big issues right now with the banks is that interest rates rose so much the value of those bonds went down. And so it's the seesaw effect. And that's just one of 5 ways that bonds can lose money. Another way that bonds can lose money is, well, it's kind of the same thing that happened in 2011 in the United States. We were
After the
AAA
first big
rated,
squeeze.
went to AA rated. There's a lot of corporations today that need more money.
I mean, if barbecue picks up like $10, that'll be a much bigger percent gain than GME ever did.
And working out. So let's say that they get a downgrade, that could be
Considering
a
it,
big
like,
challenge here
I don't even know, maybe 5%.
They're looking at this. So how do we hedge today? Simplest answer that I have
Let's
for
look
you
at those
is that
percentages.
There's never been a better time to own something called a growth.
I think SPY's about ready to make its move up.
It's an insurance product. Now these give us none of the downside.
Keep leaving on.
Reasonable rates of return on the upside of an
Getting.
index.
Yeah,
And,
got up
and
to
they
its
can work out
resistance
really
and
well,
broke
but
through
more
it.
importantly,
At
they give us
2340
some
was
liquidity that when
the level, and
does go on sale, that we can dollar cost
busted
average
through it with
back in.
volume.
And so I love that opportunity. I love that play, especially for those that are no longer contributing to their accounts.
Right. Okay. So that makes sense because, as you said, everybody's been piling in to T-bills. T-bills. You also were looking at some of the
T-bills.
precious metals,
I've been pounding a T-bill, you know what I mean?
Gold and
Love
silver
that T-bill.
Now, the reason why I specifically emphasize
With
silver
3,300%,
is that we're looking at an 83
give or take, that's
to
like
1
3.5
ratio.
up to
Give me
120.
83 silver for every 1 ounce of gold. I'll do that deal all day. And the reason behind it is 9 ounces of silver can be mined for every 1 ounce of gold. And so that's an incredible arbitrage with the numbers right there. So I think that that's a really important idea for people to be paying attention to.
Right.
Got too many lines down here.
Understood. In the meantime, as we talk about some of the wild cards and what's going on here, debt ceiling, you're less worried about the debt ceiling. You really feel that they'll get that done.
Well, I do think they're going to get it done, but it comes down to can
Yeah.
they get spending cuts and not
It's
just
silly.
tax
3,300% is
increases.
nothing on
We've
this
got enough
thing.
tax revenue coming in right now. In fact, record tax revenue.
Right.
So I think that they will get something done.
The reason why
but
GME was so
it
unique,
could be a
or
hiccup
one
next
reason
week
was
if they don't.
because of its market
You
cap.
don't want to see it just.
It was starting at a low level, but not like crazy low.
That being said, talk about some of the
Where
other things that
OTC
you're
stocks still
into,
have,
some of the companies
you know,
that are
multiple
up
1,000%
against the
moves, and it's
wall.
not a
You
big
even
deal
said
because the market cap is not, it's still very small.
likely for a lot of
So,
companies. We saw that during
as far as
COVID.
percentage
We saw
though,
that even the ones that got
look at
back
that.
on their
From
feet,
bottom
they
to
had the
top,
Omicron variant and couldn't do it.
$3,300 is only, what, $1.7.
And it's over.
It'll be from GME's bottom to the very top in January.
Small and local regional banks.
So,
Okay, 70%
now if we get crazy
of all
market cap like
lending to
GME did
corporations, whether
at the
it's
peak,
real estate, which office space is in big
the
trouble,
percentage gain is
or
going to
those
be way
specific
bigger.
Organizations, they're going to have a hard time finding banks to lend to them on a 10-to-1 basis when all
But
those
I'm
banks
not,
no
I don't
longer
think
have
we'll get that big
capital
of a market
because everyone
cap.
put them into the too big
I don't know.
to fail banks.
Maybe
or
over a
they
longer period of
put them
time,
into
because
treasuries.
we
And
probably
so,
have to move over back
I
over to the
think a lot of
NASDAQ,
Chapter 11s could be
and then we'd have to get
unfolding over the
options
next few
involved.
years, and I don't think that this is just going to be some quick downturn
But
recession.
maybe
I think
not.
it's gonna
I don't know.
actually
That'd be pretty
unfold
sick to
as a
do it all in
rolling
OTC.
recession over time.
So does that fit into your mantra as to why now is not a good time to buy a house?
It's near 40, 50.
So the idea about a house is,
Sure,
date
yeah.
the rate,
I don't
marry
think
the
it'll hit there
house is the
today.
thing that a lot of realtors are saying. So marry the
It's
house.
10 to
okay.
3.
Well, date the rate. Yeah, rates will come down. But what if the price of the house also comes down?
Right.
Then you go to refi.
If you have a recession or that
I think
kind of
30 cents will be a pretty big resistance. But this, I mean, this was a big resistance. This 2340, that was a serious support from back there that bounced off heavy. So we could use that as support. That would be awesome.
That's not going to work out. A lot of people going in interest-only loans right now. Big concerns about that. I see and expect a big recession or a pullback here on
I think we'd definitely see a dollar again. Before any news or speculation on news, I'm not so sure about that.
And that's the concern. I mean, there's been a lot of talk about commercial real estate.
But if there's a buyer, I think,
it's really, really a concern.
if it stays publicly traded, or even if it gets bought to go private, I think a dollar would be pretty easily fair value. I mean, it's kind of hard to know if the float is 4.65 million. You know, if it's double that, then that's double that price, basically.
All at once at a time when credit crunches are
WG 16 months ago, biggest drop in IPO history.
What are your thoughts on cash at this point?
205 shares, you're already seeing $1.
Out of cash and back in because people kind of just don't
think
know when to get back in. So dollar cost
those trades are stupid actually because of your fees to get in and out.
No.
You're paying $7 a share.
CEO of
5 to 7 depending on your brokerage.
Still ahead, we're going to take a look at
There's no reason to trade it with small amount, like a tiny amount.
But what was within that report that we need to focus on? We'll discuss some of the trends that we're seeing in the retail sector coming up.
You can't look at the shares borrowed like 1-to-1 and so literal like that. GME would pump when all the shares were available here. It also pumped when they pulled all of them and there were none available. It's not like you just say, oh, they borrowed them so it's going to go down, or they're available so it's going to go up. It doesn't really work like that. The best thing we have on here is the fee. Sometimes we could track the rising fee with pump coming, the rising fee in correlation with the available shares, but yeah, just you can't. Go barbecue and cheese for a wedding. Is it a barbecue wedding? I mean, who doesn't like barbecue at a wedding? Free trades on the OTC? How do you do it? What brokerage are you using, Dink? You like secretly a hedge fund? IP bouncing a little bit, yeah. Some people were short lower than 20 cents. Really? I don't know of anybody. And the notion of me even trying to short it, I was almost booed off stage and out of chats. Fidelity. I pay a fee on Fidelity. See. I pay. $6.95 per OTC trade. That's no, that's TD. Fidelities. That suck for me. Yeah, I pay I'm between like $6 and like for $5 and $7 depending on which brokerage. I've not looked at my statements on Fidelity though. I'm pretty sure I pay a fee on there. There's your move up on SPY. Ooh, happy edgy. Yeah, a little bull flag on barbecue. Up above that breakout. I like to see it use this as support. It's 2340.
Are continuing to shift around a lot of their shopping behaviors in order to make those budgets work. So we know that spending is down overall, but as you've said, people still need to buy things, whether that is groceries.
See, I don't know if we're gonna get gap fill today.
Certainly an appetite to spend. What that does mean is that shoppers
Oh,
are
good. I mean, the volume today is solid.
the best bang for their buck, where they're getting the best
Check on E-Trade. I think it's
into that really effectively,
might be close to yesterday's.
to capture those sales while we're starting to see more slippage at
Yeah,
the top end of the market.
yeah, we just passed yesterday's volume already.
Shoppers are seeing
That's
more
very
of
good.
that
Still with an
spending
hour
decline,
left.
which is
I
finally
think Weeble's showing the same thing.
for the luxury sector.
Right.
Yeah, Weeble's showing the same thing, but it's not accurate.
You have a lot of names here that you cover, including Kohl's and Ralph Lauren, Dick's, which we talked about a little bit, Gap. Break it down. I mean, they're not
Yeah,
all
look at
the
that
same.
flag. That's BEA
No,
beautiful.
they're not. A lot of them came into the year in some difficult situations. The holiday season in 2022 was pretty much disappointing across the board, and there was a lot of inventory problems, especially in the second half of last year, when there were a lot of shipping problems and a lot of logistical issues. So a lot of retailers got caught with too much inventory going into 2023, and we've seen uneven sales. It's been up and down so far this year. And so the outlook is not particularly bright. I think most retailers have acknowledged that the first half of 2023 is going to be disappointing. But I think the second half of the year looks a lot more promising. The comparisons will be quite a bit easier because we did see a slowdown really starting in the summer of last year. So the comparisons for a lot of retailers will be easier in the second half of the year. And I think that they expect that consumer spending is going to come back.
Close
a
above
little bit,
23 would be good
and
for
the
sure.
inventories are going to be in better shape by the second half of the year.
Yeah, and just quickly, David, which few are buys? I know you said there's some concerns about the near term, but...
Yeah, you know, VF Corporation reports this afternoon. We'll see what happens. It's not going to be probably great. I think expectations are pretty low, but VF's valuation is extremely low. I think Kohl's is also extremely undervalued. Urban Outfitters also reporting. That stock is undervalued too. You know, I think we're seeing some value right now in a lot of these retailers, many of whom are trading at single-digit PEs.
Right, understood. And you know, as these are reporting, if you think the valuation's good, you theoretically could get in ahead of the reports. I mean, VF Corp has great names like North Face and Lacoste and all kinds of great names under the umbrella. Claire, what are you worried about as far as headwinds, and which names do you pick names? Which ones may be best bets?
In terms of headwinds, certainly more worried about discretionary categories. I've had my eye on apparel as well, so I'm also going to be reading a lot of those releases pretty closely. Overall, though, the retailers that seem to be in a stronger position are those that have a healthy assortment of grocery and essentials that are really helping to buoy sales throughout consumers, you know, time of shying away from more discretionary purchases.
Right, understood. Well, thank you both so very much. It's great to see you, and we'll continue to watch a lot of these retail earnings and how consumers' behavior may be changing. I mean, there's no doubt they're still out there and spending on trips, on driving and shopping too, but they're very selective. Thank you. Claire Tassin, Morning Consult, David Swartz of Morningstar, thank you both. Well, that's going to do it for us here on the Watch List. Thanks for being with me. I'm Nicole Petalides every single weekday at 11 a.m. and 2 p.m.
Yeah, I haven't. I guess Weeble's the only one that I can't buy it on.
Market on close.
E-Trade, Fidelity, GD, good on all those. I'll look up my statement to see if it shows on there. That was me, sorry. Barbecue just hanging out up here. Little red candle. See if it holds above this kind of breakout. 2340. Or even the high of these candles back here at 23. No barbecue for you. Yeah, I did sign a little agreement too on barbecue or on Weeble. That's true, they still don't let me trade it. Didn't think about that. But at least I'm getting like live data. I guess I don't have any statements from Windows Barbecue. If I can find it. Yeah, I get a fee. Maybe it's not a commission. Yeah, it's not showing me a commission. Huh. One of them showed me a fee, actually. Yep, still flagging up here. Nice, Robin Lee. I am the market maker. Gotta stay delta neutral on my likes. 3:01, it is our time. Maybe I don't think. That's crazy. It shows me a fee on one of the orders for some reason. Well, too bad I'm not trading on Fidelity. I did, but unlike the settle times of the IRA, that's too long.
Softening up a little bit. A few very interesting nuances that are not just unique to today, but actually build onto a few important themes that I've been tracking here for the better part of a couple weeks, both here at the top of the show and then in the back half when we cut the cord and look at the most important charts of the day. That is what's happening
probably
with regional banks and the market's expectation for interest rate cuts later
trying
this
to
year.
stay hedged.
I actually think that even with all the debt ceiling talk right now stealing the limelight, that probably is the most important story.
Getting a little hot on the RSI on the hourly.
Might sound a little boring, might sound like a throwback to last year.
But that gap is calling.
A few important signs that it is maybe becoming an issue again.
I want to see a nice high support held.
Not a giant move, but volatility starting to wake up a little bit. Being down there into the 16s, 17s certainly felt a little bit out of place by the standards
Nice little
of the
cup
last
here.
couple years. We're still holding sub 20 though. There's a possibility here that maybe it is.
Or actually, this could be the handle on this cup.
in
Handle and a
stocks,
breakout.
but
Or it's building another cup.
Really, it's a little bit hard to see it there. You've got high beta stocks that are down on the day. But what's interesting is you actually have quality stocks down even worse. I'll get to that in a sec. Let's look at the yield curve here.
Going to the
Notice
right.
that we are on the low end of this new
Going on a
regime for
journey.
yield curve.
I know it's
that
to the
was
right.
created after the regional bank collapse, starting with Silicon Valley Bank. So the big spike up in the yield curve, the steepening of that yield curve.
Who's that movie?
As an indicator
Going on a
of
journey.
economic strength or weakness.
Is that Inception?
Has been
Yeah, it's
elevated
Inception.
now,
Oh,
which
MNK woke
over
up.
the
Look at
last
this
couple
thing.
months indicates a potential strengthening of the economy. Yield curve widens out. That's supposed to generally indicate things are going to get better.
You got SPY
Of
puts
course,
right
in the
now?
last 2 years,
Wow.
the yield curve has been collapsing. Now,
Inverse
this
head and
brings up a
shoulders?
Very interesting point that I don't want to belabor here too
Yeah, I mean,
long.
we had an inverse head and shoulders.
Basically, is the notion that the fear that
It's,
regional banks would send us into an economic tailspin caused the market to reprice the economic.
Got one right here, little head, shoulder, shoulder. You're saying this one? Shoulder, shoulder, head? Bigger one?
To save the economy
Yeah.
from falling off this
Head and
cliff.
shoulders, cup and a handle, another cup forming.
We do have a dead ceiling here that we're
Um,
bumping our head against, but our feet are pretty well
Yeah,
connected to
this-
the ground right now.
This might be the breakout of this cup and handle, though.
At a pretty steady pace.
If this is another cup, then
Consumers are losing
probably
some of
retrace
their
back to
buying
20
conviction,
cents.
for sure. We see that in the
Maybe
retail
21.
numbers. However,
46, 2150 area.
economic downturn like many expected in the months after the regional banks. So as regional banks firm up here, that becomes a very interesting story. Because if regional
That was
banks
smart
start to
passing cloud.
strengthen, while the quality tech stocks,
I don't know if I
some of the
would or
high-base
not if I
stuff that's
could.
also been doing
I probably
very well
wouldn't.
recently fades.
I
And
probably
we have
wouldn't
that
either
type of
way.
rotation in the market like we're seeing not just today, but in the last couple days too.
Not on a bull flag with a
It's very
breakout like
interesting
that.
story that potentially turns basically the entire last quarter's economic narrative on its head. The last quarter has
Down
been
4.5.
about regional banks spurring an economic
Nested
downdraft
PA.
strong enough to cause the Fed to cut rates later this year instead of hiking them to fight inflation.
I gotta wait till the last minute to
As a
bump back to
result,
VWAP.
we've seen yields start to creep up in bonds, and we've seen the
See if
dollar
barbecue holds its support. It's come down a little bit. It's 2356, up 13 and a quarter.
debt ceiling thing lingering in the background, it might be hard to get a clear read on the bond market.
Reduce your delta by
Because what we
10%.
saw in
All right.
2011's debt ceiling crisis was investors actually piled
Just a
into
wee little
treasuries,
bit of profit
pushing
taking.
yields
What's
lower.
kind of lame about the
Seeing a little
day
bit of
trading is I
that here
can't
today. We're
sell
getting
shares I bought yesterday.
and some of the very short-term stuff.
If it's the same security, it doesn't matter when I bought the shares.
A debt ceiling impasse.
I bought
have
20,000
been a
yesterday,
little bit wonky.
and then bought one today. I can't sell
focused on
any
the
today.
dollar because I'm gonna assume right now
I mean,
that we actually have the capacity politically
Really?
to move past the debt ceiling and avert a crisis. And if that happens, then it looks like the market's telling us the focus will shift back onto the surprising strength of the economy.
Ubo
like we
actually
saw again
down
today.
4.5 now.
PMI flash numbers very good on the services side. We know manufacturing has been weak, but the big concern is that the consumer and the services side and the reopened trade was really going to fall apart, but it just hasn't. We got another reminder of that today in the data. Housing also still solid, new home sales good. The dollar continues to rise, and the market now shifting a little bit.
Never seen what.
Looks like a message of economic surprise to the upside, which would probably mean we need to start thinking about fighting inflation again instead of cutting interest rates. I think that's the story brewing underneath the surface here, so don't get too distracted by the debt ceiling stuff. That being said, let's talk about the debt ceiling real quick. I got Renee Young with me in studio and Kevin
Dude,
Hanks.
the more I need
We got
to
Caroline
email these
joining us
guys,
from the New York Stock
email the
Exchange.
producer,
Okay, so
give him some
I saw
tips.
a story that Jerome Powell showed up at a meeting in Washington, Caroline, and I know that there's going to be a lot of interpretation of what that means with the debt ceiling going on, but I feel like
Day olds counting towards PDT. Yeah, I chatted with E-Trade or TD, and they said, yeah, it doesn't matter if you bought that security today, you can't sell it. It counts. No matter if you're the tax loss are from a year ago.
So met with House Democrats, but obviously came amidst this debt ceiling, these negotiations.
But maybe they didn't understand my question. I don't know.
Not because of it. So I was just chatting with a trader here today, and he's far less worried about a default, but he says he's much more worried about
going for that gap
Powell
bill
in
still.
general, saying if he signals any sort of pivot in the June meeting, he said it's setting up for a bull trap, and he says that the market will move higher, but ultimately it will be a trap because the Fed isn't done. And of course we had Jamie Dimon at the JP Morgan Investor Day saying prepare for 6 or 7% interest rates. So he's sort of warning something similar, but all in all, I think, the traders here, despite the fact that we are seeing some pretty steep red arrows today, it's not a sluggish moving market today. They're pretty bored. They say with the VIX as low as it is, not a whole lot of action today, especially compared to March when the banks were failing and they were getting all sorts of action. But I think all in all, a lot of the conversations I'm having here on the floor is just the fact that despite the red arrows today, this is a market that's actually holding up pretty well, pretty stable, despite so many headwinds that could be working against it. Obviously, you mentioned the debt ceiling. There's obviously the Fed and uncertainty about what the Fed's next move is, but also recession risk and, obviously a shaky banking sector. We don't necessarily know if the failures or just the turmoil there is done, especially with the Fed poised to potentially raise yet again, which could continue to put pressure on them. So, a lot of headwinds, and all in all, a pretty stable market at this point, despite some of these red arrows that we're seeing today.
Yeah, cross currents that are showing up in different ways in the market. but I think the one that stands out the most to me with all the options is the fact that regional banks are up on a down day for the market when for so long the last couple months we got used to seeing this group lead us on the downside, and generally they were the weaker names.
Barbecue wanting some more ups.
Shift here, and it seems like some of it is stemming from a PAC
24, 25.
over the last 48 hours. Tell us about that, Renita.
Well, it's definitely a lot more action happening in regional banks today. PacWest is up more than 50% or around 50% over the past four sessions. Today
Talk
it's
about
up
that
around
PacWest.
8%, and it's
Give
got
it
a
a
lot
nice
of
pump.
positive sentiment around its announcement that it sold off some of its real estate construction loans. It was about 74 or so in that group or in that portfolio. And this came after, or this is coming, after this is coming a D.A. Davidson price target increase, almost tripling the price target to $8 from $3 a share, saying that, hey, this loan sale looks pretty good because it's part of PacWest's strategy to divest of its non-core, non-relationship assets and focus in on its core relationship assets, which deal more with community banking. And so therefore, they say that these are a really good, these sales, I should say, are really good ways to focus in on PacWest's core relationships.
Barbecue,
and
2440.
other banks are rising in sympathy today. The SPDR S&P Regional Banking ETF
Isn't up 17.
is up today marginally. KRE, ticker KRE. First Republic, First Foundation, MVP Financial, Horizon Bank Corp. Those are all up today, along with Valley National. So that's really the main thing that we see impacting regional bank shares today.
The PacWest selling off some of the real estate focused loans to me also kind of gives a nod to one of the market's big concerns, which was that real estate was going to be kind of the next shoe to drop here.
Barbecue
Might be a major
might make a new high here. 2460 was the
maybe
top.
somewhat to the market's concerns about this. Is there a notion that maybe the worst is past here as some of these companies make some tough decisions, but ones that maybe can allow them to refocus on their core business? Caroline, do you think that can spur a little positive sentiment for this group?
I think it really depends on who you talk to. I had a guest on the watch list yesterday saying, no, there are going to be more bank failures. And I would mention Jamie Dimon over at that JP Morgan Investor Day. He says banks are already starting to tighten credit. The easiest way for banks to retain capital is just to not to loan. So I think that, there's definitely still uncertainty in that space. I also think that these for example, that D.A. Davidson price target hike, which Renita said tripled the price target, needs to be put into perspective too, in the sense that $8 a share is just basically barely above where it's currently trading. And back in March, PacWest was trading at triple that. It was trading at $25 a share. So this is a stock that's still down 30% this month. It's 77% off its 52-week highs, down about 70% year to date. So, they've been beaten down so much. But, I have plenty of people say, don't think that we're out of the woods yet, especially if the Fed hikes again in June and potentially could hike even further as the year progresses, and depending on what
2463, new high of the day on barbecue. Up 18.4.
So those runs on the banks, they're so
About
much
the same percent gain we had yesterday.
used to be, back in the It's a Wonderful
2480, 1923.
Go to the bank to get your money. I mean, I could transfer all of my money out of an account at the click of a button.
Right. And then we get all the Twitterati going nuts. But, the fact that this never spilled over, into a major credit tightening just yet, and then you see these moves made by these companies to kind of shore up the balance sheets and start to maybe see a light at the end of the tunnel continue to get brighter. And I think that plays an important part of this market today. Thanks for taking us through it, Renita Young. And
volume on these candles up here.
Stock Exchange. We got Russell Rhodes to begin our macro conversation today. He's a volatility guy, an options pro, and an academic at heart, PhD, and associate clinical professor at Kelley School of Business at IU. Welcome back to the show, Russell.
I'm very happy to be here. It's been a while.
A good time.
Been a long while.
Vic's up a little bit here.
Yeah. So, no, anytime you want to have me, I'm happy to be here. But it's been a while. So, hey, before we, I know we can we break the script for 1 sec?
Please do, Russell. I count on
you
you
were
for
talking about VIX, and I started doing work when I was supposed to be standing by, and something that's kind of interesting in the VIX market right now is, VIX is higher on the week, but the spread between the June future and spot VIX has gone from $3 as of the close on Friday to $1.45 today. So, implied volatility is going up as the market's S&P 500 implied volatility is going up as the market braces a little bit, prepares a little bit for maybe this debt ceiling thing not ending well. But it looks like the VIX futures market is not buying into it yet. So you're seeing kind of and it just flows right along.
Oh,
with what
sorry, I
you
missed
guys were just
it. Yields
talking
counting
about.
towards PDT.
I always think the volatility traders are smarter than the option traders. So I think they get this deal done just based on what the VIX guys think.
Interesting. And
I've not checked with TD. It was with Fidelity. It was with TD or E-Trade, but I thought it was across the board. I didn't think it was brokerage dependent. If you could day trade
how are you thinking about the
same security without it, if it was shares from prior to that day.
Maybe not dealing with inflation.
A little RSI divergence, maybe we'll see though. Just wiki. Wiki.
Maybe not great growth like pre-COVID, but perhaps not the big collapse people were looking for. What kind of VIX range do you think makes sense in an environment like that?
We've typically been thinking of the upper 30s or around 40 as being a price that indicates there's an awful lot of fear in the markets. And what you need to get up to that level is you need a combination of some sort of volatility event, as we refer to it, but also a surprise around that. And
he's coming, you can feel it.
All kinds of things. You've been on for what? 15 minutes, and you've talked about 3 kind of major things that could take the markets down. Inflation, what's going on with interest rates, and the debt ceiling. And you can see as VIX continues to creep up over the course of this week, and probably will if they don't get a deal done through the end of the month, that's just an indication of people being prepared for some sort of volatility event, or at least being in a place where if there is a volatility event, which pushes stocks down very quickly, it's not going to hurt investors that are overall prepared for it. So with all of that, your question was, what would I consider a good high to low range for where the high end is where people are worried about the markets? Maybe 30 or 31, just because of, and recall, this is the first bear market where we didn't get VIX above 40 on record. And a lot of people were attributing that to the 0-day to expiration options and a few other factors. Personally, I just think it's everybody came into 2022 and remains kind of braced in 2023 for some other shoe to drop. And when that happens and people are prepared for it, you don't see a rush to buy SPX options or to insure a portfolio when things look like they're cracking. And that's really what you need to push VIX up to the high 30s or low 40s. So if I were playing a long VIX position for a worst case scenario over the course of the summer, I'd be looking at getting out when VIX hits 30 as opposed to maybe 40 in the past.
I like that. And the reminder here that last year's steady decline in stocks never really led to that massive VIX pop. I think that is pretty interesting. So then if we do get, refreshing of that bear market, wouldn't maybe make sense to kind of think about the same, regime that doesn't require a black swan style
Happy with the barbecue winning by this morning.
Another thing I wanted to make sure to get your thoughts on, which is the
Did I win? Did I win the mini?
The options.
I win the mini.
Bonanza, little mini bonanza that kind of happened again here in this rally the last 6 months. What are you seeing in terms of how to measure the speculative fervor, or what's been driving this latest rally from a derivatives perspective?
Well, the short-dated options, I've been pricing out
barbecue at the high.
For
high coming back down, maybe.
PM settlement the next day for both the SPX and the NASDAQ. And when retail really started trading these things, and there was a whole ton of volume, it looked like market makers were having a very difficult time pricing them. So typically we think of option sellers as being the ones that make money over the long term in the option market. Well, the first 3 quarters
coming down, barbecue new high of the day, 25 cents it hit.
Straddles, or just bought NDX one-day straddles, you'd have made a mint. But sometime in the third quarter,
No,
maybe
I'm
early
holding.
fourth quarter last year,
I'm
it looks
holding.
like the market maker started to get a better
I actually can't sell it.
their short-term option
I'm not at
risk
day
and how to
trades
price
on that
these
account.
things. And basically,
But I'm fine with
or
that.
selling straddles
I don't know if me flipping in and out a lot is
or just losing
really
commissions
benefited me a whole lot.
the
It's
efficiency
been
behind the
pretty
pricing
minor.
these options has definitely
That said,
much
at a resistance, I
as a
probably will
predictor
trade
as
it
to
out.
the
I
subsequent
think 30
move
cents.
the following
You
day.
can wait till tomorrow.
So I think maybe the
we start to reject. I'll be
money when
closing out for the end of the week drop if it happens.
the Wild West in the short-term
Pick up
options,
more at
those types of trades may have gone away, but
25.90.
seeing that one-day straddle
24.5% on barbecue. 5 retesting the lows of the day.
to up to 2.5% on days where everybody's really concerned about
Yeah,
a known
I get
unknown,
that gap
such
fill.
as I think
40
this
minutes
week,
left.
Known unknown is PCE, which we get on Friday. Typically, the average pricing of a one-day straddle is around 1%.
Just happy I moved my arrival gains into barbecue and those the GME calls that I took a loss on into it also this morning.
I wonder if some of the volume is going to fall options as they become more efficiently priced.
I like that point.
Actually, no, I didn't put it all in here.
The idea that
I
maybe
put some in here, and I put some in here at the break.
Awaited inflation print is a good thought.
Break, I put in more. I added. Was it this break?
The kind of
Maybe it was this break I added. Yeah, it was this break I added.
From the low vol
26.19, it's up 25%.
To something like we get today, where there's strength in cyclicals, regional bank type stuff. Does that present opportunity for options traders looking at, say, like Russell versus
Gaps
the
at 30
NASDAQ?
cents.
Russell, the index, not the roads in that case?
29, somewhere around there.
Absolutely. One of the things that I've been looking at over the past couple of weeks,
29 cents.
When we were
not 30, I guess, 29
trading days into the year, looked at the Russell 2000 actually versus the S&P 500, and the S&P 500 had outperformed.
But I think we're on a march up anyway, so it doesn't have to fill it like it's trying to fill it and then come back down. Might find resistance before there. You know, prior supports, and fill it later, or tomorrow or next week or later this week.
Russell and short the S&P for the balance of the year. You made money.
It doesn't have to be in a race to fill it, if you know what I mean.
The worst outcome
Unlike the gaps to the downside.
So it wasn't too much.
It was like
on that.
we're in an uptrend now, so we're trying to fill the gaps to the downside. That's what this dip was before we continued. Now that we're in an uptrend, the gaps to the upside, it's not like they're going to be raced to filled. We're in the uptrend, so I don't know. That's kind of my thought, but we'll see what happens. 26.45. It's getting kind of. I mean, OTC squeeze. I don't know. Volume's picking up a little bit. 27%.
Since the beginning of not 2023, 2022.
Wow.
So
Mic's off?
day in about
Oh.
400 trading days.
Your earbuds are off.
That, VolQ has finally fallen at a discount to VIX. I think
26.49.
that is associated once again with the debt ceiling. If you're worried about a big
no
macro
news.
event, probably the most efficient way to go about hedging that is out of the money SPX.
Just leave a thumbs up. Make sure you're subscribed.
Pushing, the
Back, enjoy.
volatility of as measured by VIX higher than VolQ for a short period of time. If they resolve the debt ceiling, it'll be interesting to see if they flip places or not going into the summer.
Love that. Looking at the VolQ index there, VOLQ, which has been pretty steadily declining.
I don't think shorts are shaking their boots.
The VIX, but now a little bit
Most
of,
didn't
shift
open
in
below
that,
25 cents.
Pop today. Thanks, Russell. Always great to catch up. Looking forward to next time. Great chat here on volatility. When we come back, let's get to the regional bank story and continue talking options. Tony's
Starting to get a little hot on that hour, the RSI. 5 minute also.
Watching very closely here today. Up as much else is down.
Here we close out. We might get a pretty lofty close. I don't know. Close above the breakout would be nice. All I'm looking for is what our close is. Intraday is not as important. Netflix to charge $8 per shared account in the US. How do they know if it's shared? There's some Profit taken on it. Red candle on barbecue. 24, 25 cents. Nice to see some volatility on this OTC. Oh, it's both ways. Is it ready to make its move up? Or is it one of those last 10-minute moves? Made a nice double bottom here. I think so. I think it's ready. I'm pretty bottom 5 cents taking profits. SMX held up really well above VWAP today. Nice flag. GME might I don't know. I wonder if it continues its run this week. It's so reliant on the SPY. We knew this. Barbecue 24.41, settling down a bit. Yeah, good volume. I know today was at like 20 million an hour before close. Saying 30 now. Yeah, 30 million. Yesterday was 24.
The spread between the 10 and the 2-year, you know, that recently widened out to over
WG was
$100
a month ago.
last month.
Biggest drop in IPO history. From $16 to 70 cents. Only a 7.2 million float. Rumors of a very large negative short position, larger than GameStop. Could be GameStop 2.0. Rockets and monkeys.
You know, giving me a little bit more confidence in taking a bullish position here in regional banks.
Love that, fitting right into our main
barbecue coming down. See where it settles. 24.20, still up 16%.
The response and these regionals. What do we view?
Was that at kind of a resistance at 26.50?
For the ETF at this point, though, everything happens so
really?
fast.
Might
we
make
were
it
at $70 6 months ago.
Too close to end today. People are trying to take profits.
Stocks like
Have to continue this party tomorrow.
From 3 to 8, you know, and it's almost already there. It's just everything's
RSI was hot too.
So how does that factor in when you're trying to think about strikes and trading the actual vehicle?
Yeah, so short term, and I'm right now just playing for a quick bounce. I think your upside is somewhere in the 46 to 48 range. Again, that's just the start of what could be a much bigger
barbecue coming back down.
The bottom of the previous range, which is
exciting though.
Up into this $58, $60 range. So from my perspective, right now, you know, we've got the first move.
Yep, so excited is a good sell. Sell when it's exciting, buy when it's boring.
This is potentially a confirmation this move has legs, and if it either fails here and continues to move lower, or I think you get that move up to that 46, 48, and then have a little bit more confidence to add on to the position and potentially shoot all the way up to that $58, $60 level here to the upside. So, you know, those are the certain levels.
Double bottom on SPY still holding.
Position on, I'm now adding to it, and I think that this could potentially be
Here's our inverse cup.
move here.
Look for a candle today and maybe tomorrow. Maybe back up to the VWAP of today, 416 or so.
Being resolved here.
Might not play out till tomorrow though.
You know, potentially a soft landing in terms of with regards to inflation and employment remaining fairly strong here. We've had a strong corporate earnings quarter, so everything is sort of
nice bounce there.
Be a favorable
good support
here for regional banks.
All right, like the trade. So the 42.46 call spread for the end of next month, right?
That's exactly right. I'm looking at the June 30 weekly options, going out to buying a 42.46 call spread. Earlier today is trading about $1. Right now it's trading about $1.25. So you're still paying just a little over 25%. In this particular case, closer to about 30% of the vertical spreads width. So you still can potentially make, in this particular case, a little bit more than a 2-to-1 risk to reward ratio if the ETF is above that $46 level by that June 30th date. And if we do, I would be looking to roll this up into a further out of the money call spread to play for further upside.
All right. Like it, Tony Zhang, thanks for the trade. Perfectly timed for our discussion today. The call vertical, bullish on the regional banks, balancing out some other bearish positions that we've been tracking along with you. But some of them still alive. I think that Apple trade's still alive here. If, you know, thing keeps slipping. Tony, thanks for the check-in. Appreciate it. Tony Zhang, Chief Strategist at Options Play. Tom's got some options trades for us when we come back, looking at chip makers, Intel and NVIDIA, taking a little bit of a breather here ahead of NVIDIA earnings, and Pfizer continuing to see its pop after the company showed some impressive trial results for its weight loss Ozempic competitor.
Think you keep buying MGRM, huh? I guess you like their drug trial or whatever? Percent on MMK. Looking flag there too. On the daily, 5 minute. Ah. And one of those like eyedropper things. And just had the rubber top like shoot off. It's so weird. I've never had that happen before. Like it's in a little glass jar and just the top like rubber thing just shot off. Like it's weird rubber thing, wet rubber just landed next to me. It scared me. Barbecue is holding up above this level. It's awesome. I should have buying power tomorrow on my trade account. So, yikes. Failed assassination attempt on number one barbecue shell. Speaking of Jenny, is Jenna back? Is there?
Where now you got people reaching for calls, so they're paying higher instead
support.
of that natural
Nice support hold there.
vol
Nice
curve
bounce
that we
off of
see
that.
tails off a little bit.
Don't see a divergence or anything. Might be setting up a little head and shoulders, but again, being OTC and wasting
On
trades.
unusual option activity like this, it might be somebody that
See if it actually sets up.
Yeah, that maybe that he sold something else against it, or maybe he's using
So far,
near-term
it's
options to help finance
been less
the purchase
patterns,
of these
more
far out of the money calls.
more
But this
supports
trader,
and resistances. It seems
expecting
like.
Nvidia to go to 400 by the end of January.
I guess bull flags have
next
kind
year.
of played out.
Not too far fetched after the moves we've seen.
Well, I mean, yeah, look, anything's possible when it's making moves back up to its all-time high. We're not too far away from it, about $40 as of right now.
Still not want to climb up.
Intel
About 20 minutes to
with,
close.
The big,
Gonna
tech
go.
rebound. Intel hasn't really taken part. It's okay. No new
goes
lows since
the day.
earlier this year when we tested $25. We're just kind of sitting around 30.
Yeah, the other end of the spectrum in the chip space, as they continue to lag. Not only AMD's up over 65% so far this year, as I mentioned, Nvidia up over 110% so far this year. But this stock's still up about, 12% on the year. But that being said, it seems like they keep it and run over. Just signed partnership deals with Japan. That was announced over the weekend. 2 kitchen sink quarters, I think you could say, that Intel's had, cutting the dividend, basically, kind of throwing everything out over the last 2 quarters. So maybe there's some green shoots coming down the road as AI picks up, and maybe that bottoming cycle in chip sales. I think that's the hope of this trader.
Barbecue, edging back up.
Out in the June 9th weekly cycle, I saw some unusual option activity on the 31 strike call. They bought over 15,000 of those, average debit of about 55 cents. That break even of 31.55 over the next 17 days, about 6.5% above the current share price there in Intel. So some more optimism in this name. Typically we see that on a daily or at least a weekly basis, a lot of call volume in there because option premium is relatively cheap. The stock's cheap, below $30 a share. But yeah, somebody taking a shot here over the next 2.5 weeks that's going to go higher.
Okay. Bullish and bullish, even with Intel slipping more than 2% today and the chart looking pretty measly compared to
What's going on, CDB?
One of your other trades today is in Pfizer, and so far we haven't
Welcome.
talked about this.
Better see a new thumbs up.
Maybe
populate my
another
screen.
Factor. I don't think it's a huge story just yet, but again, you got to be careful with
Thanks,
these
guys,
things
for
when it
your
comes to COVID.
thumbs ups, by the way. 52 of them on the day. Well done. Barbecue did break that 23.40 level we're looking at.
And
52 likes.
Now they were up
Those
yesterday
are champs.
because they've got
Now
this
we're
new drug.
potentially consolidating
It's a
above
weight
it.
loss drug that
Definitely
showed
looks like that.
results that are competitive
So
with Ozempic.
30 cent
Faster than
gap fill is
from Novo Nordisk.
All right, so
this week.
potentially a competitive drug to it. But
Today, tomorrow.
Moderna's up too, and that's where
We were getting
maybe
close
this
earlier
COVID
today.
thing's coming into play because we got a
Maybe
bunch
tomorrow.
Of the
Maybe the
Macau
next day.
stocks down. Some of your typical reopened China trades are down. So it may be part of this weight loss drug. it may be a COVID thing going on.
Yeah, I mean, I think you look at the gains, 8% so far this week, and it initially started yesterday when it was announced that they are doing trials on their diabetes weight loss drug. I mean, it's supposed to be for diabetes, but it's weight loss. I think that's
well, all kinds of people are taking Ozempic.
But now you start thinking of COVID outbreak in China. You saw what they did for a year, where they basically shut down their economy. Does that happen again if this continues to spread? That's the concern. That's why you're seeing Win down, MGM, LVS down 5 to 6, 7% today, based on those reports right out of China.
461 up 18.3%.
BBBYQ this week has been on the potential for this.
Daily, it's a nice looking breakout.
And you're starting to see a lot of call activity in there in Pfizer, not only today but yesterday
left to
also.
go.
One that stuck out to me after the 5% rise that we saw yesterday.
Looking good, sir.
Was out in the June monthly cycle. So 24 days till expiration. They bought over 35,000. I think the volume's up to about 45,000 now on these June 40 strike calls, just out of the money to the upside. Paid an average debit of 90 cents for over 35,000 of those. That break even of just under 41 bucks. That's about 2.5% above the current share price there in Pfizer. Call volume about 4 times normal daily average volume that we've seen over the last week of trading. So a lot of call buyers, a lot of optimism for this stock going into the next 3.5 months.
Okay. So bad news as far as the COVID thing goes in China. Maybe it's showing up in Pfizer, Moderna here. I mean, it's definitely showing up. Wynn Resorts down 6%. Las Vegas Sands down 7%.
A lot of put buyers, a lot of put volume in all of those casino stocks.
Okay. Anything COVID related? I think people are pretty quick on the sell button when it comes to those stocks.
In China, hold on heavy.
Because this is going to be their big travel season, right? This is where Macau gets a lot of their business through the summer months. So, yeah, this might have a detrimental effect if the government does what they did before.
All right. Thank you, Tom. Interesting trades today. Still bullish across the board. Pfizer, Intel, and NVIDIA. Let's keep talking some tech when we return, taking a look at
15 minutes to go here.
Come back. Not anywhere near.
Santana. Ron, are you okay? The man put it back, sir.
The man put it back, sir.
The man, that's from the motorcycle.
And motorcycle. Motorcycle on the bridge. On it, Baxter. Sure is having a breakdown in a glass box of emotion. Got it, Ace. Oh, was that from the sell-off? Just on general, your glass box of emotion. You didn't like that. Try somebody long, so pause or grind long, allow them in for 3 weeks. This one looks so good. Yeah, this one did look good. I like it. The divvy stock, yeah, it's gonna be slow. Kind of interesting. They only sold off a day or two after their dividend. But yeah, it's pretty good looking. What is this? Titanium products? Yeah, solid volume today. Over 30 million. Yesterday was like 27. So looking good. I mean, you can see it on the price. Just the price action's way smoother. A lot more nice to trade and look at. Yeah, we're at 24 million yesterday. Today's 32.5 so far. So we might have 100 million day this week. $100 million on OTC. What would that look like?
has bought up tons of shares of Palantir. One estimate says around 6 million since she started buying up after the company had better than expected earnings on May 10th. And a lot of this excitement into the future has a lot to do with the company's AI exposure, of course.
There you go now.
There goes that magic phrase. Surprised to hear it, are you?
Idiot.
But Palantir also guided for continued profitability in each quarter of this year. And they noted that they've seen strong demand, of course, for AI. And that's why it's driven shares up more than 98% year to date. And just today, more AI news from Palantir. It said a Brazilian fashion retail house is developing an integrated movement flow system using Palantir's Foundry platform, and that the flow is the first of its kind, and the company itself is the first of its kind to use this type of AI tech. But the flow helped them develop, optimize, and speed up the entire purchasing and inventory restocking process. I think the most interesting thing about this AI revolution, Oliver, is that we're seeing how it's impacting different industries. Who thought about this impacting retail in this way?
Right. Yeah, very interesting. I would have definitely expected Palantir itself to have a lot of AI going on in-house, but to see kind of where they project it out, the way the street wants to see it, how they capitalize on this theme right now. Post-earnings, too, they got a bid there, so it seems like, the most impressive thing that's happened to the stock really since the COVID run-up.
Yeah.
All right. Kathy Wood buying into it as well. Thanks, Renita, for the update. All right, let's do some trading with Scott Bauer, CEO of Prosper Trading Academy. Even though there are some winners like Palantir mixed into the market today, Scott, we're softening up a little bit. But, of course, how far we've come, it's nothing alarming just yet, right?
Definitely nothing alarming, but this is so long overdue, Oliver.
Yeah, I hear you.
Volatility just depressed for, not even weeks, but months, leading up into, we know it's the summer, but leading up into the debt negotiations here. And we're finally starting to see the market react a little bit. And I think what you're seeing is maybe some of the big retail and some institutional, players in the market are saying, you know what, we are getting to that final week or so. Maybe we ought to buy a little protection. So that's what you're seeing in the marketplace here. But, VIX of 18 is still nothing to write home about. VOLQ, which is the vol on the NASDAQ that they track over at CME, that's right around 18 also. Still nothing much to
Maybe a little
write
head
home
and
about,
shoulders here on barbecue.
You are starting to see people notice about it, and not just
Could still hold this breakout level.
What may happen, not just with the debt ceiling negotiations, but with
3 cents or so.
Okay. That latter part there, to me, seems like it's
12 minutes to
kind of
close.
a sleeper story that is awakening here a bit, particularly when I look at the dollar, because it doesn't seem like there's a lot of other reasons for that dollar to be going higher, especially if you believe the consensus view about what the Fed's going to do later this year. There's no reason the dollar should be going higher if that's the case.
Exactly, no doubt about it. You've got the dollar going higher. You've got the Fed as hawkish probably as they have been in a very long time, over the last week or so. And, the expectations that they're saying, I mean, you listen to every single one of them, and they're pretty much laying out the course for a 25 bip hike. Yet, the market, the CME FedWatch tool, is pricing in literally just a 27% probability of that happening. So we've seen this divergence between what the Fed is saying and what the market is saying. Something's going to give. Something's going to give pretty soon here.
Where do you want to be when something does? Do you think it's worth trying to position ahead of such an event? Maybe put on some kind of a trade that benefits in both directions? What asset class? I mean, what looks juicy to you? There's got to be something here. If, something is going to break, there's got to be some kind of trade. I mean, even if you go out to like a gold, right? There's stuff that's elevated or depressed. And then there's another category of stuff that's like stuck in the same range. If we think about the stock market, what's appealing to you?
Honestly, to me, the easiest way to play something like this is to pick one of the big ETFs, pick SPY, pick triple Qs, pick even the IWM, whatever you want to do. And what I have been doing is I've been buying time spreads, Oliver. I've been selling kind of weeklies maybe go out a couple weeks, just selling that premium, but buying some stuff going out a month, 2 months, 3 months out because volatility was so cheap. Now that we're starting to see vol pick up a little bit, those later expirations are starting to get a little bit juicier. They're not.
Yeah, BJDX looks nice. Tree.
They're starting to get a
Dolphin
little bit
candle on the
juicier.
daily.
But to me, with the way that the
all you got
VIX
there though.
futures curve is set up and the way that vol has been trading, to me,
X
it
making
makes
its
the
move.
most sense to buy these time spreads again. And
We'll
playing
break out there on
both sides. I'm
SMX,
not talking about
22%.
just, let's say an SPY buying, the 4250s
Volume
if we
in it.
finally break out. I'm saying both sides here because vol is cheap enough.
Okay, there it is. So always appreciate a little insight into the strategy. Thank you, Scott.
Thank you, Oliver.
All right, when we come back, we got Kathy Jones and Randy Frederick to join us.
Neck was looking good the other day.
Into the bell.
Looking at it.
That, of course, includes a
One
little
and a
bit more of
quarter.
that discussion we just had there with regards to dollar
Yeah, it
strength.
still looks like it's in a nice uptrend.
A Fed having to respond once again to inflation. We got that print
Good.
on Friday.
Yeah, we've got this RSI divergence I drew on here.
The team's thoughts when we come back.
See where see how high this thing can go. Kind of breaking that 50 moving average on the daily. 28. Got some resistance there. Could be no longer uptrend though. NEG has sometimes been a front runner to GME, or so it's speculated on. Eight minutes to close. SPY still not getting its bounce. Double bottom. The support. Very weak close if we don't get a bounce. Or a gap down tomorrow. But maybe a rip back up before close or before open. I think we'll probably need to get a handle on this cup. Barbecue holding up good. But we're moving up 14%. MWG was $16 a month ago. Biggest drop in IPO history from $16 to 70 cents. Only a 7.2 million float. Rumors of a very large negative short position larger than GameStop. Could be GameStop 2.0. Rocket. Thanks for that, mysterious market maker. Update. Barbecue. Up. SPY coming down. A little bit. 414 puts. Yeah, I mean, down 1%. RSI is low. I could be wrong on that. It might do all of it in pre-market, you know what I mean? Might get like a down, gap down, but then it rallying before market opens. Or it could be the way around. It could be a gap up before market opens and then sells off in market open. We kind of build our handle in the pre-market. Oh, sorry. Down a little bit. Very interesting. Very weak day, really. No relief rallies. I mean, we open and just consolidate, and then like I was saying back here, whichever way we break, play it that direction. We broke here, so I'd have been the short right here on that break. Selling pattern.
The short end, you're going to have to push those yields higher, and that's exactly what's happening.
How did that section of the bond market respond to regional banks? Could you provide us a little context there, Kathy? Because I know as some deposits left banks, people moved money into money market funds, and I would imagine there's some overlap there. How did that play out a couple months ago?
Kind of a double top there the other day, huh?
With this auction and the spike in the yields.
Yeah, I think it's two different sets of reactions. Now, we've seen for quite a while now as T-bill yields have moved up and money market fund yields have moved up, deposits have come out of banks, and that was one of the things that helped trigger the problems in the banking system with Silicon Valley Bank, et cetera. This time around, I don't think that that's the driving force, although we continue to see a rundown in deposits, although not nearly at the rate that we saw back during that banking problem. But the same dynamic is there. It's just that this one is accelerated by the debt ceiling issues. So assuming we get some sort of a deal, avoid default, those yields will probably come back down. For right now, they're staying up there until, we see what happens.
Coming down more.
Now, as you mentioned,
BBBYQ, red candle there.
That kind of real acute debt
holding up above that support though, that's good.
Some other concerns, but there was still a pretty clear bid into long-term treasuries too, even running up right against that debt ceiling. And thinking about the way the stock market reacts with bonds, I feel like that's some interesting context because we just haven't had the long bond rally, like that kind of safety bid. And then today, you've got regional banks actually doing all right. You've got some of the more cyclical stuff looking decent. Why do you think that is?
Well, it's kind of a strange situation. I mean, this time we've got some concerns, I think, about banks in general still. I mean, certainly not as much concern as there was a couple of months ago, but you have a lot of big asset management firms out there telling people to put their money into cash. Where we find their
it's not going to get its bounce.
Corporate bonds of all places.
Wait till after hours, maybe.
The safe haven, and there's concerns about cash being held in banks. You've actually got a lot of interest in corporate bonds of mega cap stocks. Who would have expected that to be sort of the safe haven play? But that's kind of seems to be.
What, I keep talking about regional banks? Because they're rallying.
Sector is higher too today.
They were.
Some of this stuff is kind of interesting because we got that PMI print this morning. It looked pretty good.
2 minutes.
What are your thoughts on how the market's going to respond if our data actually come in better than expected? Maybe we get through this debt ceiling. I mean, dare I say, do we go back to that situation where good outcomes are actually volatility inducing to some degree?
Well, certainly. I mean, if you're a volatility player, if you're a short-term trader, volatility can be beneficial. Again, it's kind of unusual to see volatility this low ahead of an event. We don't necessarily have an exact calendar.
I'm going to mute it so you don't get the bell.
I think now that time frame has really become which means we're probably not going to be able to hold off until June 15th when those tax receipts come in. So we kind of know the time frame. So this is kind of one of those known unknowns. We know when it's going to happen. We just don't know what the outcome is going to be. We can only speculate on the what's going to happen in the marketplace in the
day on the SPY,
or at least a postponement for even a couple of
our
days
side divergence is playing out.
We don't really know how that's going to happen. Again, I think we're going to see
BBBYQ 15.9% green on the day. 24 cents. Little head and shoulders here on the 5-minute. Maybe this will play out tomorrow. The bell that was loud, you're lucky.
Where the Congressional Budget Office was forecasting when we would really run out of money. But
Yeah, maybe this will play out tomorrow on barbecue. Ending the day with bearish MACD on the 5-minute, right under the 9, and a little head and shoulders. So,
again, no matter what
expected 2146 maybe support for tomorrow. Hopefully it holds that level or 22 range. Might be picking up more shares there because I think we'll probably keep rallying this week. Increasing volume every day is terrific.
For inflation to potentially surprise, or what's the framework right now for thinking about PCE?
Nice move today, not too crazy, just enough.
Yeah, I mean, 1 month PCE is pretty hard to predict.
Volume here.
We're expecting to be about unchanged from a month ago.
The RSI, we're not even at equilibrium yet. Still 47 on the daily. That's crazy.
And they'll continue to try to tighten in response to that until they see
it. Cup and handle breakout. Potentially another cup handle, but I think we're doing a cup handle. This is the breakout from it. So,
1 month is pretty hard to read.
Cap fill to 30 cents. Maybe tomorrow. Tomorrow's Wednesday. Maybe the next day.
Towards the end of the year, in the second half of the year, we'll start to see that drift down. But in the meantime,
still haven't seen a crazy day yet.
Do this balancing act between
kind of interesting.
All the financial instability that's resulting from
but this is good.
Debt ceiling debate.
15% days are amazing.
To date, and then fighting inflation on the other hand. So probably going to be a pretty
Irish rebound tomorrow.
For a while.
All right. Great call, guys. Good stuff.
We have FOMC tomorrow, so there's definitely going to be some big volatility, I would imagine. That's not till 2, though. Waller speaks at 12:40, and FOMC is at 2.
Palo Alto Networks.
So,
and then we got some
might be pretty mellow until then. Thanks, DIY. Thanks for your support. Great day. Thanks, Jay from the Bay. Thanks, Granite. Thanks, A Passing Cloud. I'm gonna thank you, you stupid mysterious market maker. I'm gonna thank you. Thanks, Ehob. Thanks, Tree. Thanks, Buzzin'. Your likes today, guys. Well done. Did it. 55 likes. Barbecue ended up the day 15%. 2410. Broke a pretty good resistance here. That was a pretty big level to me. So, not sure if we'll hold it tomorrow. Kind of thinking that end of day TA there, signifying a little move down first. However, move down if we just come back above it, then tomorrow, and then I think we'll probably hold it. But I could be wrong. We might just bounce off this tomorrow morning and keep going. But as one of you pointed out, my GME TA ended up playing out today. Yesterday we had that RSI divergence come into close. I was expecting to sell off into close, never did. Just kind of grinded, and then that actually played out today. So it played out right here. Anyways, thanks so much for watching, guys. Thank you for the support. See you on Discord and in the chat if you're not on there. Follow us on Twitter at HappyMoneyYT. Sub up, like up, comment down. Happy Money sticks around. Thanks, Maui Sam. Thanks, Buzzin'. Thanks, Christopher. Thanks, Bungie. Thanks, Molava. If you're even real, Molava. Thanks, guys. We'll see you on Discord.